I guess you guys didn't want to see the intro again. And what is this here? My God. Here we are. How's it going, man? LJ, good to see you.
Going well. Going well.
Still cannot get
How
over
you
the
doing yourself?
technical difficulties with this weird program here.
Yeah.
Not too bad. I'm very well. It's not like an option where we can just see ourselves. Like no screen here. Is it like this?
Yeah, hang on.
Which one to choose?
There we are.
And here we are. And yeah, very well. You seem a little bit depressed, probably because Oscar Pastry is underperforming so much.
I know, dude. But I'm happy with Max because I kind of low-key want Max to come
Guy
through.
is unbelievable. I don't know how he's doing that, really. It's like a machine, not one track limit. He just delivers.
Yeah.
I wouldn't be surprised if he wins the World Cup this year.
I hope so. I put money on it.
Nice. Put your money where your mouth is. Very nice.
Yeah.
But Oscar,
well, I thought it was underpriced. It's just like a trade, right?
Yeah, it is.
Absolutely. I was like, the implied probability of that is like 2.5%.
Yeah.
I was like, that seems way off. Like, it's at least 10. And then if he does win a couple races, you're getting up there. So, yeah.
And it's I don't know what is that with Oscar Piastri. Suddenly he seems like he has a severe case of fear. I don't know how to put it otherwise.
Yeah, I don't. Maybe he's just like trying too hard now, or he's being lax, and he's seen Lando, trying to push it, and so he's like, oh, okay, I got to push it. And I guess it didn't work out. I don't know. We'll see. But it makes it very interesting, I must say, for the rest of the season. So,
although I have to say again, I always Singapore was an extremely boring race. For example, this race, let's be honest, was also not that spectacular. The action was more going on like midfield or the lower field, and
the sprint race.
Somehow the qualifying at the moment is always more exciting than the race itself.
Yeah.
Anyway, guys, welcome. New week without US data once again Once again, we are somewhere in limbo. How's everybody doing today? I see we have a couple of people. Henry, as always, our nurse from Australia, is with us again. Welcome, Henry. Hope you're doing well. We have somebody saying the system is down. If you see that, please contact support if that is the case for me. I just logged in and it worked well for me. I don't know about the dashboard, but at least the connection from MetaTrader 5 to the trading server. Couple of the usual phases we are going to see here, and I think it's quite an interesting market at the moment. You're in a trade already somewhere?
I'm in a long Aussie dollar trade.
Interesting. I'm long euro dollar.
Yeah, definitely. I was just checking the hub. The hub does say it's down at the minute.
Oh, hub says it's down.
Before. Yeah, so it's gone down.
Good.
For some reason.
Do us a favor, write an email to the support. We're going to do that parallel to you. The more, the merrier, and then I'm sure it's going to be up very fast again. IT usually reacts very fast to stuff like this.
Yeah, it should be fixed pretty soon, I'm sure. They're onto it. So, but yeah, so long Aussie dollar at the minute. From this morning, just after I got up. Jumped into that. I originally had a TP at about 65.19, to which we peaked at about 15 here. And then since then we've pulled back a touch. Still, just basically back into where we were earlier today. So at this point, I might end up holding the trade to the higher levels at about 65.40. The other one I was looking at was potentially long euro this morning. Into 8 as well.
Yeah, that was the one I was taking then. No?
Yeah. Because I also noticed last Friday, the 25 delta risk reversals, so options and everything, have started pricing much higher towards 120 once again. They've come back a little bit coming into Monday after things have kind of settled from some of the nervous tone.
That's kind of the Trump effect by the end of the week always at the moment. No? Like, let's price in if an orange guy says something after the market close.
Yeah. So that FX volatility has come down a bit across the board. The yen pairs are still quite elevated, and the Aussie dollar is still quite elevated. But I don't think there's really. It was all primarily due to the whole banking fears and stuff that we're echoing about last week. I don't really see anything there right now. I think my opinion was it was a bit overdone, right? At this stage, unless further things pop up, but it seems idiosyncratic. So
it seems a bit. I mean, the one thing that's still moving is gold. Also here I mean, we have come down, to be fair, a little bit, but not much at the levels we are right now. It was our top almost 4,400 now trading at 4,263. Seems like we are a little bit now in the consolidation phase. So if we see a breakout there, maybe over 70 to 70, I would consider longing on a pullback there actually again in gold. But seems like this Monday morning is going to be a little bit more quiet than a lot of the Monday mornings we've seen in the past weeks, in my opinion. So I also took the opportunity now on the weekend that I caught up with some reading, look at the scarce economic data there is really from the USA at the moment, trying to compare that with what is in the past to kind of, because I have difficulties, like I think I mentioned that last Monday already at the moment, to kind of create a forward-going picture for myself. Because on the one hand, we have a horrible job market at the moment. We have a very low consumer confidence, record lows actually. But on the other hand, we had, like, for example, very strong earnings now, which is probably also the reason why the stock market is still performing. But there's a contrast at the moment between the stock market and what consumer confidence has, which is a little bit weird. We don't see that very often. Actually, I cannot think of very many examples of this. I think I have a chart also here, consumer, which I did earlier. So let me maybe switch over to that one quickly.
Yep.
Yeah, where is it? I thought I loaded it. Where's my chart?
Just going to quickly turn my aircon on.
Seems like I saved a wrong chart there, but let me quickly regenerate that chart for you. So let's go for a line chart.
Much better.
Tell that Jonatan that you're using aircon.
You can swap. He can
Poor
take
guy. And then we'll add quickly the consumer confidence.
Henry's in Ord NZD.
Short, one of my least favorite trading pairs.
NZD is definitely doing better than Aussie today, so I can definitely see that. Let me actually look at the chart though.
Maybe you look at the chart. I'm trying to find.
Yeah, sure.
What I wanted to show here.
Yeah, I can definitely see that, Henry. That looks like that's a good short, I would say. Obviously, last week we had the Australian unemployment data. Aussie, New Zealand got smashed, recovered, bit of churn through here. We've pulled back into relative retracement and then coming off. So I'm sure this would be... not quite up perfectly, but not a bad trade. Where'd you get in? I'd be curious, Henry, on the 1 hour channel. So like this kind of thing, like the break through here. Is that what we're looking at? Right. Morning. How you doing, mate? Happy Monday. Happy Monday. Hope everyone had a good weekend, by the way.
All right. I found it.
Well, my friend. You found it? Yeah?
Yeah, I found it. Quickly switching back So what I mean by detachment right now is, for the red line is the historic University of Michigan consumer sentiment, where they do polls like how confident are consumers in that the economy is going to perform well. And we see usually there is a bit of correlation between what the stock market is doing and what the sentiment shows. Like, for example, here in the 2007s to 2009s, we had a drop in the sentiment, and subsequent we also saw the stock markets dropping. So if you want to interpret it with a little bit of fantasy, you could have said like, oh, that also pointed already in the direction of the financial crisis back then. We had the same prior to or during COVID, obviously. And we've recently seen also this quite big drop from the beginning of 2024, when we saw the effects of inflation, obviously, that is, until the very low, which was in May 2025 at around about 51 points. But detached from this, we've seen this incredible performance of the stock market. So clearly there's an offset. And I'm wondering, like, where does this offset come from? The consumers are not confident. That doesn't mean the economy cannot grow, of course. As we human beings are notoriously bad at forecasting with our feeling what is going to happen to the economy, obviously. But historically speaking, there is a little bit of correlation, because you can, if consumers are not very confident, they are not going to spend so much money, obviously. They are going to save up more money. They are not going to spend it, especially on luxury items, or thinking about buying a house or renting out a bigger and more expensive apartment. So anything where you would think this can drive the economy forward. And this is so important because 64 to 68% of US GDP growth come from consumer spending. So this is the major factor when it comes to basically forecasting, is the GDP going to grow or not. And I need to quickly change my screen here to another one, to this one here. So what I did, I used kind of my Sunday to put together my thoughts on this, like where does this stem from, and where are current points where we see the economic development of the USA detaching from reality. So I'm kind of looking for outliers there. I'm looking for outliers from this is the normal correlation to this is where the correlation is off. These are stories that are developing kind of behind the scenes, and what could be subsequent the results of those stories. And I put together, and this is what I love AI, for example, for, is, I can put together all this data myself, and I'll just hand it to the AI, say, and tell it like, oh, these are my conclusions. Hey, can you please create a graphic that kind of illustrates my points here? And that works very well. A link to this graphic I'm going to show you here, you're going to find also in the description of this live stream. So you can access that and read it for yourself, draw your conclusions, or basically also tell me which is perfectly okay, Dirk. I think this is all BS that you are coming up with. It's as far from the truth as it could be. So feel free to access this. And basically, what we have, in my opinion, right now is a bit of a historic paradox. We have AI infrastructure investments, which are approaching 2% of the GDP. That is very large already. We were like just 2 years ago, well under 1%, actually well under 0.5%. So we have like really super, super large investments. To be more precise, these investments are going to be around 6.7 trillion US dollars. That's larger than the whole GDP of many, many countries out there, by the way, that are just going to flow into IT infrastructure. And this is also very different from what we saw with the internet bubble 25 years ago, because there you had a lot of companies that basically had no business, that were just being valued on potential future business. Here you can really see now with the AI drive, so to say, that you see investments into real assets, into infrastructure. So we have grown tenfold since 2022. I cannot think of another part of the economy really that has attracted tenfold investments in the past years. I don't know. Can you think of something, LJ?
No, I don't think so. Other than if you want to argue like crypto or something, like if you consider
But
that
also not
separate to
6.7 trillion.
traditional
No?
finance stuff, not quite that, but no.
No, I mean, by the end, we are not talking about
the
just
multiple.
Exactly, and not just talking about, there's like a lot of money virtually floating around and generating turnover. These are investments really into chips, into infrastructure, into data centers, and so on and so forth. And alone Microsoft, for example, has planned 80 billion investments for 2025. So this is the focus at the moment. However, like if you look at more what is going on with the classic economy, and that kind of surprised me, is that we still have, as it seems, a rising vacancy in commercial real estate. So the trend of not investing, not renting out commercial real estate offices, for example, does not, in my opinion at least, cover what you kind of see on social media, where people are complaining about, oh, my employer is forcing me to go back to office. This paints more the language of that, like, companies are offering hybrid models. Traditionally, I would have said, if we wouldn't have like the remote office capabilities, remote working capabilities, this would have been a sign of recession. Like companies going bankrupt, nobody wants to rent office space anymore. But that's not true, because, as I just said, we have very good company earnings. So this speaks for that a large percentage actually of the workforce is still working from home, and companies are just less interested in renting out commercial real estate. I mean, my company is an example of it. Everybody's working from home. I don't need like expensive office space downtown Berlin where I pay I don't know, 100 euro per square meter or something just to put some tables in there. It's not necessary anymore. This money can be invested somewhere else, obviously, at the moment. So that's one of the major trends. And interesting enough, also, we are starting to see the effects of the immigration crackdowns on the labor market. And so what do I mean by this? All those people that are deported or not let in anymore by the US, they are going to have an effect on the economy. They have that already. And so, for example, like farmers, for example, that relied heavily on people coming from the southern parts of the American continent, working on the fields, bringing in the harvest, and so on and so forth, basically cheap labor. They don't have people anymore that work there. So either you have your crop rotting on the fields, or you have to compensate this by something that is called in the media sneakflation. Sneakflation means you keep the same price for your product, but you reduce the quality, or you reduce the size of the product itself. I'm very sure some of you maybe have encountered that already. I have myself. I just told my wife this weekend, somehow my favorite, I'm not going to say shampoo, cleaning lotion, or whatever. Believe it or not, I'm not using shampoo. Somehow it feels different. It doesn't feel so foamy anymore. I don't feel so clean anymore. So something has changed. And that seems to be the case for a lot of products out there. And the estimates are now that this alone is going to have an impact on inflation through the tariffs by 0.5%. Then one of the big things, in my opinion, is really gold. This trend of rising gold prices, as I said now many, many times, really symbolizes, it shows how afraid institutional investors really are at the moment. They are flocking so much into gold. Actually, I've seen coverage from, I think it was Australia, where people were queuing in front of like gold vendors or something to exchange their money to gold. And for me, that's like a very alarming sign, because that shows like, okay, we have like people who normally maybe do not spend so much thought on where to invest in. And because they've heard, oh, gold is such at such high levels, they think like, oh, this is a good investment. I need to invest in gold. Also reminds me a lot of what we see every 4 years with Bitcoin. When we have this crazy FOMO up, suddenly your grandma starts calling you, why can I buy this Bitcoin? And I think kind of we've reached that stage in gold as well right now, which does not mean, that it needs to go immediately down, of course. But as I said last week also already, I would be very, very careful at these levels, for example, to engage in swing long trades. If you want to wait, we can have a look at that later, because I would need to switch to another screen now again. If you want to wait until gold comes down a bit, for example, to the 8 weeks moving average, to the bull market support bands, it's a different story. But be careful, as we've seen many, many times. What goes up must come down eventually. And even a correction of something like 20 or 30% from these levels in gold, that's quite significant already. Now we're talking about an easy $1,000, maybe $1,500 that we could drop very quickly. And I mean, you've seen that, for example, with Bitcoin just recently on October 10th. Once that move is initiated and people start being liquidated out of a long position, it's a very fast moving cascade. So a drop of $500 or $1,000 can be very fast. And even your stop losses are not going to help you anymore then, because the liquidity is going to be very low. So be careful there. Probably I'm going to regret this. As I said, I'm not forecasting, it's going to burst now, it's going down. This is notoriously difficult. You gotta ride the wave as long as it's possible. But don't just, we see that over and over again, don't jump into those trades of, I have 10K on my account, I'm going 50K long in gold now, like with 5x or even something like 10x or 50x or 100x, or the crazy amount of leverage that some brokers are offering you out there. We have a little bit of lingering debt issues for the mortgage real estate market in the USA as well, because we have a quite high part of mortgages, the red and the yellow part here, that are still financed, or actually that one is not so worrisome. The one that are still financed here between 3 to 5% or under 3%, those are the ones that could kind of put fire into a looming housing crisis when those need to be refinanced. I mean, imagine you have a credit like for a mortgage for your house, let's say at 3%. You still have a lot of left to pay off, and then your bank tells you, okay, now you have to pay 5.5% or 6%. This can very easy put people in a situation where they cannot afford that anymore, where they are forced to sell their houses. So we need to have a look at that. Then consumer debt stress has increased also. Not surprisingly, credit card debt is at an all-time high. 1.21 trillion US dollars has risen again by 63% from 2021. And we have 12.3% of 90-day delinquencies, which is the highest since 2011. So the highest in the past 15 years. What are really, so if we have to choose, like, what should we monitor going forward for the next months now? We should monitor how is the commercial real estate sector developing. We have, by the way, also 950 billion in maturing debt. That could, again, trigger banking stress if they need to refinance. We saw that on a small scale, I think, with a California bank also in the last week, I think it was. We have to have an eye, of course, on the labor market disruption. How is the outflow of immigrants from the USA to other countries going to further affect the US labor market? Consumer breaking point, I wouldn't say that, because, like I said, there's the correlation between consumer sentiment and the stock markets does not have a forecasting effect. Nonetheless, you have to see, of course, what are the effects on, for example, GDP. We still have a government shutdown, which is, according to some calculation, adding $400 million in daily costs and creating those data voids that we are in right now. We don't know what is the state of the economy right now, because we haven't gotten new numbers in, 3 or 4 weeks, I think now. So all in all, and this is the paradox, we have this great opportunity and investments that stem from AI investments, especially into data centers. The question here is, how is that going to have tickling down effects into other sectors of the economy? Is this going to create more jobs? Is this going to drive more jobs away, actually, because they're going to be replaced by AI? Is this going to have a rising effect on GDP growth? For example, at the moment, as I said earlier, the effects are still quite high. Spending is like approaches 2% of GDP, but according to the forecast, this will get higher and higher. And this, of course, then creates this bubble risk, because if you have large portions of a GDP, eventually, let's say something like 20 or 30%, that is influenced by just one sector, AI, for example, and that sector goes into a bubble or is not performing so well, this is going to drag down the whole economic picture. I think the last time we saw something like this was with the invention of the internet. Before that, you have to go a long way back. That would be the great industrialization, where Henry Ford invented I think it's called conveyor belt, no, in English. Before that, the invention of electricity. Really exciting times. How this is going to affect the markets in the future, for me, at least at the moment, very difficult to say. It's really a paradox, in my opinion. So, like I said, this kind of summary at what I'm looking at, put together by AI, not the data itself, but like to make it like more visually appealing. You can find the link in the description to this video. I'm trying to do something every now and then to kind of, because it can be like I think we spoke like 2 weeks about that, can be sometimes very difficult to keep track with what should I look at in terms of fundamental analysis, where are construction sites, which sectors are performing well at the moment, how are the effects of this on potential growth or decline in the economy.
Yeah, definitely. I agree. I think as far as the housing side of things, some stress there if rates keep staying higher. I think that's all of those. We've got there's been constant talk about that K-shaped economy, right? So you've got the top side doing well, the bottom side is getting crushed. So I see that as like the primary reason and driver for the Fed dropping rates, despite somewhat higher inflation.
Do you still think we're going? Sorry, go on first. I don't want to interrupt you.
I was just saying, I think getting too rampant about inflation right now is a bit ridiculous. About the 0.5%, here or there, because at the same time, yes, it is that argument that if you have those rates higher, you crush the whole bottom, which drops GDP, drops everything. That hurts people way more, and it's much harder to just revive that than inflation, prices being a bit higher. So I think that's their argument. As far as the housing picture itself, also not too worried though, because there have been a lot of people with that lower band where they locked in rates for quite a long time. Obviously, the US real estate structure is a lot different to most other countries. With that said, a lot of people haven't moved out of those homes, etc., because they don't want to refi or buy another home at those high interest rates. Yeah. So then that's constrained supply, driven up price. So even the people who came in later have still had a bit of a boost. So they should have relative equity in there if they do start to drop off, right? As far as the spending and the gains in markets, I think I was looking at something the other day, 51% or something of all the gains is just AI related, right?
Yeah. So AI related. I mean, when you say AI related, this includes every tech company now already, no?
Yeah. Anything tangentially related. I think, so the first part being that, yes, they do have tangible businesses, like real infrastructure, real economic activity going on in the background. At what point does it become too frothy and falls apart? I will also say my other best place to short this stuff is definitely quantum stocks. Those things have been, ridiculous. Up 300%, 400%, 500%. And quantum computing is not... It's not happening anytime soon.
Yeah.
At all.
Oh, you mean shorting? I thought you wanted to invest in it.
Shorting.
Because I was just about to say, quantum computing, despite, of course, we have seen quite progressions in there, but they sound more spectacular than they actually are, in my opinion. We're still far, far, far away from having like everyday applications for
even
quantum
just any
computers.
application.
Any
I mean,
application.
you write something with 10, 20 digits and the whole thing falls apart, right?
And it's a bit like, all those talks about producing electricity with nuclear fusion, which has been popping up basically since the 1960s every now and then. I know now it's like we're actually seeing progression there, especially here in Germany and in China. They keep up the plasma for quite some time, but still it's a way, until you actually can produce energy from that and supply the world with that. And quantum computing is like decades behind that. Maybe this is going to change, with all this AI things and AI driven research as well, but I doubt that.
Yeah.
Not
I think
anytime
that
soon.
will be the only thing that will take it to where it can actually get somewhere that is usable. But yeah, I mean, the AI models themselves are way off doing anything like that without error. Especially because for the whole, this is quantum, it's not fixed state stuff. It's like, physics will be way sooner, like general physics, before anything like quantum, right? That's a whole other.
Yeah. If you want to wrap your head, dear viewers out there, around quantum physics, I highly recommend to you to go onto YouTube later after you're done watching us, of course, and look for the double slit experiment. That basically explains why we cannot understand the world of quantum physics.
Yeah. And can you imagine AIs hallucinating as they do and then trying to,
that and they're hallucinating and we cannot even, fact check, are they hallucinating or are they not hallucinating? Because we are in this field of the Heisenberg, what is that in English? The Heisenberg uncertainty field.
Uncertainty principle.
Principle,
exactly. Yeah.
And so, so definitely I'm on your side. That's something I have to always smile a little bit about, like when people tell me, "Oh, I'm investing in quantum stocks." Say, "Yeah, good luck." That's kind of. I have a friend who's also always investing in hydrogen stocks, and when I say, "Man, don't do that. This is also so far away and one of the most expensive things actually to produce." Although it's clean energy, but it's so expensive to produce and so hard to store that the everyday applications for it are just so far out there.
Yeah, exactly. What was the other thing that you were about to say before, if you can still remember?
Yeah, I wanted to ask you if you are believing that we are going to 99% sure going to see a rate cut in what is that? I think next week, 28th of October in the USA, probably 25 basis points. And if I look at the forecast for December, for the last meeting this year, there seems to be a very high confidence level also that we're going to see another rate cut. However, I personally am not too sure about this. Maybe it's going to depend also on what are we going to see from US data once it comes flowing in again. There were some banks out there, JP Morgan, for example, saying actually the US market data we haven't seen here is worse than you probably would expect, which of course would drive the Fed then again to consider, yes, we are going to lower another 25 basis points in December. However, I'm still not too convinced that this is really going to happen. What do you think about that?
So yeah, I was looking for a similar deal, seeing as having this delay and the Fed has been pretty clear on yes, we want to see the data, and it was sort of implied that 2 and maybe 3 if the data warrants. Since then though, last week Jerome Powell pretty much came out and all but concluded that we're doing 3, we'll get a December cut as well. I think at this point they want to do it somewhat as a safety cut and sort of just get that in, get that done. Stuff is deteriorating a bit quicker. And I think they're leaning on, what's the probability it sort of stabilizes or stays kind of flat or just comes off slowly versus right now you're seeing it accelerate. So I think they're leaning more on that acceleration side rather than it sort of leveling out and being steady. So yeah, from when he spoke last week is when we were saying 3 cuts, bank it in pretty much. So up until last week, I was looking for a similar deal. But yeah, at this point, 3 cuts. I'm pretty firm on now. So.
But I think like the committee seems a bit divided still. No, I get that they're more leaning into we're going to do this the 3 cuts, but I don't know. I'm a little bit. Maybe it's just my paranoia. Afraid like when we see the data really coming out, it's going to paint a different picture than what we weren't expecting. If you can believe the data that's coming out, that's a whole nother story with all the shenanigans, especially when it comes to job market data that we've seen this year already.
Yeah, I would say I haven't seen any tangential bits and pieces when you start looking at like obscure data that would imply any kind of stabilization or pickup or anything. I think there are some underlying pieces on the horizon, say coming into Q1, Q2, that imply that might come about, and we potentially stabilize, start getting some positive numbers once again. But right now, that doesn't seem to be the case at all. So I'm very much leaning on the dollar selling coming back in, a third rate cut, not 3 rate cuts. So we've had one, so 2 more. And that basically how we play out end of the year, I think. So, yeah.
Just very quickly here, I see a lot of you guys asking about not being able to log into the dashboard currently. So IT is informed about this. They are working on that. Little bit of patience, give them a little bit of time to investigate the issue, and then the dashboard is going to be back very soon. However, unrelated to this, you still should be able to log into the MetaTrader itself. At least I'm able to do that right now. So you are still able to trade. Just the dashboard is not refreshed and reachable at the moment.
Yeah, so it's a website problem. So any of you guys, like if you're already logged into your terminal, etc., just be careful with your trades, wherever your daily stop was. Either try and figure that out manually, but at the same time, if you're not sure, then don't risk anything. Hopefully you're not positioning yourself to get blown out right away in the first place. But
please never do that.
Be careful with that. Yeah. So, yeah.
The YOLO trade. We are not Wall Street bets here, guys.
I was going to say, Gazero was asking before, so AI and gold correlation, what, how. I was asking what to expect from gold.
Yeah. So this week, or at least for the upcoming session,
going forward, I guess. Yeah.
Yeah, going forward.
Because that was the other part of your piece before, is obviously gold wrapped up into this. And yeah, we've had an absolute storm of a run. In the past, every time you get these storm of a runs, you do tend to get about a 20 to 25% drawdown at some point. And it tends to come pretty quick and pretty hard, just seemingly out of nowhere, where people are still trying to pile in and just it blows out. I don't quite think we're there yet. I think we'll get a bit of a pullback, a bit of settling in some of these higher 3K levels. But I think there's probably more scope for it coming into next year to run towards 5K even, or at least the high 4s.
Can absolutely be. Nonetheless, we have to acknowledge there is a detachment from reality in gold at the moment. Gold, as the classic risk-off asset, should not perform or correlate in the state that it does right now to the stock markets. It's very, very untypical that we're seeing. That's why I say sooner or later it will happen, what LJ just described. We don't know when this has happened, and it's not a valid trading strategy to bet on these black swan events, that everything is going to crash and go to zero. It's attractive because every now and then you're going to be right. This is why in scenarios like this, you see all those crash profits, like Michael Burry, for example, one of the more popular ones. My favorite good friend, Arthur Dent, which is like never right since 2008, I think. They come out of the box, mainly not in the case of Michael Burry, but Arthur Dent, for example. The agenda is probably to sell books or whatever. Don't bank on a strategy like this. You want to ride the wave. up on gold as long as possible, but you should very hard think about position sizing. So you should try to factor something in like what happens really if suddenly I'm calling it bubble now. I don't want to discuss is it a bubble or is it not a bubble, but just for visualizing things maybe a little bit, when it's going to burst and suddenly you see the order books drying up because no market maker wants to give you bid prices anymore to buy gold. And what is this effect going to be on my stop loss? So if you consider something like, oh, I have my stop, let's say at 4,200, but for my profit loss calculation, I take maybe into account that I could have $50 or $100 in slippage to the downside. What is the effect of this going to be on my account? Am I going to lose 0.2% or 0.4 instead of 0.2%? Okay, that's not so bad. But if you're risking something like 5% or 10%, the difference between 5% and 10% or 10% and 20%, that's already very, very large and hard to recover from. I rarely see people recovering from something like losses of 20, 30, 40, 50, even higher losses than that. So take that into account. So you might want to, the higher we go, you might want to slowly start reducing your position size just to be prepared for something like this. And let me tell, this comes from a guy who has been playing this game for 26 years, and it didn't help him, talking about myself, of course, now, for example, on October 10th, to protect myself against losses in my Bitcoin trades, just because order book was gone and I got executed on my stop losses $1,000 lower, which led to me being in a drawdown suddenly of 10% for that month, which is not critical overall, but of course it's something like, oh God, that could have been prevented with me being a little bit smarter about this and not having such a high level of confidence when it comes to trading cryptocurrencies. So it's not a question of if it will happen, it will happen. It's a question if you are prepared for that to happen or not. For me, exactly. It's like, like these liquidation events is like when you see a parking lot full of cars, there's one exit and everybody wants to go through that exit at the same time.
Yeah. And crypto has its own sort of structural challenges still, right?
Of course, the liquidity is much higher in gold, no question. But I've seen things like this, for example, during Fukushima back then in euro dollar, where when I was still working for a family office, I wanted to hedge some options. So I had to place orders in spot trades around 50 to 60 million euro versus dollar. And I got a spread from an investment bank of 100 pips on a trade. It's like, you guys crazy? Because they didn't want anything anymore because the guy in the background who had to manage the order book was like sitting on such huge losses.
Yeah, they're intentionally trying to tell you, we don't want your business. Please leave.
Right. Exactly. Yeah. Or we just want your business if we can be sure that they're like
not right now.
Remaining for us still. On that trade. And this is the largest, most liquid asset class in the world, or not asset class, the most liquid asset, if you want to call it an asset, of course, in the world, euro dollar, or the US dollar in general. So eventually it happened. So right now, maybe that being said, I think the structure we are seeing right now here with this double top, double bottom is quite interesting in gold. I'm using Renko charts here as always to get like a broader overview of where we are. So I would look actually at the moment, we have been coming down a little bit. I would have liked like one more box to the upside actually to make that trade. But
I think I've got a similar thing to you. I'll show you soon.
You're trying to play this range roughly between 4,225. If you want to be more conservative, you can even put it down here to like 15 to 16, and the upper side somewhere between 70 and 80-ish, I would say, to play this range. Why play this range? Because it's very attractive when it comes to risk reward. Because up here, I can put my stop loss on the breakout levels, but I still have a large leeway to the downside, which could potentially put me in a situation where I have a risk reward ratio at least of 2 to 1, probably in this case more like 3 or 4 to 1, which is a trade I always would take, honestly speaking, because I can be wrong a lot of times and still make money with it. You're looking at the kind of the same levels at the moment, you said?
Yeah, I'll show you in just a second.
And
right.
that here, talking about liquidation, that seems like it's time for Jonatan to rotate his position from gold to Bitcoin. No, Bitcoin is not the asset you want to be in. The
Not
hedge,
Bitcoin, no.
the hedge, when that happens, could be stocks. Not so sure about that, honestly speaking, with what we're seeing correlation-wise at the moment. So probably the hedge against this would be US dollar cash in an event like this.
Yeah, I'd say just cash. Yeah. Unless you're going to try short it, you call that a position.
Yeah, but also I did this also on October 10th, and I was like, my short position, which I wanted to do at 110,000, was executed at 101,400.
You don't have, because
it's like,
there's
okay,
no
thank you.
buys at the same time. Yeah.
And a 30 seconds delay from me pressing sell to the order actually being executed.
Yeah, exactly. So gold-wise, last week on that, Jonatan was long through here, and we were talking about flipping, because he did get, maybe I shouldn't say, but he did get caught out on trying to see this to highs again. I was saying, no, dude, I think we're coming right off to about 4,200, 241.80, and we went short through there. He then, when we had this dip back into here, we retraced higher. They came back off. So if we go down to a 30, you can see some more of these wicks. So within that hourly bar, we crashed down here to about 42.17 it was, pulled back up to 42.65 or so, then back down off. And then that was pretty much the lowest point from Friday. Since then, we've consolidated through here. And at the time when this was falling, the teal drawing I've got here was basically what I mapped out. So I was looking for some kind of retrace into here, which we did get at 65, came much quicker. I was looking for. I thought it might take the rest of the session to gradually get itself up. Then a pullback into these lows, which we did get on the Friday as well. From here, I'd like to see one more drive up to this sort of higher 4,300 area, a failure to have another tackle at the all-time highs, and then come off. And that's pretty much what I'd be looking at. So right now we're consolidating sort of in the middle point here. So if we do get another push, there's this trend line that runs through there from a number of days, weeks back. Basically come in there, up into this liquidity, tap the underside, run back off, and it's over by the prior highs through here. So at about that 4,060 level. So that's roughly the kind of structure I'm looking for right now. This right now is sort of looking as though, will we even get there? But I mean, gold being gold, we sort of consolidate like this and then eventually come up and then come off. So that's the general path that I'm looking for on gold. One final little tout higher and then come off. But yeah, as I've said to you guys many times, despite gold ripping, I've been in favor of shorting tops every time. I've just been shorting whenever we get to these sort of peak points and looking for those big downdrafts of that like knee-jerk $60, $70 just rip that we get very quickly, very aggressively. And I can be, in, out, and then just wait and see where we get to. So,
is that like a strategy you would recommend for somebody who's like new to trading?
Probably not. I will say that is probably more because I've traded through gold a number of times whenever we've been at these sort of peaks and stuff. And that was one of the earliest things I started trading and had great success. So I kind of am aware or experienced with how it likes to, I don't know, it's temperament,
No, I totally get what you
that kind of way, right?
Because my question stems from is like, because typically you will see new traders being more drawn to contrarian strategies, especially in strong trending markets. But it's quite difficult. You really need to have your strategy pinned down. You need to accept also that you really get out of your trades at your stop loss and don't start playing the game like, I'm going to delete my stop loss. I'm going to add to my position, because like this, you destroy your account very much. I think this is the main difficulty, of course, when it comes to trading in general, but especially for contrarian strategies, that they kind of feed into our nature that we want to sell high and buy low. It's hard to imagine, an asset like gold that goes to 4,500, but it can easily go to 5,000 or 6,000 or 7,000. You always think that, if I sell at this price, I'm great. And of course, it's nice, to tell your friends then also, oh, well, I shorted gold at 4,380, and just closed the trade now at the very low of this thing. So in general, I think if you're a beginner, try to trade more with a trend. It's a little bit easier, although the more you mature as a trader, you kind of become automatically a contrarian, because you look for those outliers always.
Yeah. Agree. I think it's very split. People either fall into that contrarian basket, that, or else people become like, oh, something's going up, I need to keep buying it, right? Because it's going up. I feel like in stocks it tends to be the opposite, where people trend follow a lot more, and then sort of FX,
I think
sort of day trading stuff is very much more contrarian.
That is more to the like the nature of stocks, that they over time will automatically go up because the underlying business of companies is growing.
Yeah, of course, but even people trying to buy them and sort of trade them, not really invest, but they'll sort of wait until something, sort of running hot, and then they end up being top buyers, right? For that same
absolutely
reason. I just tend to see that more often in stocks, for whatever reason.
When it comes to trade, I'm not like day trading or even swing trading stocks. Honestly, stocks for me always are a long-term investment. That I buy them and I don't look at them very much anymore, at least not on a daily level, maybe once a month for bookkeeping, and until my macro view changes. I've been net selling stocks a lot, same like Bitcoin, since the beginning of the year, every month, because in the beginning of the year, I believed very strongly that we're going to see a turnaround starting in November for the worldwide economy. I'm still very unsure, as you might have noticed earlier with the things I shared there. Is this going to happen? Is this not going to happen? For me, it's, of course, easy also to fall into this general thought of, we're not going to see a recession anymore. Everything is great. Everything is going up. I'm a little bit from past experience wary when I see something like this, and especially if I see something like people queuing at vending machines to buy gold.
I like that you brought that up, because I was going to bring that up today. Because
I immediately had to think of you when I saw it. Not because of gold, but because I gotta ask LJ, is that really true? Is this what is happening currently?
People have been going by, like, I've had people say this to me at the gym, like they're trying to buy gold now and stuff. I'm like, what the heck, man? Like, what? You don't own stocks. You don't really invest. Like, you got some random thing you bought one time or something, and you've like heard of crypto and you tried to buy some crypto, and then you got confused by how to open a wallet, and so you gave up. And now you're out there taking all the cash that you have in your bank and buying gold bars, like what?
Especially buying like at a vending machine or something. It's like, okay, if you ever look at the markup on those things, even if you go like to a physical vendor, not a machine. It's
that and silver is gone everywhere here. Silver now has some part of the reason silver's been absolutely ripping since is like because it's sort of fallen out of favor for some time, there's like problems with supply constraints now, as far as vendors and that sort of thing trying to actually get it from the miners and like the raw material side. Too much demand, they can't produce it fast enough. It's providing extra squeeze.
Crazy! Trading at $52.
Yeah, it's gone.
Man, I still have some silver coins in a safe somewhere.
Because what was it, like what was the old high? 49 or something.
I remember we had a hard time back then getting over 30 in silver for a long time. Yeah.
Yeah, it was.
But
49.
as you can tell, it's an asset I don't look
48
normally at,
yeah,
and because I'm not so prone. Same with gold until like I started live streaming here with you guys. Not really on my radar when it comes to that. On the option side, though, very attractive, but you get also burned very fast.
Yeah, definitely. So I mean, like technically, gold in sort of the same time frame now is outperforming. Sorry, silver is now outperforming gold. But that again, it's that slightly higher beta. Version. It's like ETH versus Bitcoin type thing. So that's how I view it. I'd still
that's a nice comparison. I like that one. Silver is like Ethereum to silver is to gold, like Ethereum to Bitcoin. Yeah. Nice one.
And then like silver goes away and just dies for forever.
Yeah.
And then randomly comes back, and like Ethereum like hot and then just dead. Right.
Absolutely. Yeah.
So. But yeah, definitely. I think as far as I hate now. I feel like the term bubble gets thrown around too much.
Yeah,
it's become like kind of buzzword type thing. I would say there's enthusiasm, and it's like heightened enthusiasm. I don't think we're at bubble levels. Not in gold, not quite in AI or stock market just yet. We've had good reasoning behind these moves, and it's a lot of it is also front running forward outcomes. I guess assuming those forward outcomes come to fruition, then this is fine. It would be the deviation from that. Where would that deviation potentially be? I guess perhaps if obviously Trump wanting rates much lower, he puts in his candidate for the Fed. They bring it down way too hard, way too fast.
Yeah.
That overcooks everything, and then you get like topside wobbles and something breaks. That's sort of the way I see it right now.
Yeah. I think this is going to be the case that he basically controls the Fed. When is Jerome Powell's mandate ending? Is it April or May next year?
I believe it's May.
Yeah. So this is kind of the zone where it could become dangerous if somebody is installed who's like very much in favor of Trump politics, that you have the independence of a Fed like being eroded over time. And I agree with you, that could be a potential danger that we see in an environment where inflation maybe is still more sticky than we like. We see interest rates somewhere around the levels we had pre-COVID at 0.25% or even 0%, which basically then, if really then something bad happens to the economy, then the Fed doesn't have any tools anymore left. Then it needs to think about something like buying bad debt again, like what we've seen during the 2008 financial crisis, with a difference that, of course, the amount of debt now in the world, in the USA, is much, much higher than what we've seen in 2008 already. So I see that as a potential danger too. And this is, if that really becomes the reality, I mean, then we are talking about the bubble of all bubbles.
Yeah, I think so. This is what I can see from it. So, like we had the banking wobbles last week, and that's been highlighted more, and it's been come in and out of vogue a number of times with the whole shadow banking type side of things. So for you guys, if you're wondering what that is, shadow banking sector is kind of evolved out of banks being more constricted with how they can lend, right? So certain higher risk borrowers have to go to sort of private or secondary credit lenders to borrow money. Now, these smaller entities obviously are not anywhere near as capitalized or as sophisticated as the larger banks and larger entities. So when one of them has a bad loan and it blows up, it can pull down the entire rest of the loan book and they can get liquidated. Now, how these private or secondary tier lenders are getting money, they're still being funded by the larger firms, larger banks, but the banks can't do it directly themselves. So they lend to these secondary players. Then those secondary players lend to the higher risk entities, because the banks still want to participate in it, right? Now they just go through a different channel. So it's essentially still the same thing, but now you have less oversight, less insight, and less total control if there is a problem, as far as mechanisms from, say, the Fed or the government or whatever, and data, right? So hence it's called shadow, because it's kind of obscured and you can't really figure it all out. Now, what I see is potentially if rates come down, that will help that bottom end of the economy, like we're talking about, that is having a bit of a tough time. Hopefully give them just a little bit of a lift so they can keep going. It may set on fire this lending phase, and particularly with AI and all this kind of stuff, people want to get in on all of this sort of thing, to absolutely light the fire under that. That stuff rips. You have the problem in the shadow banking thing. The banks probably even play along with it because they think, okay, we want to make enough money. It's going to blow up. We know it will. And they sort of run the thing of assuming they'll kind of get bailed out or some kind of form of things, especially if it then crashes whilst Trump and his favored Fed team is still in play. They'll just like,
and Trump himself,
they'll just go, we'll just bail you all out. So they'll make all the money. Everything will rip, have a massive crash.
With Trump's companies also being heavily into real estate. I mean, this is basically the foundation of his business as well, no?
Yeah.
And now I heard, like, I just read the headline and like a couple of sentences on this and haven't gotten into like reading the whole article, but there was some article exactly about this and about potential problems popping up because the banks who are giving the lines for those shadow loans or whatever you want to call them, they normally would demand, like, okay, for the security of that credit, for example, a piece of real estate, when it gets liquidated, we need to be the first in line to receive the money from this, to cover our your debts with us, basically. And I heard of a couple of cases where banks actually thought they were first in line, but looking into the details, they are actually not. They are the last in line.
Yeah.
So that is like a potential, like, law bomb, so to say, that could linger around. Other than that, it reminds me, of course, a lot about what we've seen in 2008. Back then, they were called asset-backed securities, stemming from those ninja loans that were giving out. Ninja standing for, what was that? No income, no job. But we still give you a loan to buy real estate. Why do we do that? Because we think the price appreciation in real estate is going to be higher than your debt with us accumulating. Apart from the fact that it's you're going to pay us like 7 or 8% in interest rates, of course, and
the A as well. So no income, no job, and no assets.
And no assets, yeah. Thank you. I was thinking, like, what was the A again standing for? And so it seems like that has shifted a bit from retail business on the housing markets, mortgage market, to now the commercial side of things, which, of course, could have much, much more severe impacts on the US economy if that really would basically, like you said just now, lead to like a cascade of potential bank bankruptcies. And I think, well, with Trump in charge still, for sure, there would be some kind of bailout. I'm 100% sure of that. But if that happens past 2028 and we have potentially the Democrats in having the presidency again, that could be super much a problem.
Yeah, definitely. Where can you follow my strategy and explanation of my strategy? Well, first and foremost, right here, where we are now. At the moment, we're talking about some of the economic structure, sort of macro fundamentals going on at the minute for you guys coming forward to keep an eye on, especially seeing as we've got the Fed coming up. The government shutdown's been going on for 3 weeks now. We're into the 4th week. So you probably should expect that it will wrap up relatively soon. Obviously, the first time Trump did this, it was 30 days, so a month. At this point, he'll be looking to wrap it up. He's pretty much, getting everything he wanted out of it. And then it'll be, time to go back to regular business, right? So with that interplay, this is setting us up for the next Fed meeting, the data that's going to come out, where we head into December and wrap up the year, and looking to see if we get these final extra pumps on stuff like the NASDAQ, stocks, gold, even Bitcoin. Bitcoin's probably seeming a bit dead for now. I don't know if we're going to get this Q4 pump. We'll see if it randomly comes out in December or something.
The natural cycle should be over anytime between now and end of January 2026. It's going to be very interesting. Like if we see a prolongation of that, which basically would make the models we are seeing right now, be it stock to flow, be it Bitcoin power law, being my own model, the regression model out of business. But let's see. Interestingly enough, my logarithmic regression model says the fair price for Bitcoin right now is at around 106,000 US dollars. So we are trading around that, which makes me a bit more confident that that model still holds value. And I want to, this is a good question here. Why is the financial crisis always linked to banks getting greedy and doing shady things? I think, first of all, because the banks are kind of the backbones, of the economy. If you build up a business, you want to buy like machinery to produce goods. You need to buy real estate for storage or whatever, or rent that. Usually, especially if you're a young company, you don't have that lying around in cash, or you don't want to use your company assets to do that because it's more attractive from a tax standpoint, for example, to do that taking out a loan, because you can deduct the payments of interest on this loan from your revenue stream. And so that is why you do that. Why pay for that by yourself if you can have a bank paying for that, basically? The problem now is twofold. The banks are becoming greedy because they see they earn a lot of money from that business, and they want to accumulate a lot of money from that business as long as it works. So what they do is they incentivize their individual workers on exactly these things. So if you are somebody selling credit, for example, working at a bank for commercials out there, for companies, your bonus is probably going to be linked at something like how much new credit lines you're giving out, how much your department is borrowing out. So you kind of incentivize this, and and people get very creative also when it comes to incentivization and reaching their bonus. This is why we saw, especially in the USA in the past, things like that. Some branches of banks opened credit cards for people that didn't even exist, or they just opened it for people that didn't even want it, that didn't know they had a credit card, just because they were incentivized on this. And the bank could put out like, hey, look at this, our credit card business is growing by 20% per year, which then makes the stock rise again. So it's a self-feeding loop that eventually always at one point busts. And I think the amount of time between a loop like this starting and then busting is getting shorter. So if we really get to see this commercial debt crisis, then that would be quite something, because the last debt crisis was in 2008. That's not that long ago, at least from a point of looking at the economy overall.
Yeah, exactly. So yeah, there's the incentive structure from the employee worker standpoint to build these loans to make more money for the bank. And essentially how banks make money is they lend out money, right? So the more they lend out, you get more and more capital, more money flooding the system, changing hands all over the place. Once there's a lot of money going around, people feel like they're getting rich, they're making a lot of money. They then also tend to take more risks. They get slightly more careless, and gradually that builds and builds and builds and builds. And then obviously the banks then have this massive loan book, which look good to start with. But then as the people that they loan to, and that changes hands another 5, 6, 7 times, incrementally take on more risk, thinking the parties going to keep going on. Eventually someone makes a mistake, which then that cascades to the next person that they had liabilities to, and then the next, and then the next. And then all of a sudden these people that assumed they were going to make X dollars from something, someone else messed something up. So then they make less money. So then they have less money to keep doing the things they were. And you get this zigzag cascade of everyone gradually making less money. They can't pay back the loans, and then the bank has to default on a bunch of these and take the loss themselves.
Exactly. I think as traders, we can kind of on a psychological level relate to that as well. I'm very sure you guys out there, if you've been trading for a while, you know these phases also where everything like seems to work in your favor. Like you have like 10 or 20 or maybe even 30 trades in a row that just hit your take profit, where you get too short at the very top, where you buy the very bottom. And over time, you kind of think like, oh, I have figured this out. I know how the game works now. I'm the king of trading. This is so easy, guys. I don't know why everybody's complaining about losing money with trading. And I'm like oversimplifying things, of course, now. But I think that on a psychological level is also going on if you are a manager in a bank. Ironically, a lot of the, let's say, C-level suits at banks, investment banks that I've talked to, a lot of times they don't really know like what is going on in their business. They only live off KPIs and judge KPIs. And their KPI might be like credit growth, like the amount of money we lend out to other, how's that growing, how's the average interest rate we are getting for this, for example, or for our investments. But they don't really know or even care about how are all these little cogwheels that LJ just described, going together, and what are really the risk, because they're not paid on judging risk, they are paid on growing business. So they will do everything in their might to pay business. And if you're a C-level suit somewhere, or even a high up manager, like a vice president or something in an investment bank, and you might have already a nice base income, let's say $150,000 or something per year, and if you hit your targets, they pay you another 300,000 bonus. Believe me, a lot of people will just aim for reaching their goals and not care about what are the risks, because it's not their job to care about that. That is the job of maybe some underpaid financial analyst that is somewhere lurking around in a dark office in the finance department.
Exactly. But yeah, final piece is that the other place you can follow me is my Instagram is down here. There's nothing on there right now. It's something I just started a little bit ago because people are asking for it. So in the coming days, weeks, etc., I'll start printing some stuff up there.
Be sure to give him a follow there. Be one of the first ones.
Yeah.
Be ahead of the bubble.
yeah, ahead of the bubble.
LJ's Instagram bubble.
yeah, the Insta bubble just goes up forever. Ultimate Gamer 365, brother. Can the gold bubble burst and fall 40%? Is that possible? Is it possible? Yes. Is it likely? Probably not. We were talking earlier about gold eventually when it does sort of find its topping points, peaks. Historically, in the past, we've had shortly after the following, 6-8 weeks, that kind of thing, you get somewhat of a 20 to 25% pullback. And the initial sort of first week and a half can often be a large portion of that, like 15 or so percent, just like that out of nowhere. Then you tend to go into a slower lull period over the next years, say 3, 4, 5 years or something, that you'll end up down 40%. The difference here right now is some of the primary drivers are all central banks and governments that are really have been the core drivers between the massive amounts of money coming into the gold market. Because and you can also just even look at the market cap difference of how many extra trillions we've gone from like 20 to now 31 something, $32 trillion in the gold market. Regular banks, hedge funds, mutual funds, institutions, retail traders do not have the money to be backing this. So you can go look through all the trading flows themselves. It's all come from governments and central banks. And you go look at their now treasury holdings, you'll see it's all there. Now, the thing with that is that they don't sell, right? They're buying it as reserves to hold on to. So you won't get as much of a massive downdraft as we've seen in the past. The recent absolutely chronic drive higher that we've seen after breaking that 3,500, we've now seen a further increase in participation from speculators, from hedge funds, from asset managers, banks, pension funds, that kind of thing. Because now the traders sort of come into vogue, etc. It's gained wider attention. This also allows these managers to sort of sell that idea with some level of protection that this is what everyone else is doing as well. So, if it goes wrong, they can be like, everyone else was doing it, and that's a shame, right? And further, through selling that, the other people with money investing in the bank, high net worth people, they see like, okay, yeah, gold's ripping. That sounds like a good idea. They give the tick of approval, and everyone piles in. So you won't see quite that kind of a downdraft, and especially with everything else going on, probably not in the near time. You're definitely looking at some kind of 10 to 15% at the extreme pullback at some point, but then you're more likely to consolidate and probably even tick up a bit higher after there. Sort of what I'm looking at.
Yeah, especially in having in the back of a mind like a potential scenario that we said, when basically Trump controls the Fed and the S ... goes down the drain, and you basically have no risk of asset left other than gold. With
like
gold,
the Swiss franc,
or that really,
which is already ridiculously overvalued.
Or Deutsche Mark, is coming back suddenly around the corner, so in that scenario, what are you going to buy? You're going to buy gold, and you're going to pay a dear price for it, because as gold is mainly valued in US dollar, or at least the gold pair we are looking at mainly, is going to drive even higher, because the US dollar is going to crash majorly then. So it's like, I could even see imagine something like a 40% pullback, honestly speaking, just because we've gone so high. But that doesn't mean that, everything is over then. That actually could mean like long term, this is a good buying opportunity again. Yeah. And it's funny enough, it's like, when I hear you talking about like how are like hedge fund managers and other institutional players behaving now in gold, that they also flock into it just because they have to know. Otherwise, they'll have their clients asking like, how come you haven't invested in gold? While everybody else has. And
because the whole debasement thesis has kicked off. The past 2 weeks, Bloomberg, Goldman Sachs, JP Morgan, they're all on that.
It's crazy, we're talking about debasement, and at the same time, we've seen one of the best stock markets years we've seen.
I think that's also
in history. It's like
debasement as well, though, because people are arguing that the cash is useless, so just put it in the growth companies that are going to be here, and they're going to be.
When you put it into a company that's also valued in US dollar, it's also like a self-feeding loop to the upside.
Yeah,
it's crazy, really. It's yeah.
So in the scenario where gold,
like anything I've ever seen in my life at the moment.
Yeah, definitely. The last time, it was back to like the 70s, right? That we had this kind of a pump, right? So in what scenario would gold crash? If somehow we had another kind of parabolic run like we've already had, and we go towards 6K, then you'd probably see a crash. How likely is that? Probably not that likely at this point. People are very aware of how toppy it is. The other scenario where it could come off very heavily, very aggressively, is if we actually get like a stock market crash or some kind of crisis. Because what tends to happen first is things like gold sell off as companies need to liquidate certain quality assets to pay for the bad assets, right? So anytime, like when you had COVID, you have the GFC, you had any of the other wobbles in between. We had the taper tantrum a while ago, that kind of stuff. You see gold come off heavily when a lot of people think gold should be rising because it's risk off and the stock market's crashing. But initially it comes off, it then settles, and then you start to rise back again. So that would be a scenario where you could get a bit of a very rapid sort of, I don't like the word flash crash for it, but something similar to that.
Yeah, but this is what we're eventually going to have, a flash crash. This is the thing with crashes. They always suddenly appear very like out of nowhere, basically. Nobody expects them. This is due to the algorithmic trading nowadays going on as well. And then it's always funny, to see all the media reports and analysts suddenly coming out saying like, this is what happened. Let me explain to you what was going down there. When I say like, okay, in hindsight, it's always easy to explain things. It's the difficult part is to prepare to things like this. You cannot forecast them, but you can kind of prepare for them. Thus, me saying earlier, think about what would happen to your account if you get executed like $50 or $100 worse in gold than your stop loss currently is. And this is also a very interesting comment. I'm slightly skeptical of media promoting the debasement theory and encouraging the narrative of gold buying to the general public. Yes, and interestingly enough, this narrative of US dollar debasement has been around for as long as I've been in the markets already. Can very much remember, especially during the internet bubble, that was a thing back then to talk about US dollar debasement, saying like, oh, back then the general talk was business is going to shift over to Europe now. Europe is going to be the big internet hub, buy, the euro, sell the US dollar. And nowadays, it's probably more like, oh, China is going to take over the world, or Southeast Asia, together maybe with Australia, because obviously there are a lot of ties when it comes to precious metals, especially, and steel, I think, or iron in general, stuff like this.
Iron ore, copper.
Yeah, copper, exactly. Copper also crazy priced. And so be a little bit careful. I agree with listening always what the general media says, especially like everyday media. Once they post something that is like probably 2 months behind the knowledge of what the ever professional trader has. You want to be looking forward. You want to be looking up or making up scenarios of, okay, what could cause this crash of 40% in gold? How likely is that scenario? This is what fundamental analysis is all about. It's not about saying like this is naturally going to become the truth. This is about preparing. If I see certain things, be it economic indicators, be it an interest rate environment, or political like tendencies, let me put it like this, what effects is this most likely going to have on the stock market, on the gold market, on cryptos, whatever you are investing and trading in?
Exactly. So yeah, the debasement thing has been around for a while. It's sort of kicked off more now that QE is very heavily entrenched, and if not QE, then other, I guess these you would call more exotic financial tools from the Fed. And it seems as though they're very much willing to play this game as long as they can, keep inventing various tools or whatever kind of obscure narrative and explanation around what they're doing. And they're willing to just play it so long as the market and the world will accept it until it breaks. So that's sort of the further argument around debasement, that it will, every time we get these kind of crises, that kind of thing, all the cracks are kind of somewhat papered over, and we kind of put the thing on life support to just get to the next period.
Yeah.
No one really dies or crashes out, whereas old, crashes or economic bubbles or whatever, heaps of people go bankrupt. It'd be absolute chaos and mayhem for a bit, but that would clean out all the rubbish, and then you restart with fresh roots. These days, we tend to keep all the trash kind of relatively alive for the sake of jobs and all sorts of things, and then just try and baby them along. Right. So basically, knowing that that's going to be unended means that you can expect more and more money to come into the system at every single point, just like we saw in COVID, and it will just happen again and again and again. Thus, fiat currency over time is worth less and less and less and less and less, and just gets printed to infinity, essentially. And so hence the narrative around buying real estate, piling into stocks. Bitcoin carries that thesis as well. And then obviously gold also. And even central banks, governments can see that. That's why they're stockpiling on gold as one of the secondary reasons, being that it is a hard quality asset, which so long as they've got that as a backing, as a reserve, it allows people to go, okay, you can keep printing because really you do have this much money overall because you've got gold reserves. So it kind of allows them to keep doing that printing as well.
I always have to think of, it's like a little bit like, if you want to visualize it like this, if you like are sick, you have like in severe infection in your body. So normally you would probably take something like antibiotics to treat that infection, to treat the root cause of you feeling unwell, basically. So, but in this scenario, instead of taking antibiotics and resting for a while, you might just take pain medication, paracetamol, ibuprofen, or whatever, is sold in your country, which is, and then you just go on, with your daily work. potentially making your infection worse because you are just treating the symptoms and not the underlying root cause of the infection. So like translating this to kind of the whole economic, or let's say fiscal strategy we've seen over the past basically 30, 40 years, is like whenever we see a crisis, you get a nice injection of fresh money into your system because it makes you feel better for a while, but it doesn't treat really the root cause, because you hope eventually you are going to grow out of the infection.
Yeah, perfect example. So it's like using drugs to wake yourself up and using drugs to put yourself to sleep. So instead of just going to sleep naturally, you take, I don't know, what do you take for Valium or something, or
I guess I really don't know.
I don't know either. But and then to start your day going, you pop a bunch of pills and anti-inflammatories, and you down 6 coffees and just keep going, right? Rather
11
than actually
lines of cocaine.
Rest. Yeah, exactly. Rather than proper rest, relaxation, and let yourself repair. It's all just ran on stimulants, basically.
And then you're also incentivized on doing that, exactly.
Yeah, and then it means everyone's doing it. And so if you don't do it, you fall behind, and then it forces everyone to get stacked into more and more of a position, and eventually it'll blow up. Now, they can go on for a lot longer than people think, just the same way that the market can keep climbing a lot longer than you think. So they might have another 10, 15, 20, 25 years in this game, all dependent on AI. It's going to be a big disruptor potentially. But they can keep kicking the can down the road. But eventually it will fail. Like we're already seeing each half decade more and more cracks in various parts, or it not being as robust anymore.
But again, exactly like you say, like I said earlier, also like kind of the impacts come closer and closer and closer, or are not as far apart anymore than they were in the past. But I see also like this whole this whole argument, this cannot go on anymore, but it can still go on because there's so much liquidity and new liquidity printed. This has been, for me, been also an argument from the very start of my career. So 26 years ago, people used the same stuff. This cannot go on anymore. The whole system is sick. It's going to collapse eventually. And it's still there and has grown significantly. So if you just bet it on risk-off assets for the past 26 years, you probably would have been in trouble. Well, recently not with gold, obviously, but in general, would have been not a very wise investing strategy, of course.
Yeah, and Japan's the model for it. Obviously, if anyone's curious, just go look at what Japan's done. They started this way early. They kind of got crushed. One of the reasons for that is they were doing it by themselves. Now we've got all the major economies kind of doing it at once, which kind of offsets the risk side to it, or where that would lead you down a certain path. But just like we saw in COVID, the Fed came in and started buying public bonds and stuff, not just treasuries and that kind of thing, right? So public debt. So there's heaps of other tools where they can come in and do this stuff again, for sure. I did see a question. I'm going to jump up and just grab some water for a sec. But I did bring up you earlier when Mr. Perfect asked.
I by the way, I exited my euro long earlier.
Yeah, I was looking for something like this on pound. I haven't taken this trade, but we've now started dipping down. And then same with the euro here. When I brought it up, this is kind of the wedge that we sort of formed price into right now. So
let me see quickly. I got out at 65.4. So 116.65.4.
I'll hand it over to you for a sec. And then
sure. Ironically, guys, it's like I just had to think when talking about Japan as an example. I remember back in the 1980s, where Japan was booming and the US was doing a lot of business with Japan. Japan was always like treated as this example of the economy that is going to basically take over the world. So what some people might say about China, for example, nowadays was back then Japan. And you can see what happened to Japan through since basically the Asian crisis in the 1990s. Japan has been in this stagflationary environment and not being growing anywhere, combined with a declining population that is, of course, and very, very low birth rates. So what else do you guys want me to look at? We haven't looked really at, for example, the NASDAQ today, which hasn't very much given me signals. Maybe around here, 24,900. I would consider something like a long position. Have to see there. Not so much action from the futures there at the moment. Euro dollar, as I said just now, I got out at 65.4. Made a little profit there of $100 on my $5ers account. I can see here, unrelated to this, I got a short print also at 67.3 from my system. So let's see where that goes. However, not expecting that much action still from the US dollar this morning. This whole morning seems to be a little bit slower still. When it comes to gold, one more thing I wanted to point out, that a bubble, if you want to call this a bubble, like the large deviation from the moving averages that we've seen here, it doesn't always need to resolve itself in a crash. What we could also see is a scenario like we've seen, for example, for 3.5 months just recently. So all the way from the top we saw here in late April to when did we break out? Early September. So 3.5 months of sideways range, where the moving averages, so the 8 weeks moving averages and the bull market support bands had time to catch up again, where you also had a touch of a bull market support bands down here again, but not because price came down heavily, like we saw, for example, here, because the gold price was moving sideways and the average prices had time to catch up with basically reality again. So we don't necessarily need to see something like this, gold suddenly dropping like by 13 or even dropping down here by, what is that, 17%, I think. We could also very well see like sideways action like we saw before for 3.5 months. And during this time, we're going to see bull market support bands, 8 weeks moving average, catching up again. And then the time to buy gold would be if it drops down and touches those. This would really be, for me, the sign that, we are seeing kind of a normalization of a market again. I have a good risk-reward ratio because if it drops lower, I can have my stop loss at reasonable prices, and I can still make use of a potential new upswing that, let's say, brings us to 5,000 or wherever. Welcome back.
Thank you. And yeah, I agree. That's where I see the kind of, I guess, 10, 15% drawdown from the tops. That would take us like 3,800 or so.
Yeah. I said earlier, it doesn't always need to be like that. We see the crash scenario where we drop like that far. It could also be the sideways range, and until like the moving averages, which I'm taking like to explain like where's the normality of price at the moment, fair value, if you want to call it like this, have caught up again. And then the next move comes. And the last time we saw that was this year, actually. We had like 3.5 months from April to beginning of September where we saw an extended sideways range.
Exactly. And from there, like we had 3,500 pull back to 3,100.
Exactly.
That's roughly like 10%-ish.
Exactly. Which is normal, no? That's like a normal pullback in a bull market, or in a trending market. Let me
it's
put
healthy.
It like this. Healthy, exactly. Mia asking where my buy-sell signals come from. You're probably talking about these, for example. This is an indicator. This is a proprietary indicator that I'm using for short-term trading. And it's an indicator I'm not making publicly available because it's something I worked my butt off on for a very, very long time. You have an opinion on GU at the moment, LJ?
GU. I can see let me have a look. So I was looking for potentially longs through here, as I brought up whilst we were talking earlier, but this is just clambered right through. So similar deal. Kid was asking for Aussie dollar longs as well. I am in an Aussie dollar long at the minute still, which I've been in since just after market open today. What I see right now, you've got some of these kind of wedges forming. So euro dollar's broken out of that. We're coming down for some of the lows from today, from earlier in Asia. The question will be if we can stabilize there. I think there were some other points when we go out. So you've got these levels of some of these previous highs coming through here. You've also got the 100 moving average and basically where we gap down through the open to today. So this is what I'm looking forward to see if we can hold this kind of area on euro dollar, pound dollar. That is what I'm expecting. And similarly on Aussie dollar through here, if I bring this back down to 15, let's go to this one. That's got my trade on. So I've been sat in this for a while. The original TP I had was at 18.5 up here. So we fell short of that. I was doing stuff earlier during the day, kept holding on to it. We've now pulled back a bit, pulling back down to what I would see as the sort of last line of support for this. From here, I'd probably consider adding to the trade. So I'm still looking at further longs and now hold this right up towards 65.40 on the Aussie potentially. So I'll be looking at something like that to add just in here. So yeah, very much still short dollar myself, biased overall. I think as we can see on the Dixie here, this is the sort of, we zoom right out, the kind of price action I was looking for at these highs for us to come down, consolidate for a period through here, another downdraft, sideways period, downdraft, and then once we get into this lower 96 band for the US dollar to come back up. So I would see this most likely to sort of peter out somewhere in here, pull back a bit. That'll give that height on the pound dollar, euro dollar, Aussie dollar. Apologies, guys.
Bless you.
And then I'm still holding on to these dollar yen trades from the past 2 weeks. So they're sitting in here nicely. So I'm looking for this to ultimately come down and sort of close this gap. Got in at pretty favorable levels. Earlier today, we did have a big downtick for dollar yen. And since we've, recovered pretty substantially. So was that 150.25, I think it was, or 27 or so. There we go. And then now we've run right back up to 150.80. So hence, with that pump on dollar yen here, that's why we're seeing euro dollar, pound dollar, by correlation, sort of pull back a bit. But I would expect this to, again, be rather ephemeral and dollar yen to ultimately continue its drop lower. I do see, though, is on this channel, pull that back out. We're kind of, playing around with the other side of that through there. But yeah, that's pretty much where I'm sat. Yeah, watch my good old Dixie lines on here. I drew them out on a high time frame ages ago. That's why they look kind of weird and wonky. Yeah, that's my.
What's the Dixie lines?
Just the little drawing.
It's the US dollar index you're drawing on the.
On the Dixie, yeah. So the little paintbrush directional drawings I was looking for. But yeah, we have come into more of a neutral stance right now, I would say. Dixie.
Yeah, I agree.
Yeah. What else? Did I miss anything else on chat?
10-year yield has also has come down quite a bit again for US treasuries.
Has Motorcar was talking about NAS before. I've not looked at NAS today at all. So I think this was last Friday, basically where let me go down to a lower time frame. So this is where our options cluster was last Friday. I think we were talking about this on the Discord with Akram then. So I was looking for a pullback into that area and then see how we fare in there, whether we drop right off or start to take another run higher. So obviously today we've extended that move higher. We did have that pullback into the Friday, come up. This is where we opened. And now we're sort of made a marginal new high as far as the recent trading range, but we're not doing too much on the NAS right now. I would not have a clear signal overall. I mean, zooming out like that looks like you could take a potential short. At least near term, back to some of these moving averages, and then maybe see either bounce from there or collapse. But we seem to be in better stead than we were last week. Everyone sort of calmed down with the underlying market jitters and general risk-off sentiment that we had, the banking stuff. Where are my other levels for today? Oops. 24850. So I'd only be a touch lower where we are.
Interesting. VIX is exactly the level I mentioned when you were away just now.
Was it?
Yeah. I said if I'm looking for longs, I'm going to look around that level. Independent from, I didn't look at the, what is that, the expiry, option expiry?
Yeah, so this is the 0 DTE expires for today. Yeah. So yeah, I always have a look at these because we tend to sort of coming into New York, like pull back and kind of centralize around these levels each day. Once that clears, then you'll get the next flood of volume coming in and either, some directional move one way or the other. So that level would be down here. That's also roughly back towards that 10 moving average as well. So, but yeah, so from here, I'd be looking for a small downtick coming towards New York and then look for that decision maker once New York is in full swing.
Yeah, I think it's really one of the first Mondays we had in a couple of weeks where we do not enter or do not go into the trading sessions, Asian and European session, and already having like a very mind bias, oh, it's going up or it's going down today. It's kind of neutral today.
Yeah, it's been quiet now. I kind of want the US government to just open so we can get some of this.
Yeah, but I think it's going to take a while still, really.
Yeah.
I don't think they're going to come to a resolution very soon. Because if Trump or the Republicans in general are one thing, they're like super stubborn. And Trump especially, he just doesn't care.
Yeah, it's in his interest to have it shut.
Yeah, because he can weaponize it.
Yeah. But yeah, we've seen volumes across the board like come back off. So the orange colors basically just mean decrease from prior numbers. So on the Friday, we did have quite a spike higher across the board. But that's, settled down the weekend, everyone's calmed themselves. So, yeah. So I'd say most likely we're going to have generally a bit of sort of trading within the sort of ranges that we have down this lower area, euro dollar, pound dollar as well, until we get some kind of push leaning up against those levels. Or if suddenly we get Trump saying like, "Oh, we're opening the government again. We're all good."
Yeah, probably. I'm every day afraid of statements like this. Yeah. Does the Dixie lead the euro dollar or vice versa? It's that question is not really or can be answered very fast because euro dollar makes up 65%. Oh no, I'm lying. I think 53% of a Dixie. So if you look at a Dixie chart, it's basically a euro dollar chart flipped upside down. So none leads the other. They are both almost 100% correlated in their movements.
And then you can have the other components sort of driving hard that day because of news or something, and then that will lead euro dollar to say follow the pound, which then further shifts the Dixie because now they're both running that way, which then drives the rest of the dollar components via cross correlation. But yeah, so
it's very hard to trade cross correlations in forex.
Yeah, because they go in and out of sync. Very regularly. So. But yeah, so it's difficult to say. Does one lead the other, or does euro dollar lead the Dixie? Right. It's going to depend because often, like if you're getting a massive directional move in dollar yen, euro dollar, pound dollar, that kind of stuff will follow, and then kind of be the primary driver of the Dixie because of the weighting. But really, the move started from the dollar yen. So technically, it'll look like euro dollar is sort of driving it, but it's actually dollar yen driving it, which has created like a roundabout way to move the index. But yeah, all you need to remember is that euro dollar is the majority weighting in the Dixie. So whatever euro dollar is doing will move the index as a whole.
If you want to look at other measures, there's Jonatan brought that up last week. There's a broad measurement to the Dixie as well, where you have the basket contains, for example, something like yuan as well, or some South American currencies as well. So you can also use that to kind of try to see in more detail where is strength or weakness of US dollar really stemming from. Is it from the yen? Can be also nowadays, of course, from something like the yuan, so the Chinese currency. But overall, they kind of always paint the same picture, in my opinion. So personally, for me, it's nothing I really look at. I like to look at the classic Dixie.
Yeah, definitely. Morning, Akram. And Max stocks are going up. Verstappen.
Buy more Dutch companies.
Yeah, that was killer, Akram. Good race. Good, or at least good race as far as the outcome was interesting. The race itself was kind of boring. But
yeah, it was.
Yeah. Sprint race was fun.
That one I sadly didn't see. I wanted to. I like basically because I was out on at that time with my wife to eat something, and I like turned off all my social media because I didn't want to know the reason. I wanted to rewatch it then later on.
Yeah.
And when I accidentally looked at Reddit, and the first headline was like the outcome of a sprint race. I was like, oh, why?
Yeah. Yeah, no, it was Piastri and Norris crashing, taking each other out on the turn one. And then we also had a beautiful, beautiful move from Lance Stroll. Where So the guy just didn't even turn. He just drove straight. I was like, what the?
Yeah, I
What
mean,
was that? What
without
was
his
that?
dad, he never would be in Formula One anyway. No, I mean,
I was just watching. I was like, how did you even do that? Oh, yeah, it was ridiculous. Absolutely ridiculous. What does Marco say? Mark Cox. Does it seem like they're going in and out of sync, or does the 4-hour candles on each closing at different times the causation? Not quite. So, like, you can go look up the overall weighting, right, of each of the currencies. Now, say if you've got something like dollar yen has a much lower weighting, but it also moves very aggressively and very hard. So if you've got euro dollar staying like pretty flat, that dollar yen component moving so aggressively, however many hundreds of pips in a day, which you see, you can regularly see it up 150, 200 pips. Euro dollar, something really has to have gone on typically these days to actually see us up 100, 150, say like some central bank announcement or something. So then that can create skew where it looks as though dollar has weakened or strengthened, whereas some of the other majors are kind of relatively flat. They might only be up or down 0.1% or 0.15, and then dollar yen can be up or down 1% or 1.2 or something, right? So yeah, it's almost the same way if you think about it with stuff like the S&P or the NASDAQ, where you got the big tech companies having such a major pull in the entire market, right? So the market will be up and down just because they're up or down, even though the rest of the other 490 whatever stocks are either mixed or flat or just gone nowhere. The big guys have such a massive pull that sort of distorts the underlying picture of the broader market. I'll put it that way. And so the
yeah,
Dixie's obviously missing other things like Aussie dollar, New Zealand dollar, some of the other plays that these days are actually important. And same with like the Chinese yuan, like Dirk was saying, also missing. So
yeah, and for stocks also. Now, if you look at like other big companies in the S&P 500, like Target, for example, if you look at how they developed their price develop over the last couple of years, you see it was either flat or either going down in some cases as well. So really, and this is, I think, really something a lot of people oversee also. The whole development of the stock markets is especially driven by everything that is in the slide is painted with AI, which is every major tech company in the USA right now. Even like Apple, people are not looking necessarily at what do they innovate with their iPhone. Well, they don't innovate anymore in there anyway. Like, or what are iPhone sales? They look like how much do they invest in AI? Are they behind when it comes to AI? What are they doing there? Do they have their own model that they are developing? Or like cross-financing things like what was that, like Nvidia gives 500 million to Microsoft, then
yeah,
Microsoft gives those 500 million to OpenAI, which gives it back to in terms of ordering chips from Nvidia again. No,
yeah, just round in circles.
yeah,
Yeah,
round in
circular
circles.
financing. Yeah, it's great. But yeah, 100% Akram, just automatic verdict. Like, who's that? Oh yeah, it's Stroll. Yeah, of course.
Who else?
All right.
Lands.
Zube was asking for gold. Gold's pretty neutral today. We're pretty flat. Not doing too much right here. I'm looking. I think I have a general tilt higher. I was talking how last week, once we had this downdraft, pull back up from here, up into this resistance, back down to support through here, and then coming into next week, get some kind of a drive. And depending on if we can actually make another attempt at the all-time highs, or if we sort of fall short, momentum starts to stall, you might then see that beginning the downdraft to about 4,060, which is the support area with some of these prior heads that we topped out at. So that for me is what I'm looking for this week. The attempt higher, if we can actually establish further momentum beyond that topside piece here, run towards all-time highs, or if we cap out either in this zone or just before and then make another drive lower at the moment.
The den draft of gold.
Yeah. But yeah, today market across the board is pretty
boring
flat,
so far. Yeah?
Consolidative. Yeah. Probably waiting for the next catalyst, some kind of move, direction, tweet, something like that. So
we have two gentlemen already lurking in the background who probably can shed more light onto what to trade today and not to trade. Like Richard is already agreeing. He's like doing like this, like signaling us. He has a lot of great trading ideas, a lot of trades lined up for you guys. So hop on, guys, and join us at any time you like.
Yo, what's good, guys? How we doing?
Yo.
Going strong. What's news?
In
not too much.
Happy Monday. News. Talking about
it's quite Monday today. Yeah. I had a good weekend. It was relaxing. Awesome. Did a bunch of cooking, that kind of stuff. Watched the F1.
Oh, nice.
Bunch of cooking with my partner. So yeah, it was great.
Oh, that sounds sick, man. Yeah, that sounds sick.
What about you guys?
It's kind of
pretty much the same, mate. I did a bit of cooking, made some ramen. I made a pork belly ramen. That was really nice.
Yeah. You made it yourself?
Yeah.
Wow, man, that is really good. Yeah. I've been trying to do that every now and then, but it's like, you have to let it boil for like, I don't know, like 48 hours or something like this.
Yeah, so. It's hard going. Like, I just do I try and do a quick one, like I like study the missus cooking. So like when she's doing her like proper like traditional ramen, I'm there like, right, okay, how does she do that? Because when she's not here, I want ramen.
I love it.
So I'm like, how can I cook this?
My favorite restaurant in the whole world is Four Seasons Ramen in Singapore. That's like the first thing whenever I'm in Singapore, I have to go to this place and eat their king ramen. It's just it has like 1 billion calories, but it's just heaven in pork fat, so to say.
It's
disgustingly good.
Yeah. Disgustingly
good. Absolutely.
Yeah. Afternoon, Void. How you doing, mate? Oh man, yeah, literally. Oh, mate, that and sushi. So I went to a hot pot the other day. Right? So it's like you got like a really spicy soup that you boil your
nice Szechuan soup base.
Yeah, it literally is Szechuan soup.
Yeah.
Szechuan peppercorn. So you got like Szechuan soup, and then you've got a grill.
Yeah,
and you pick anything you want, like anything like ox tongue. It can be steak. It can be seafood. Absolutely, you name it, they've got it, and it's completely raw. Even all the way to like scallops and all. Everything is complete raw. And oh mate, it was incredible, and it was the first time I've been to one of those. Like I love sushi. I'll go to all you can eat sushis, but first time I've done a hot pot, and dude, like it was, it was amazing. All you can eat as well. I was
now I'm getting hungry, so I take that as a cue to head off to lunch for today. Thanks, guys, for being with us today. Leave us a like, subscribe to the channel. We still have this goal in the back of our head to reaching 100,000 subscribers by the end of the year. So help us with that. LJ, thank you for being with me again here today. And William and Richard, have fun. And I'm looking forward to hearing your awesome trading ideas for today, because I don't have any.
I don't know what stream you're going to be watching, but I don't know what ideas I got yet.
I'm going to keep watching and doing snarky comments, man.
Yeah, just troll us a little bit.
Yeah, exactly.
Yeah. If there's nothing in the markets, we'll make something.
Alrighty.
Bye. Bye, Dirk. See you later, man. Have a good one, Dirk.
But yeah, no fights with kangaroos over the weekend. Not this weekend.
LJ was a good boy this weekend.
No, it wasn't kangaroos this weekend. It was koalas.
Yeah, drop bears.
This is a koala.
What's the rabid ones, right? The drop bears. of course.
Yeah, just rocks up into the bushveld and just goes punches a koala and goes, "Hurrah!" Turns around and goes back to his.
Yeah.
Mate, I watched this video.
What the hell, mate?
Mate, I watched this video on Facebook, and it was a day in the life of living in Australia or something. And they opened the toilet, and there was just toads or like frogs everywhere. Like it filled the toilet bowl up. And then there was a monster spider. I don't know whether it was a huntsman or just this huge, humongous spider just like running across the wall. And then like down a drain was like just this massive snake. And I was like, oh my God. And then someone went to open their window and there's just a koala sitting there. And you're like, what is Australia, man? Like, what is this?
Classic.
Like,
yeah, this is
so
crazy.
funny.
We got so much stuff.
Class.
Yeah, and then there's like kangaroos, like herds of them. Like, you know, like sheep go in like herds. There's like kangaroos, like genuinely just like bouncing across the road, like 5-6 of them. You're like, like this country isn't real.
Yeah, they turn up on like the golf course and stuff all the time as well.
Yeah, man, I've seen videos of them on golf courses.
Play around them, right? Like, yeah.
Oh, shit! Just knocked out a kangaroo.
There's a golf course in KwaZulu-Natal, which is like the eastern coast of South Africa, and there's monkeys. There's monkeys that come from trees while you're playing golf. That's usually
they
like
come steal your ball.
They steal your balls, and then if you have like any food or snacks with you on your little golf cart, they will come and steal that.
So, hey, well, the one experience that I've had with someone stealing my ball at a golf course, other than the people thinking that their ball, like my ball is theirs, was I was out with my ex-partner at the time a couple of years ago, and we were out playing golf, and she hit the ball, and it was a lovely shot straight down the middle, and I promise you, with God as my witness, a bird came down. I think it was a crow, came down, picked the ball up, back into the tree.
It was tired of your shenanigans.
Just stole it.
No, like, straight up. Like, I've never seen that before. Never in my entire life have I seen anything that weird. And I was like, that didn't just happen, surely. It had to have not been there to see it. Like, honest to God, like I was like pissing myself laughing, and I told the family. And they were like, yeah, ha, 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 funny, Will, you full of crap. I was like, no, I swear to God, like, this bird, this crow just stole our golf ball. Yeah, but that's the only weird thing that happens in the UK. Nothing exciting happens. I feel boring when I come on stream with you guys.
Like, our countries are very, very exciting on an animal level. And like, but you guys have like just the weather, just like it's always raining or it's always cold.
It's not exciting. That's even worse.
It's like what you have to talk about. So it's like, come on, it's like, so Will, tell me, what's today's weather
exciting?
Like?
Oh, it's wet.
It's pissing down. Dude, it actually is. It's pissing down with rain.
It's wet.
It's heavy rain today.
Tomorrow is the same thing. Will, how's the weather today? Mate, it's wet.
Mate, it's standard. You know, the day I say, dude, it's sunny, is the day it's like, oh, no, really?
Yeah.
Go outside, touch grass.
Yeah, I bought a convertible. I have no idea why.
Yeah, just for the summer, and that's it.
Yeah, mate. For the summer, we don't ever get.
So that you can go drive to Spain and Portugal and whatnot where there's actual sun.
No, fair. Not fair that. I mean, I did drive to France and I had the roof down most of the days, so that's very true.
Yeah, that's good. All right, guys, I'm going to have to tap out. Love you and leave you. I'll see you guys tomorrow. Ciao, everyone. See you,
LJ, have a great one, man. See you there, bro.
Cheers, LJ. Have a good day.
Ciao.
Have a nice day. Anyway.
Bald eagle.
You are?
The bird that stole your golf ball was a bald eagle.
Yeah. Dude, like, we have eagles in the UK. Come on. Actually, no, we do.
I think you guys have owls, and
we do have owls. Yeah, no, they are cool. They are cool. Yeah. I was actually listening to the owls last night.
Predatory.
Yeah. No, we have falcons. You know, I think there's eagles in Scotland. I think Obviously not bald eagles, nothing too exciting. I think it's just like standard eagles.
Got kites.
We have red kites. In fact, we have red kites in where I live. We have hawks, red kites, buzzards, owls. I think that's about it. Like sparrowhawks.
And those are just the people. We're not even talking about the.
Yeah. But that's as exciting as it gets, man. Like, why can't we have vultures? Like, give me some vultures, man. Give me something exciting.
Didn't you just say you have buzzards?
Yeah, but buzzards aren't that exciting.
Yeah, but I mean, a buzzard is a type of vulture.
Yeah, not really. I mean, okay, no, I suppose to a degree.
Yeah,
and it's
you
okay.
get buzzards.
It's
The
scent.
same.
It's
Yeah,
like
yeah, same carrion birds.
Same tree. Golden eagle.
Aguila.
Yeah. Now we have nothing too exciting. Like, what's the most exciting? We have an adder where I live. That's cool.
Like a snake.
Don't want to be bitten by one of them. That'll kill you, I suppose. You know, that's a venomous snake. But
Mark Cox seems to be quite a bird watcher. Knows a fair few of them.
My
eagle, golden eagle.
Did not work. White-tailed eagle. I think. Yeah, fair. Yeah, we don't have golden eagle in the UK, do we? We have white-tailed eagle. I know we have an eagle in the UK. I thought we only had like one. I thought it was like one species of eagle.
Lots of seagulls.
Oh, dude, we have a lot of seagulls. we have a lot of seagulls. Those sea rats. Dude, I was on the door once, and it was in Tenby, which isn't too far from where I live in Pembrokeshire, and it's a very coastal town. And I remember being on the door one summer a couple of years ago, and I just got there, and all the bouncers are there, like pissing themselves laughing. I'm like, what are you boys laughing at? And they're like, dude, like, look at Gary up there. Who the hell is Gary? We've named the seagull Gary, and it had this like post it would stand on, and everyone called it Gary. And you'd have tourists walking past, not knowing about Gary, eating chips, and it would take flight, hover around, and then dive down. And I mean, dive down like just over their shoulder and swoop chips or ice cream or burgers out of these people's hands. And mate, dude, absolute terrorist! Like it was nuts, but so funny, so funny. So yeah, we called it Gary.
Do you know what Indian miner is?
No.
I'm not entirely sure what's the other name for the Indian miner, but it's a very intelligent bird.
Okay.
So it's not the raven or the crow or whatnot, but they're like them in terms of their demeanor and their intelligence and whatnot. And we had a friend that had one of these Indian miners that were just, his little pet. And his name was TB. As in like TB for tuberculosis.
I was going to say, yeah, you're right, okay.
This bird was an airborne virus, is what this bird was. This bird would come and would fly to you, sit on your shoulder, and look at you. And when you looked at it, it would poke you, like it would just pick you in the eye. Like pull one of your like little eyelashes out. And then it would fly away.
It would be bird for dinner if it did that to me.
No, I mean, it was on can't be like their pet because the pet like. So if he comes and sits on your shoulder, you just like, I'm not looking at you, and then he goes around the other side. It's like, nah, I'm not looking at you. He's sitting here. I don't want you. So yeah,
we had a friend with a hawk once. He used a bit like that. Oh, dude, I can't draw a straight line for love nor money today. Trying to mark out my highs and lows.
Awesome.
Say again.
Yeah, Mark Cox in chat. I had a pet one I named Naidu. Yeah, that adds up. Yeah, little Indian miner.
That just sounds so wrong. A little Indian miner. That sounds illegal. That sounds like a social issue. There's an activist out there protesting against whatever you're talking about right now.
Most probably, yeah. And then what is it like? If a specific song is in A minor, that's obviously a music term.
Yeah.
But like it's the same joke. It's just like the same level of like you said what?
Oh,
Yeah.
mate, like
I can't remember
I've
what.
known so many guys to make jokes about, musical tones and A minor, and yeah, mate, yeah. Wow, I've not heard a joke like that in years. Literally, probably since I was in school. Oh man, that's funny.
Sounds a bit Jeffrey twang to it. Yeah.
And on today's episode of International Birdwatching Collective. Anyway, guys, we promise this is a trading stream. Well, let's get back to the trading.
Serious face.
Let's get back to seriousness. Seriousness for a minute. Let's see if we can do like a minute on, minute off.
Okay, fair enough. All right, let's start.
Okay. I'll go 1 minute, you go 1 minute, and then we'll go a minute degen. How about that?
Okay, but if we're gonna do 1 minute, 1 minute, it should be 1 minute, 1 minute of degen as well. Balance, mate, balance.
That's true. There's got to be equilibrium.
Yeah.
Everything must be balanced. So, guys, I did take a buy on gold today. I do apologize if I'm sniffing. I've got a cold. My brother's giving me a cold. The absolute rat. Yeah, so I got to thank him for that. So, guys, I do apologize. 83 plus 144, $228 plus $2 commission. So $226 banked on gold today. Now, it did dribble up. I wanted a pullback into this zone here and then a continuation up. We didn't get it. Instead, we consolidated around a little bit. And then I thought, okay, let's see if we can get a break and close above. We got the break and close above where I marked out. So I took the trade. It was high risk due to the wick, but we did get the break and close above. We also got the pullback into this breakout zone. So I did scale in. So I had both my orders in. So I was in for half a full position, so half a lot. And then we headed up. And then, guys, we were just really starting to struggle. Like, we were struggling to push above again on this one. We did actually manage to close relatively strong. No, you know what? I'll just delete you if you're not going to cooperate. There we go. So we did manage to, have a bull close and close relatively strong. However, there was still a wick above. And then, we pulled back and then we headed up and then we pulled back, headed back up. And then I thought, you know what? This really feels like it's going to reverse. The discretion, the experience in trading kicked in. And I thought, yeah, I'm going to take out of this now. So I took out pretty much as close to the high as it came. And then it just started pulling back, and we're pulling back now. And we've just, oh God, what have I done? Let's try again. There we go. So we started pulling back, and now we're just sitting in a range. We had a bit of a deep pullback here, and now we're heading back up. So I've marked out my current high, marked out my current low, marked out the consolidation with my eyes, which I shall now do physically. There we go. So marked out the consolidation. So just going to see what price happens with gold. Not too interested in it at the moment, but we'll see. Euro USD got a cool breakout to the downside. That's quite nice. I don't know what's going on here. I'm going to delete this. This feels too big. There we go. So we've got a nice zone marked out here on EU. We did break and close below the low, and it was a nice close as well. Now, we have got news out at 3:30. It's medium impact, so I can't imagine it's going to do much. Let's have a look. But it is, and it's for the Canadian dollar, so it's not going to do anything for...
Yeah, I was about to say, like, we had nothing past 10 this morning for EU.
Well, we've got past 10?
9. Nothing past 9 for you, UK time.
Oh, okay. We've had nothing previously either.
Yeah, like there was one little thing. I think it was a yellow folder.
Oh, okay, fair. I've disabled all yellow folders. I was going to say, I've not seen anything.
And then most of this afternoon's news events for US and Canadian dollar is all either yellow folders or a handful of orange folders. So unlikely to be massive drivers of the market.
Yeah, no, exactly. So we'll see. I can't imagine that's going to do anything, but just to make you aware, there is orange folder news out for the CAD. EU, man. EU's a bit of a funny one. Now we've consolidated. Now I've marked out the consolidation. We got the breakout of the consolidation, pullback, a small consolidation here on the 5. GU, I thought was going to buy at one point. We came up to this zone here and then dropped. And now we're just... It's like a massive consolidation. It's like a massive trading range if you think about it. So I'm going to mark out that high up here. I'm actually going to delete these now because these are invalid because they've already been disrespected or respected. They've already like proven their purpose. They've already done what they need to do. So delete them. Same goes here. Delete them. It served its purpose. This here is serving its purpose because it's a current respected zone. This here again currently serving a purpose, being the current high. This here serving a purpose, being a low potential for an area of target if you're selling. And then mark out some areas here.
The nice thing about having a day like today, which is let's call it a consolidative, very flat day, is that generally it is followed by, if there is a break, then it is generally a break for the rest of the week, kind of. So if you have a consolidative day Monday, and if Tuesday has a break, then you know that in general for the rest of the week, you have some sort of bias that you can try and build a trade idea around.
Yeah, I don't know. I haven't tested that too much. I did used to look at the 4-hour for the weekly outlook ahead, see it like high points, low points, supply, demand, areas of imbalance, potential liquidity points. But now I just sort of think, I'm just going to have a look at the day. I'm just going to see what the day's saying, and I'm just going to deal with whatever the markets give me. And it seemed to work a lot more for me. I just seem to be a lot less stressed in the market.
Yeah, in general, I think the idea of trying to be forward thinking and trying to look way further ahead than the realm where you're trying to take your trades. In this case, if I take it on the 15 and on the 5, I will only use the higher time frame as a means to say, okay, are we close to a support area or a resistance point? Or is there a reaction that happened over the last week or 2 weeks or whatever that is of note, that I need to take note of? But other than that, I generally just stick to what the day is showing me and what the previous day showed me, kind of.
Yeah,
so
nice.
If last week Friday was bearish and today is consolidative, then I would want it to be more, or to break more towards the bearish side. But if it doesn't and it starts pushing bullish, then I know, okay, I have an area of support for the next time the price comes back to, and to see if there's a reaction. That's generally the idea that you can have with something like that, instead of like now this is EU, this is GU on the left side. We had this reaction here on Friday. We haven't even come close to it. And then price attempted to push higher on Tokyo, which just absolutely failed, pushed lower, pushed back into what was the higher point of Tokyo and started reacting lower. So I'm looking for price to come down to the support area just to come and test it, because this reaction that we had off of it last week Friday was a lot stronger than the reaction that we had, for argument's sake, from this high up over here. Or not that high, sorry, this high over here. The reaction down here was a little bit slowed. Then we had a bit of consolidation during the last vestiges of Tokyo, and then we had a break, a nice strong break lower, took out the low, wick down, and started pushing up again. I know my drawings is a little bit wonky, but the idea is that we're currently have a high point up here, which has multiple touches. So touch 1, touch 2, and then a drop, a massive, strong drop lower. So in general, I would want to see this drop take out some sort of low, and we haven't had that. Wick down. The reaction from here was strong enough to push it back into the Tokyo session, but nothing saying that it wants to like shoot up from this point. So to me, this bottom section here is still in play. This is what I'm looking for. I would like price to come and test this bottom section here and then decide what it wants to do. So price come down, something to that regard is what I would like to see. Whether we're going to see that, I don't know. Whether we're going to see any sort of move to that point, I don't think it's for us to know immediately. But if this is the 15-minute candle, it closes in 3 minutes. If it closes not too bearishly, I would like to enter a trade potentially with the idea of aiming for this bottom point as a sell, for argument's sake. But it's going to depend on how strongly this bearish movement is. On the 5-minute, it looks good. It does look good for a continuation lower. So maybe wait for it to come and test the 10 EMA or the 20 EMA or this little band here, and then see how it reacts from there to try and take a sell. Otherwise, if we have this little area over here, which it's just broken through, if it closes lower than, then I know it's probably going to go bearish. But if it doesn't, if it closes above this little, or within this little box, so say somewhere over there, and then starts pushing higher, then I could see us potentially moving a bit higher, closer to at least this portion here.
Yeah, nice. Yeah,
it's all dependent on how price is reacting on specific areas that have showed reactions that are outside of the norm, let's say, like stronger reactions than what we've been seeing the whole day. The whole day has been a little bit up, a little bit down, a little bit up, a little bit down. I mean, the day started here. We tried pushing above it a little bit. We pushed much lower. We attempted to come higher. We haven't really made a lower point. So it all depends on what happens within this next hour to 2 hours to see whether or not we're going to have the slow movement lower down or not. Personally, I'm looking for sells.
Yeah, nice. On I'm not looking at anything on EU. Like I looked at EU.
No, thank you to EU.
Oh, sorry, no, I meant GU. EU. I think I prefer EU than GU.
I don't like EU at all. EU is way sideways. Yeah.
Yeah, but that's what's quite nice about it. EU is like really sideways. So if like I'll bring my chart up now, you can see that EU is super sideways. So yeah, super sideways right up until this point here, and then it's decided, it's made a decision, consolidate.
But look out of it.
So
it's broken, but where's the follow?
Yeah, true that. Yeah, no,
and it immediately started consolidating again.
Yeah, that's the worrying thing is when it breaks, you want to see a break in decision. You don't want to see a break in then nothing.
Yeah.
However, GU looks quite. See, it's this price action here that I don't like on GU.
The overall, that looks nice.
How does that look nice? It's not found a direction. Okay, ready? Watch.
You drew your really lovely area of interest, which was a little bit of consolidation and then a beautiful break out of it. Okay. What happened? Price came all the way back into it, slowed down, and then broke nicely lower. Isn't that like just the perfect?
But it hasn't broke, because if you think about it, so we've got area A.
Okay, the top one is area A. Price came back into area A, slowed down, and then started drifting lower. You could have formulated a sell from that area A as an example.
Where's the confirmation of the downtrend? How do we know it's not going to break through area A?
That beautiful big red candle just after the slow.
Okay, here.
Yeah.
No. This candle. This candle would be if you traded like market and like market entry, then fair. That this would be a beautiful confirmation. But there's been nothing here that says to me, okay, maybe now, we've got consolidation breakout, so maybe now would actually be quite a nice time to trade. But no. No. Like if we no. No. If we pulled back to here, like look at this. This would have probably, had I have not been trading gold, this would have been a trade for me, I think. So we've got pure consolidation. And then we've got breakout, consolidation, breakout, pullback, 1, 2, 3 wicks, big engulfing confirmation candle, entry, continuation downwards, stop loss at the high up here. I mean, having said that, okay, stop loss at the high up here, I wouldn't have been exited from this trade. I'd now be back in profit. But nonetheless, it's just an ugly trade. Ugly trade, ugly price action, boo to GU.
It's not the greatest movements at the moment, but there's opportunity there. And if the opportunity was in line with your plan, then take it. If it wasn't, then obviously fair. Then don't try and force something.
Yeah.
But for me, GU looks better than EU. As of right now, I'm not loving the flatness of EU. Yes, it seems as though it wants to start moving lower, but what are we aiming for? There's a support area at roughly 116.46, somewhere around there.
116.46.
Yeah, 116.46-ish, which is 5 pips away. So we're having a break of a little area of consolidation. We're not having like real volume. We're not really having the momentum. And we're so close. Yeah. We're so close that I have to see it do something at that point. But that's just me. That's just the way that I'm seeing it.
See, okay, now looking at the 15-minute, it's a shame we got these two candles here. But if we can close this on the 15, pull back up into this area here, I'd be selling that hard.
I'm agreeing with you that we have a little bit more bearish bias on EU than we have bullish bias. So I don't know if I would be selling it super hard, but I would play with it a little bit. I would put a small order in if it lined up with my strategy. Like right now, this is on the 15-minute on GU. Drop, base candle, continuation, drop.
Yeah, for you, yeah, this is textbook.
That's why I'm saying for me, this is.
Yeah, I could fully agree with that. Like I love your strategy. Like, dude, I genuinely, I say that with passion. I love your strategy. You've explained it to me. We've jumped on a call and you've really gone through the nitty gritty into it, and it's an amazing strategy. And I've even considered implementing parts of it, but I just don't know if I could do it. But maybe it's because it's not my strategy. Maybe it's not because I'm in love with it. Like you need to, it's your strategy. You need to be in love with your strategy. You need to care for your strategy like it's your own, because it is. And a lot of people don't look at that when it comes to trading. They'll try any willy-nilly anything and then never find consistency. Whereas your strategy, you're passionate about it. You're like, I've tested this. This is my bread and butter. This is something that I've made myself through what I see in the markets. And I can see what you see. But because I'm not you, because I've not created it and I don't know the ins and outs of it, I don't know its personality, I couldn't confidently trade it. Like right now, like you should be in a sell in theory, or you should have already hit TP, or like that is a textbook sell for you right now. Whereas for me, I can identify that and I can be a great analyst, but I wouldn't be a good trader when it comes to it, because I'd look at that and I'd be thinking, yeah, it's nice, but it's not me. And it's not me because I don't know the personality of the strategy. And what I mean by that, I know it's like, oh, you can't give an inanimate object a personality. There's actually a name for that in English language. which I can't remember. So if anyone studied English language, I'm sure it's language, not literature. If anyone studied like A-level English, like let me know. There's a word for giving an inanimate object a personality trait or an emotion. It's not pathetic fallacy, because that's when the weather has an emotion. I don't know. Someone let me know. And yeah, so however, like I really do look at the markets as almost like you'd look at a partner. GU has its own, and I've argued live on
explaining this. Yeah. Okay. Sorry, I was just like partner. I was like, hold on, wait. I need to go into the box that's got this information. Okay. Okay. Yeah. Continue.
Yeah. So, like, I've actually argued with my brother live on stream on LLTF about the markets having their own personality types and their own personality traits. Now, the markets, like for example, cable, GU, the GU has its own personality trait. It has its own market. It has its own brain, and that's because different people trade it, different economic sentiments, different fundamentals. They all, yes, okay, you can trade it very statistically, you can trade it very data analysis, but there's a good chance that you are not going to have identical data on GU strategy if you use it on the yen, or if you use it on EU, or if you use it on the NASDAQ. They're all going to be very slightly offset. They're going to be very different. So therefore, they have their own personality traits. You know how they act. Now, EU and GU, I've spent years and years and years studying how they act. And for me to now implement a strategy that I am comfortable with and I know works in that personality trait, very much like having a partner. I'd never go up to Rich's partner and speak to her with some of the jokes that I may speak with my partner, because I don't know how her personality trait is. I don't know how she reacts to certain things, certain subjects, for example, when she's in certain emotions. You know what certain emotions mean because you know the personality trait of your partner. Trading is the exact same. Yeah, and that's why I say don't copy people's strategy. It's really like, yes, implement part of people's strategy. Take onto consideration that people may have a strategy that you want to implement into yours, but always have your own strategy, because that is your you're not going to go up to someone and say, get to know my girlfriend and let me know what they're like, and then I'll go and date them. It's like, no. You need to find out what your future girl is like. You need to get to know that bond. You need to understand how they act for you to have a true successful relationship with that partner. Same goes in the markets. You need to go out and have that experience and develop a personalized strategy to you to have a successful relationship with the currency pair or asset that you're trading.
Yeah, personalize it.
Yeah, personalize it to you.
Yeah,
it's
like
got to be personalized.
I know your strategy as well. Like I've seen you trade your strategy for months and months and months.
Well, yeah, dude, we've known each other for years. Like even you as a viewer.
Yeah, but what I mean is like we've had in-depth discussions about your strategy, my strategy, and how we view the market. And the way that we view the market is surprisingly similar.
Yeah.
But the differences comes in with like what I use for Confluence, what you use for Confluence, and also how we want to interpret certain confluences as well. Like for argument's sake, what you would determine as a breakout for me would be slightly different. And I think the two of us do trade very similarly. So you would also sometimes look for a sell when I'm looking for a sell, even though we're not always like aligned with what it is that we see. And that's fine. It's like, it's not to say the one is better than the other. That's not the point.
Oh, no, we already know that. I'm a lot better than you.
Yeah, that's true. That's 100% true. That's why you came second and I came, what was it, 16th.
God damn it.
No, but the point is being that the way that I see the market and the movements of the market, the two of us can have hour-long discussions on what it is that we think is busy happening. And we can come to completely different outcomes and say, this is what I think, done and dusted. Or we can have the exact same conversation and be like, yeah, no, I agree, sells. Where are you going to sell from? I'm going to sell from here. Cool, that sounds good. I'm going to wait for this to happen. There we go. There's a sell. Done. So
Yeah.
I like that about us. I like that about our market discussions.
Yeah, our market dynamic almost.
Yeah. Like you see the market as some sort of personality, it's got a feeling of itself. It displays its own version of emotions or whatnot. Where I view it as, dude, this exclude the emotion. So like there's completely different like views of it, but it comes
almost quite opposite.
Yeah, but it comes to the same end.
Yeah, exactly.
I think that the cable is weak because I don't know. And then I will be like, I agree with you, but not because the cable is weak, but because the dollar is strong. I don't know.
Yeah, no, exactly that, mate. Yeah, exactly that. And it takes a lot of traders quite a while to learn that. And people will. I've seen like not young lads, but like green traders. I don't want to call them young traders because like your age means nothing. Look at me now. I'm like I read this thing on Instagram, on social media, and it was, don't ever feel like you're not doing good enough if you're the youngest person in the room. So like I put a lot of pressure on myself being a young entrepreneur, and I look and do research and think, oh, I'm nowhere near where I should be. I need to be so much further. I got to be this, I got to be that, I got to be that, I got to be that, and I give myself tasks to do. I'm like, why aren't you achieving this? And then like I look at myself and I'm like, dude, even let's take the 5ers stream for example. The 5ers. I'm the youngest trader on the 5ers, but I'm a host.
Yeah.
I'm not a guest. I'm not a co-host. I'm a host on the 5ers. I've earned my way here. I'm only 24. Same goes with my company. Me and my brother, we're founders of a company that encourages discipline, psychology, fitness, health, wealth. 90% of the members in there are 30 plus, 40 plus. I think our oldest member is actually, how old's Dave? I'm sure he said he's like in his 70s.
I think he's getting close to the 70. I'm just not sure.
Whereas our youngest is 21. Our youngest is Sam at 21. Yeah, so guys, age means nothing when it comes to progress. Age really doesn't mean anything. But the most important thing is understanding that it's about experience in the market. It doesn't matter when you start. And so going back to my point, I was watching these green traders, so they were newer traders, and they were actually arguing over the same point, very much like me and you were discussing now. I think cable's going to go up. Yeah, it's because we got a strong pound. Well, no, it's because we got a weak dollar. No. The pound is strong. The pound is strong. Nah, mate, don't listen to me, man.
It's a different interpretation of the same data.
It's like, bro, like you're arguing over the same point. Like you both agree cable's going to go up. Like, chill out for a minute. You one's going up, one's going down, but the asset class that you're trading is going up. Like you're both on the same side. Like listen to each other, and like that's the luxury about the market. No one's wrong until you hit stop loss, and then sorry, guys, someone's wrong.
I think people are way more concerned with being right when it comes to certain subject matters and whatnot. They care so much more about being right or proving someone else wrong than actually trying to grow and build another person. Like, let's say hypothetically, you and I'm your student, and all you are trying to do is just prove to me that I'm not experienced enough. At the end of the day, I'm not going to grow because all I'm being taught is you're wrong, you don't know. Yeah. So a person like that, like the two people are arguing with each other, one of them should step back and say, okay, you know what? The why in this case doesn't matter. We both are in agreement that it's going in one specific direction. What are we going to do about it? And then in that case, the two of them can maybe start growing a bit together in that, where I feel like people like that are just way too concerned with being right. And the funny thing is, that over infatuation with being right, you can see that in their trades as well.
100%. Yeah, definitely.
Trading
really does
only
expose
focus on being right, and whenever a trade goes against them and they're proven incorrect or wrong, they can't take it. They can't handle the loss. They can't deal with the fact that they were proven wrong, as an example.
Yeah. Like,
So,
don't get me wrong. No one likes to be wrong. No, I don't like to be wrong.
No, nobody likes being wrong.
Yeah, no one wakes up and goes, I hope I'm wrong today. No,
unless it's about something really negative in your life, in which case I really hope I'm wrong.
Unless you think something bad's gonna happen, then dude, I hope.
Oh no, a meteorite's gonna hit my house today. I hope I'm wrong. In that case,
if that's the case, you need to internally look at yourself and why you're so negative. Dude, chill, talk to someone. It's okay. It's not that deep. But yeah, no, it's no one likes to be wrong. But I like what you said, and I'm going to build on that because what Rich Wells said to me a few last year sometime gripped me. But I like what you said. It's the anticipation of being right, but the preparation for being wrong. I'm paraphrasing. I'm putting it in my own words, but you basically said that you want something to happen. According to your plan, it's going to happen, but you're willing for yourself to be wrong.
Yeah, and be ready to be right, but be willing to be wrong.
That's it. Yeah. That's it. So it's such a
be ready for it.
Yeah, and it's such a strong phrase because in trading, look, we're prepared, we're ready for this to be right. It's going along with all our trading plans. This has to hit TP now. It's statistically proven that this must now hit TP. Data backs it, stats back it, your strategy, your testing, it all backs it. But then it goes and hits stop loss. It's like, right, okay, well, what now? You've got to be aware that can happen. Yes, your statistics will show that in the long run you may be profitable, but your statistics will also show that you did take losses along the way. And sometimes I think a lot of people need to realize that and market experience. And that's why, back, I used to be a horse rider. So in the equine world, we used to call them green horses. Most of the time they'd be young horses. So green horses are horses that lack in experience. So if you for example, I'd be jumping on other people's horses and competing them. So if someone says, right, well, could you could you compete my horse? Can you take him over this jump, that jump, that jump? He's very green. I'd be thinking, oh, okay, it's a horse without experience. So when I talk about green traders, I'm not on about profitable traders. I'm on about traders with lack of experience. And you can be the best trader in the world. And like I said, I've had students, I've taught people how to trade, and they've been brilliant traders. They've given me all the time under the sun. They've worked behind our lessons, after hours. They've done back testing. They've done so much fantastic work. And then they said, well, I'm profitable. It took them 10 months or 11 months. It was something really, really good. It was the quickest I've seen. And they're like, well, I'm profitable. I'm now successful. I'm like, dude, that's sick. Show me your stats. And he showed me the dude, he was profitable. I said, nice. You're going to hate the next couple of months. He's like, what do you mean? I was like, you're going to have a really shit time in the markets. And I'm going to guess it's going to be within this year. And this was going into 25. He goes, well, why would you say that? I was like, because you've hit profitability. He's like, what do you mean? I was like, you've now hit a stage in the market where you're now ready and matured enough in your trading to go out into the real world, not demo accounts, not back testing, not forward testing. You're now ready to go live trading in the market and go through all the seasons, go through all 4 quarters. And do you know what he said to me a couple of months later? Well, I've just hit a drawdown period, 2 or 3 months drawdown, or 1 or 2 months drawdown, whatever it was. He blew a couple of his accounts in a row, and he said, well, this sucks. I was like, I told you. Because you're now ready for it. You're no longer, you've got psychology in. So we went from teaching him strategy, teaching him statistics and data analysis to, right, now let's understand your psychology. Now let's understand what we're going to do with your psychology and how to wrap your head around being a profitable trader, because they're 2 different types. And, that's why I say about a green trader. You can be the best trader in the world, but you'll still be a green trader because the markets show you, experience. The markets, sorry, not show you. The markets give you experience.
Yeah, the market is a mirror. And it's not you versus the market, it's you versus yourself.
Yeah.
And the market is just going to show you a version of yourself that either you're going to be comfortable with or very uncomfortable with. And if you're very comfortable with it, then you might reach profitability faster than the average. However, the flip side, if you are very uncomfortable with what you see, it gives you something to work on.
Yeah, 100%.
It shows you a side of yourself that maybe you were just not, you just didn't notice it. Like, for argument's sake, greed. Greed is a very good indicator of where you are in your trading journey. If I started trading today, I want to make the most that I can in the shortest time frame. That's greed. That's me feeling like I have a time, I have a time limit on this thing that I'm doing. The more experience you have in the market, you realize I don't have to make X amount of money in one day. I need to make that X amount of money over a longer time frame. So the more experienced you become as a trader, the more the reduction in your greed levels. You're still going to have greed. It's just going to be for different things or in a different way. But like the amount of greed that you experience is going to start reducing. So it's still there. You're still going to be a green trader, and even if you're 15 years into trading, because there's going to be 100%. Every day is going to be another experience. It's not just to say because I've experienced it once, now I'm a master of it. No, you've experienced it once. Now you need to start really like working on it, like really emphasizing it, and building that foundation, saying, okay, I am this kind of trader, and I'm doing it every single day, as an example.
Yeah, nice. Just having a bit of a catch up with chat, guys. We went on a bit of a tangent then, so do apologize, guys. We will catch up with chat now. Marcus saying, I only traded Euro USD for the last 3 years. Been trading 10 years in April. Dude,
nice,
that's
mate.
awesome, man. Yeah, that's awesome. Fair play. Are you full-time or part-time trader? Like, what's your trading journey like? I'm 56. Rest my case, man. It doesn't matter. I was at an event last year. It wasn't this year. I think it was last year. And I was in London speaking. And some guy, he must have been 50s, maybe 60s. I'm sure he said he was in his 50s. He was like, you're so young. I was like, yeah, I know. Thank you. I am quite young. Okay. And because I'm so used to being negativity around my age. And he said, no, it's amazing. But like, am I too late? I was like, dude, what do you want about? And he was like I'm in my 50s now. I'm heading to 60. Like, is it too late for me to start trading? I was like, no, it's never too late for you to start trading. As long as you're willing, okay, you've got, time will, make you a better trader. And obviously, depending on how long you plan on trading for before you want to retire. Like, if you plan on trading into your 80s, dude, you got years, you got 20 odd years. So don't stress over it. And, I believe it doesn't matter when you start, as long as you make a start. I don't believe in the Monday attitude. And what I mean by that is, I'll start Monday. Shut up, man. Start now. Like, what's that? You're going to work an hour a day. Oh, I'll start working an hour a day on Monday. Dude, how many hours left in this day? Oh, like 6. Then do an hour. Grow up. Do it now. Don't do it tomorrow. Don't do it Monday. Start it now. Force yourself to go now. What's the name of your community? Well, Pooley, it's called Apex Brotherhood, my friend.
Yeah, I don't know if Pooley's heard of it before.
Yeah, Pooley, I don't know if you've heard of it, mate. All you have to do is look at the last month's candle. It says it all. Yeah, man, literally that. Price action doesn't lie. It is what it is. 100% agree with you. Price action is what it is.
It's just your interpretation of price action that changes.
Yeah, absolutely. When I do something wrong, I have learned what not to do next time. This is another stage in my, obviously being new into and being green into the entrepreneurial stage. It was tough for me because I learned through negativity. I learned through lessons, which is the only way to learn, in my opinion. And someone can tell you how to do it, and you can do it and it'll be successful, but you need to understand how to deal with the negativity side of it. When if you're a baker and you're baking fantastic cakes, and the next minute something goes wrong, you need to know how to deal with that going wrong. Like maybe your pastries haven't risen, or maybe your cake tastes like garbage. You need to know how to deal with the next few steps into rectifying that mistake. And the same goes in my trading. I was very much like you, Mark Cox. I loved getting it wrong, because getting it wrong meant that, okay, even if this happens again, I know how to deal with it quicker and more efficiently, because it will happen again. Losses, over trading, psychological pitfalls, it will happen again, guaranteed, without a doubt. It's how to deal with it on a more efficient level. That's what makes you a better trader, not making sure it doesn't happen again, because unfortunately we can't do that, because there's so many unpredictable factors in life, let alone in trading,
over whether or not it's going to happen again or not.
Exactly.
What we can do is how we react
to it,
and what we do
100%.
afterwards. Like that same the exact same comment that you just had up now about, if you've done something wrong, you know what to do next time. There's a caveat to that. There's like a little asterisk to that as well. Not every moment is going to be the same. So the mistake that you make now, you've kind of like figure out, okay, I should have done this afterwards. The next time that same probability pitches up and you do the exact opposite of what you did the first time, the thing that you've learned, doesn't necessarily mean that you're going to have a different outcome. Because every moment is unique. And it's like adapting and realizing that every moment is unique, but there's certain patterns that come up and you're like, okay, when this happens, I usually have this reaction. What if I have this opposite reaction? I try something completely different this time. And then you start seeing, okay, there's a little bit of a different result, but it's still, you were still wrong. Your trade still went against you. But
100%. But that's why market experience comes in.
Every time that happens, it's a new little bit of experience that's going to start boosting you up to the next level.
Yeah,
I just
exactly.
want to add that.
Yeah, do 100% agree. And that's why, market experience is such an important factor in your trading, is because no matter how good of a trader you are, you haven't experienced it going wrong once. And then you're like, okay, well, I can efficiently deal with it next time. Then, like what Rich said, it happens again. You're like, oh, but this is different, but only marginally, but I got a different outcome. And then it happens again and again and again and again and again. And before you know it, you've got such a large data folder on this similar thing happening that you can take an average and think, okay, well, this happens more times than not. I can try and react this way and just make it more efficient in that way. It's about understanding that, okay, this is a reoccurrence. I've seen this happen 72% of the time. This happened. It's about building a data folder, and it's about building the probabilities, of something happening.
Yeah, like how do you eat an elephant?
One piece at a time.
One bite at a time, mate. Like you have this task ahead of you. You're not going to work through all of your trading issues in one day.
No, literally.
So
yeah, literally. Pog saying William's camera is so blurry. I almost saw my future.
It was blurry, but it's now no longer blurry.
Is it not? Can you
not anymore? No.
Can you see my really handsome face?
Dude, I can see whether or not you brushed your teeth this morning. That's how clear your camera is. You can? Oh my god!
What? Oh my god! Victor, where's your mask, man? I need it. Oh man, I love it. That's funny. Oh, that's good. As long as it is clear now. What do you mean you can see? What do you mean you can see your future? I don't understand that. Is then like it's blue? Oh, that makes it. Yeah, I got it. Got there. Yeah, took a journey, but I got there.
Almost over.
I caught it back here.
I was like, oh, it's almost gone.
Get back here. I get you. I'm my own worst critic, but it helps me so much. I always ask myself to explain why I'm taking a trade or managing it in a certain point. At a certain point, almost like I'm confirming with myself within my strategy. Dude, I talk about internal self all the time. You know, you need to align your internal self with your external self, but more importantly, guys, this is something I swear to the high heavens, get it tattooed on yourself. It's the only stupid tattoo I will ever allow someone to get, and I want it to be the word why.
You can't control me, William Davis.
I'll do what I want.
Will get it because.
Yo, wait, the word because or the word why or the word why because?
Why because?
Wait, because why?
Why?
Why? Oh, wait, because. Okay.
Why, comma, because. Full stop.
Yeah. But no, seriously though, guys, the word why solves so many issues that I managed to have a conversation with my partner and my brother and my family and my friends all by saying just one word. They called me for help. They said, well, this, that, and the other, A, B, C, D, went through the alphabet, went through the issues. And I said, why? What do you mean, why?
Sound like a toddler, mate. Why? You're not allowed to touch that thing.
Dude, honest to God, it solved everything. I was like, why? They're like, what do you mean, why? I was like, why are you going to do that? Why have you done that? Why this? Why do you want to do this? Why that? Oh, just ask why, followed by the action you have done or are doing or consequences. And I promise you, you will be able to answer and give yourself the reason. And it's so important to do the self-work, like you've just, like Smithy just referenced. Ask yourself why. Why am I taking this trade? Don't take it. Why am I taking this trade? Because I want money. Don't take it. Why am I taking this trade? Because it follows my plan. Why does it follow? And then you say, oh, okay, good. I like that answer. Why does it follow your plan? Not another bloody why. Yes, why does it follow your plan? Because it's got my confluences. Why? What confluences? Why? Oh, well, this confluence.
I feel like it for people that are not confident in their trading, that question why is going to send them into a spiral.
100%.
Then they will start questioning why did they do what they did, and
100%. But that's what I mean. If you're going to ask yourself why in spiral, why have you done it? Why have you? Do you see what I mean? Yeah. Why is such an important question in life? Not just in your trading. Why did you have pizza? Because I fancied something fattening, or I fancied something yummy. I fancied a treat. But why? What are you trying to achieve? You're trying to lose weight. Why did you have something that you know?
I want cheese. I want cheese and dough and goodness. That's what I want. Stop asking me why. I don't know why. I just want it.
Yeah. Why did your partner leave you? Why?
Because did you do? Wanting pizza.
Because I kept eating pizza and I'm fat.
Yeah. No, before we get onto too much of a tangent, I feel like we're way behind on chat.
Fair point. Yeah, guys, I'm sorry. We got tangented again.
What country are you from? I'm from South Africa, mate. I'm a South African trader. Will is from Wales. He's a Welshman.
Cymru. Dude, I feel like I got way too much energy right now. I think it's because of my coffee. I haven't even finished it yet.
Dude, I've had one cup of coffee today. Don't talk to me about coffee. I don't want to hear the word coffee.
You're going to relapse when speaking to me about coffee.
No, water. I'm only drinking water. Guys, everybody in chat, I set myself a challenge this week. Well, over the weekend. I was in Rich Wells's Coffee with Traders.
Ironic.
a Discord call on Friday, and he was talking about 75 hard. It was a thing that he did like a year or so ago, where he does something very difficult for an extended period of time. One of those things was, reading 10 pages of a non-fictional book, doing 2 exercises a day, or 45 minutes each, at least 3 hours apart. I'm doing a variant of that. And one of the things that I've decided to do was to cut down my coffee intake. Because before my morning stream with Will, I have 2 to 3 cups of coffee in the space of like an hour and a half. So I'm cutting out coffee, or I'm cutting down coffee to 1 a day. And I've already had my 1 today, and I'm feeling a little tired.
A bit giddy, like. But it is good, man. It's good to have a tolerance break.
Yeah.
I've managed to cut down to 1 coffee a day. I'll have. So what I'd usually do is on our Apex stream, with the Brotherhood, I'd have 1 coffee, and then I'd have another coffee here with the 5ers, and then I'd have another coffee at lunch, and then I'd be up to about 3 coffees a day. Now, with the Brotherhood stream, I'll have an entire bottle of water. With this stream, with the 5ers, I'll have a coffee and probably half a bottle of water. And then at lunch, I'll have a green tea with honey and another bottle of water. And then in the evening, I'll have another bottle of water. Like, dude, literally 1 coffee a day, a green tea, and the rest is all water.
Yeah, I don't want to hear the words coffee. Green tea, I'm fine with. Tea, I'm fine. I had a cup of tea, but it was rooibos, so it didn't have any caffeine in it. So,
okay, fair. Okay, I was gonna say, dude, let's go. I tried saying that to my brother. He's gone completely teetotal.
Black coffee, yes. Black coffee, yes. But rooibos has got zero caffeine in it. It's caffeine-less.
Okay, fair. Yeah, fair. William, your interview inspired me, bud. I also only trade using price action. Recently become profitable, and I'm on my way to passing my 2nd phase with a strict plan. Dude,
love that. Strict plan.
Love that, man. Absolutely fantastic. Massive congratulations. The only issue is this round of applause is a bit too long. I wish I could cut it, but then I tried to cut it the other day and it just went again. I thought, oh my god, just doubled it. I was like, oh Jesus. Yeah. Okay, Mark Cox is full time. Awesome stuff, dude.
Nice.
Congratulations. Yeah, that's sick, man. I'm trying to catch up. With chat. Yeah, I'm just gonna. Dude,
cool! The lure guide is from South Africa as well.
Oh, nice. Pog not blurry anymore. Sorry, William. It's alright, man.
Maybe I should put my glasses on and then I can say, it's not blurry anymore. Oh,
it wasn't blurry this whole time. I just forgot my spectacles.
Yes.
Oh, darling, get me my monocle. I want to look at William's handsome face. Oh, yeah. Oh, no. Oh, dear. No, I'm taking them back.
I take back what I said. Take my glasses.
Darling, take him away. Take him away. I don't want to see him no more. Dude, price is garbage. I just realized, again, we've just gone degenerate again. Guys, I'm sorry. We'll go back to the charts now.
We actually went longer than 1 minute of actual talking about proper stuff rather than just going absolute degeneration.
Dude, I mean, we did get the breakout on gold, but it's not what I wanted. So I just to give you a bit of information here. I'm forward trading this at the moment, forward testing. I did draw out a trade idea. So this was my buy, this was my stop loss, and this was my TP up here. So I mean, technically, I did take it, but I didn't like it as an overall. I didn't like it enough to trade. It would have been like a B setup. And I want an A+ setup. This wasn't an A. It wasn't even an A setup, so it was a B setup. So I just drew it out. However, I will be able to actually take a look at this. Let's have a look. I did have a look at US30. There we go. So US30 sell opportunity. We've got a nice area here. Consolidation, imbalance. Looks like probably about 50 fill on the fib. And then pullback. Nice wick up here. And now it's starting to move down. So TP1 here, TP2 down here. Stop loss at the high. Forward tested that because I'm not hugely confident on my US 30 strat. Not during London anyway, like in New York a bit more. GU. GU is quite nice. We didn't get the pullback to where I would have liked to have entered in a trade had we have entered in a trade. But now that we got a break and close below, if we get a pullback, if we dribble on back up to a nice pullback up here, then I think
pullback now, it's probably too late, I think.
You reckon? Let's have a look in the higher time frame. Let's go into the hourly.
Yeah, like
I don't know. I think we could chase down here.
I think we can, but that's going to depend on New York, what New York wants to do.
Yeah, true that. Yeah, it's not London's problem anymore. It's New York's issue. Yeah. Euro USD.
That lure guide says he's got a 39% win rate. All my friends have a hard time wrapping their heads around the fact that a 39% win rate can be profitable. I trade 1-3s and 1-6 RR setups.
Oh, nice.
It started making sense. Now, that's the lovely thing about having a high risk to reward ratio, is that your win percentage really doesn't matter. For a 1-to-1, you need 50%, and we're excluding slippage, commission, and spread. We're excluding that from the equation. If you're just purely going on, I risk 1 to gain 1, you need 50%. For a 1-to-1.5, you need 40%. And it just starts going down from there to the point where you can have a 39% win rate and still be profitable. I mean, a 1-to-6, I think you need something in the line of 14%. Just 14%, and then you're profitable. So the win rate,
as long as you're okay with losing that many trades, like as long as your psychology can take it, you know. I worked it out in my head the other day, and I thought to myself, it's almost difficult not to be profitable if you're strict with yourself. If you give yourself a set plan and you're very strict with yourself, it's very difficult not to be profitable. If you think about it and use the probabilities and do the maths behind it and think to yourself, right, okay, getting chasing 1-3, got a plan, strict plan, back-tested data, follow it. Okay, yeah, it may take you a few months, may even take you a couple of years, but that's nothing in the grand scheme of things. Like, you imagine a 1-3 hour trade. You imagine taking, I don't know, you imagine a 50-50 or a 50% win rate, and you take 3-hour trade, you're what, up 5%? Yeah, you'd be up 5% with a 50-50 win rate, taking 2 trades a month, at a 1-3 hour. You're up 5%. Let's say it takes you 3-4 years to get to that stage. 5% on a 100K account is $5,000. Okay, not taking into consideration profit split and all that.
Maybe we're not talking about all of those things. We're just purely talking about the risk to reward.
Purely analytical on the risk to reward. Dude, that's 5% a month. That's $5,000 a month. That's what, 62 grand a year, something along those lines. My maths is not maths in.
5 times 12 gives you 60.
Oh yeah, 64. 65.
What did you say was the 5K a month?
Shut up. Okay. I told you my brain doesn't brain under pressure.
Ballpark figure. Close enough. 60.
I said 60, yeah. Well, I'd actually said 65, so it was actually technically 13. No, it was one more. Yeah, maybe there's an extra month somewhere. I don't know. Maybe you're getting an extra month. Yeah, you've got a bonus month, maybe. I don't know. Yeah. Dude, you know, the worrying part was it was technically a 5 times table. I came up with 64. Like that's what I mean. My brain doesn't want a brain when it comes to maths. When you ask me on the spot, it'll just throw a random number out there.
It's all good. Don't worry about it.
But yeah. So what's that? 60 grand a year, a 5% return a month. If you can do it consistently, you know, if it takes you 4 years to get there, dude, it takes you 4 years to get there. That's incredible returns. You know, however, if you get a 30% win rate, you know, I've just proven how shite I am at maths, so I'm not going to do the maths behind it. But guys, seriously, the maths really can work out really probably in your favor, and it's really not that difficult if you follow a strict plan. Also, guys, over 200 of you watching right now, which is incredible. I haven't refreshed the YouTube page in a while, so let me just refresh it now. We've got 86 likes. Guys, I'm going to refresh it one more time.
200 people and only 86 likes.
I'm going to refresh it in 5 minutes time. So at 10 to 1, I'm going to refresh the page, and I want us to surpass 100 likes. I want us way above 100 likes. So guys, smash the thumbs up, and if you are new here and you haven't subscribed already, make sure you subscribe to the channel, guys. It goes a long way for us. So make sure you subscribe to the channel. And like I said, 5 minutes time, I'm going to refresh the page, and I want to see well over 100 likes on the stream. So that would be absolutely sick if you guys can do that. Yeah, I saw a comment. You guys. I have 3 coffees before the open, dude. I'd have the shakes.
Yeah,
like my mouse would be like that. I wouldn't be able to click anything.
Yeah, my problem is that I used to run on coffee. Coffee was like, if you had to draw blood, it would be coffee and then laced with blood. It's not blood laced with coffee. It was the other way around.
Yeah, right.
Rooibos and tennis biscuits, yeah.
I have just tuned in. William and Rich sounding funny talking about monocles. What have I walked in on? This is my brother, by the way, guys. So the co-founder of Apex Brotherhood. So he's the coaching, the fitness, and the well-being side of things. So big welcome to you and everybody. He doesn't tune in too many of my streams. He's always busy doing other bits or admin or doing all sorts of garbage. The not so fun side, whereas I get the fun side. I get to chat to you guys. So big welcome to Ewan. Loving us talking about monocles.
Well, I want to be open here. I did take that trade that I marked out. However, I didn't take it the moment it presented. I waited for price to come back into it. So normally what I wait for is price to start showing a direction, multiple, in this case, bearish candles in a row. Then I look for what I call a base and then a continuation. So the confirmation of this downward movement. So drop, base, and then confirmation drop. The trade was entered right here. If I just go to the 5 minute, I can just show you. I didn't enter exactly on that one. I waited for price to go a little bit lower and then came back into it. It activated. I've got the there we go. I'll switch that off. Had the limit order. It tapped into the limit order. Candle closed bearish. Printed back into my entry point, break even plus a little bit, and then started pushing lower. And now it's just struggling a little bit, but it's still looking good. I am still at least a few pips in profit. So I will wait for this one to completely play through. Right now, it's just wicked off of my little bit area of interest. So I want to see how it closes in relation to it. Everything still points towards the downward, but if I have to cut this one short, I'll do that. But as it is right now, it still looks good for me.
Yeah, nice. I was just seeing Judd's. I wish there was a button for mildly likable.
These guys are...
Ouch.
You guys are just meh.
They're okay.
But to be fair, having a like button and a dislike button is like so black and white. Like where's the color in between?
Yeah, who even puts a dislike button, man?
Yeah, like, I'm gonna watch the whole stream, but I'm not gonna like it. I'm going to dislike it.
Yeah, it's like, dude, if you don't like it, I'm imagining you're gonna dislike it. Why put a button there? Like, can you imagine it? Like new streamers, like you imagine if we weren't thick-skinned and like we weren't. Like, I'm used to streaming. I've been streaming for
yourself. I'm not thick-skinned.
Yeah, you imagine if you were as feathery as Rich below me here. You know, like, oh, I'm gonna dislike your stream. Like, what? Like YouTube, what are you thinking, man? Like, why would you put a dislike button? What an awful thing to put.
I'm gonna pitch up again tomorrow. Watch your stream and not like it.
Bro.
That's the kind of person I am.
Bro. Yeah.
I don't get my engagement. I refuse.
MGN, we need a meh button.
Yeah.
Yeah, I mean, look, YouTube has a thumbs up button. It has a thumbs down. It may as well have like a sideways thumbs button. Like, come on. Like, if you're going to put a dislike button, you may as well put a meh button. Like, meh. Mildly likable.
Mildly like, I like that. It's like we need I'm mildly entertained by this.
Yeah, I don't love it, but I don't hate it. I'm just sitting here watching.
Yeah, I'm not against it. I'm just not for it.
I like it enough to watch, but not enough to like and support it. Well, for the rest of you guys who think that we're just a little bit more above mildly likable, gives a fat thumbs up. And make sure you subscribe to the channel. Like I said, it does go a long way, and we hugely appreciate it. Even if you think that we're mildly likable, still gives a thumbs up.
So there was a question about gold.
No one dare diss my brother, Rich. You're gonna walk over here and limp back. Yes, Pooley.
Yeah, Pooley's my my uncle.
Your home.
Denabar is asking, I think we should sell gold above 4,400. Question, why? Because price doesn't balance yet and it needs to reach 4,400 now or someday. So wait for a big short coming after liquidity above 4,400 or 4,420. So 4,000 is quite a bit higher. So the highest point that we reached here was 4,381-ish. And from there, that was a start. 2, 3, 4 attempts to try and break higher than 4,381. So to say 4,400, that's a round number, but it struggled to even get above 4,381, for example. So the rule of round numbers is one thing, but the price action here, what liquidity do you have above 4,400? We've never reached 4,400. So there might be a lot of people that have put their stop orders somewhere up over here for sells, but as of right now, there's nothing here. We don't have previous price. Price has never been in this area previously. That's what I'm trying to say. So there's no liquidity just yet for buys, but there is selling liquidity, which you saw with the multiple tests upon this point, and then the reaction going lower. So price action, yes, I agree. There is still there's no up end. Like we can go and test as high as we want to at some point. And I honestly think we're probably going to still carry on going bullish into gold. There's no reason for me to think that, we're going to start turning massively bearish. I feel like if you just go on the daily, you will see that on gold, price has been so bullish, and then every now and then we have 1 to 2 days where it pulls back. So massive rally, one day it's a pullback rally, a bit of consolidation, another rally, pullback, more rally, pullback, rally, pullback, rally, and so on and so forth. And we're just on one. We had a bearish day last week, Friday, and now we have another potential bearish day, but we haven't even tested last week Friday. Let me just switch on that again. Last week Friday's low, and we're still drifting. So to me, gold can still potentially go higher and take out last week Friday's high, printing new highs. But I don't think that there's necessarily the idea of liquidity above 4,400 because we haven't reached it yet. Like, what liquidity would be there? It would be selling liquidity. Yeah, just wanted to mention that.
Yeah, nice. Also, guys, it is indeed. It has been 5 minutes. It's actually been nearly 10 minutes. And guys, I've refreshed the page and we've got 118 likes. So, guys, really, that's more like it. That's not from 80 to 118 likes. That's more like it, guys. Really appreciate the support. Make sure you smash that sub button as well. Now we got 13-ish thousand until we reach 100k subs on the YouTube. So guys, absolutely smash the sub button as well. We're trying to see if we can get to, or who's I think it's Dirk that is predicting 100K by the end of the year. So we got what, November? We got 2.5 months, or 2 months and 10 days. 2 months and 10 days until we get to the end of the year. So guys, smash out that thumbs up and subscribe and share it with everybody. I mean, like, share it with your mothers, your brothers, your sisters, your uncles, your actual neighbors, your cat, your dog, your nephew, whoever wants to watch it. Make sure you share it against them. You like that, yeah.
You and your little rap, your mothers, your brothers, your uncles, your aunts, your brother. It's like,
yeah. Yeah, have you missed that? Yeah, I haven't done it in a while.
To be dead honest, I've missed it because you used to do it and you stopped.
Should I do it properly? Ready? So everybody who wants to see us a little bit more, make sure that you share it with everybody. And I'm talking your mothers, your brothers, your sisters, your uncles, your extra neighbor, your cat, your dog, your nephew, whoever wants to watch the stream.
Your cat, your dog, your neighbor. Oh, mate, I love that.
Man, we're finally getting a breakout on gold. So I've just hit my theoretical TP on the trade that I drew out, which was my initial TP from earlier on. So I wanted this move earlier. If we can get a pullback now, I think that'd be pretty cool. I may consider entering a long position. But we're heading into that lunch hour now, and I tend not to want to trade too much after 1 p.m.
So normally I would say that the big move on gold happens during New York, but it's actually been more during Tokyo that we're having like the real like big moves. If we can break and close above this box, I do feel like there's a potential for us to come and reach here. Not necessarily today, but potentially in Tokyo or leading into Tokyo session tomorrow. So it hasn't really been moving the way that we would have wanted it. You have an upper end, a lower end, an equal high, an equal low, an equal high, and now only we're starting to no longer make an equal low, but an actual higher low than the previous one. So if we can break through here and then come back and test it and then push up, then I think we can definitely come and test this bearish area of mine, this bearish base of mine. That's what I'm thinking.
Yeah, nice.
But not necessarily now during New York.
Mm-hmm. Dude, I'm so annoyed with gold.
Tell me about it.
So annoyed with gold. It looks so nice. And the thing is, it was still within a range. Like, there was still internal structure. That's why I didn't take it. And I'm watching it, and hindsight, I'm like, oh, I could have hit TP. But, you know, everything's all hindsight.
Okay, but hold on a second. Why did you not want to hold it?
Why do I not want to hold it? What do you,
yes.
You mean, why do I not want to place it? Because I didn't place the trade.
No, the trade of this morning. Your gold trade of this morning.
Oh, no. I'm not on about that trade. That would have hit stop loss. I'm on about...
You're talking about... okay.
I'm on about this trade here.
Why didn't you take the trade?
Because it was in internal structure. So we had current high, current low, consolidation. I wanted to see a breakout of the consolidation, but first I wanted to see a breakout of this current high or previous high, and then a pullback. So
okay.
I wanted a pullback after this candle.
So why are you annoyed?
Because technically we did get look at it go. Because technically we did actually get a really nice breakout here and a pullback back into the zone. The only issue is this was too high.
Now take this whole thing that you just said now and throw away the idea of I'm annoyed, because the
100%. Yeah, I should never have been in this trade. Had I been in this trade, it would have been a bad win. I would have still won, and I would have still had profit.
Yes.
And I'd be sitting there like, yeah, come on, guys, I'm the best. Yeah,
come on, mate. Buy my course.
Buy my signals. I'm top G. Or what color's your candlestick? What color's your P&L?
Yeah, what guys? What color's your Bugatti?
Yo,
guys.
Hello, Jonatan. Good, mate. Not too bad. We're just talking about Andrew Tate trading gold, apparently.
All right.
So my trade is about to hit, or was about to hit stop loss. It's busy pulling back a little bit.
Nice, mate.
All right, so what are we trading? Well, first of all, how's been your weekend been, guys?
It's been good, man. I cleaned my car after way too long of not cleaning my car. So, I mean, I proper scrubbed the outside, scrubbed the inside, hoovered it. So I got back in my car like yesterday night. I went to pick some food up. I was like, oh, so much better. It's like getting. Nice. Have you ever like you know when you jump out the shower and you make fresh bed sheets?
No, never done that.
You never jumped. No,
never had a shower.
Never shower. I know. I struggled to speak to my brother about that. He gets the same issue.
Sorry, continue.
And then you like jump into fresh bed sheets, so you got a fresh bed, fresh shower, everything feels all good, dude. That's how I felt getting into my car last night. I got into my car and I was like, oh, that feels good. Nice clean car, fresh smell. It was amazing.
Nice.
I went for a park run and I got a new personal best, and my legs did not feel like I was hit by a truck, so that's good.
I thought you were about to say I got a new personality. I got my hopes up then.
Yeah, you wrote something about that. You were going to do a 5K?
Yeah, it's a 5K. So
nice.
Got it down.
How many hours did it take for you to do 5K?
Sorry?
How many hours did it take?
Okay, it took an hour and 96 minminutes.
It was almost like that genuine of Richard. No. Actually, didn't hear what you said.
My personal best is 36 minutes.
Wow, that's cool. Nice.
Nice,
good stuff, guys.
Didn't pass out once or cry, so win.
Oh, dude, if you don't cry, like passing out, fair enough, I'll give you that one. But if you don't cry, then you're just not running hard enough.
You know, I'm one of those people, and I'm really trying to not be, but I make a lot of sounds. You know, I'm running, I'm in the gym, I run, I make a lot of sounds, and I thought, you know, I thought I make sounds because it's a way for me to kind of get into the right mindset and the right mode, right? But then I watched this TV series, and I watched something on TV. They were like some performance coach or whatever, and they're like, oh, look at this guy, he's just making sound because he wants people to like notice him and how much he's struggling. I'm like, wait a minute,
you attention seeker.
I'm like, god damn, I gotta stop making all of these sounds.
I'm struggling to breathe right now and I'm dying. That's why I'm making sounds. This is not pretty sounds, hey, look at me. This is please help me sounds.
No, but then I thought about it. I'm out running and I'm like, and you know when you're out running and you're running past someone, like you're gonna run a little bit quicker, you know what I mean? Like you're running on an empty road, and then all of a sudden there's someone appears and you're like, you start to pick up the pace. And then I noticed like, not only do I pick up the pace because I want to obviously show this person that I'm like hardcore, I stop making these ridiculous noises. It's like, look at me. I'm not only fast, I'm really struggling, and I'm really So I'm just an asshole. I gotta stop doing that.
It depends what mile you're on. Like if you're on if you're after 10 miles and someone's looking at me, I'll be like, "What the hell are you looking at?" You know, it's like, "Stop looking at me. You're not running, are you?" Down the pub.
It also depends on how they approach you. If the person that's running suddenly that appears just behind you doesn't look like they're wearing typical like jogging clothing, I might just speed up, but I might just get very loud.
Yeah, the worst part is like I go to this gym and it's a roid head gym. You know, it's a powerlifting gym. There's trophies up there, bodybuilders. You know, it's a proper Iron Man gym. And I'm not a very I am, but I'm not. I'm not a very vocal person. But if I'm really struggling, I was doing chest yesterday, and if I'm really feeling the burn, I'm like,
But yeah, it helps, doesn't it? Like, it helps.
Yeah, no, it does. And then, like, the worst thing is, like, going on your theory of you're just trying to get attention. Like, dude, like, I'm trying to get as little attention as possible. Like, I'm there in front of roid heads. Like, I look like a twig to these people. Like, this people I got like
with like just like not getting noticed or getting noticed. I'm just like
these guys have got
thing that's
like
all
abs on abs, like shoulders and biceps on biceps. And they're like, please don't notice me. Like, don't look at me. I'm like, don't look at my.
The way I imagine myself, like, I'm not running and I'm all like, I got the headphones on. I'm all into it. I got like some nice music on. I'm like all into it. I'm
You're
running.
A strong, powerful woman.
Yeah, and it feels like I'm just running on clouds, and it feels like I'm very light on my feet, and it's just I can envision myself just looking like this super David Goggins type of athlete, and then imagine like a clip where you have that perspective of myself, and then you have the perspective of the others that I'm running past, and they're like, seeing someone almost, falling, running, and almost falling, and is making weird noises. They're probably just thinking like, who the hell is this,
You think you're light on your feet, you're like, oh, I'm running, I'm jogging. And then, like, you take the headphones off and you're just stomping, like, flat foot, like, bump, 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 bump.
Yeah, I can see that.
Yeah.
Because
I
gotta show
you.
you. I gotta show you
when I was
this.
on the bike. So, like, I used to be a triathlete, and I used to love cycling. I used to love the bike. So I'd be cycling up we used to call it Killer Hill. I mean, it was one hell of a hill. And we had cleats on our bike, so we'd be pulling the pedal up whilst pushing it down. So you're really using all parts of your legs. And I'd have my headphones
like regular cycling.
Oh, yeah.
You mean like regular cycling?
Well, no, regular cycling, you can't pull the pedal up because you're not attached to the pedal, you muppet.
No, you don't have to pull it up. You lower with the other leg. It's cyclical. Down,
no. I mean, so as you're pushing down, you're pulling up for even more speed and power.
That's literally what you do when you're on a bicycle.
Yeah, when you're cycling.
Yeah.
No, because you're not attached. If you pull your leg up, you're just going to pull.
Have you tried putting one feet after the other in front of each other very quickly?
What's it called?
And then you're running. Have you tried like that? I think
Yeah.
You cannot tell me that you've sat on a bike. When you sit on a bike, you push. You don't push and pull. Otherwise, you're going to pull your foot off the pedal unless you're attached to the pedal, which are called cleats.
Yeah, that's
just come on. There's got to be some like TT cyclists or any form of cyclists that have like trial bikes or have like cleats on their bike or like triathletes. Someone try and like help me out here. Like someone knows what I'm on about, surely.
So I used to do a lot of mountain biking, and when you're actually attached to the pedals, you do push and pull.
Yeah,
but you don't want that.
Yeah, so it gets you. There's more power and there's more speed to get you up the hill. And anyway, moving on.
I had my gear a little bit lower, and then you've got like your gear ratios are right, and then we can see that William is not a real cyclist, guys. Come on.
But anyway, like I remember, like I'd have my headphones in, and for some reason my headphones stopped, like the music stopped, and I was like working on my breathing, and I thought, like I'm on the Tour de France over here. Like, come on, like. No one can compete with this. And then, like, my music stopped, and I was like, like making some revolting noises. I'm like, oh my god! If anyone could hear me right now, they'd be thinking they'd call a paramedic. They'd be like, this guy needs to be hospitalized, So yeah, no man, I know how you feel with the exercise.
Because you're trying to push and pull with your feet, where if you
shut up, Ray,
it would have been so much easier.
Guys, I want to show you something. Last week, I had one of my best trading weeks in a very long time, and like last Friday, I closed a couple of trades on gold, so I made almost 10% last week, and not everything is actually in here, but I actually managed to bring my 40K, and this is on actually one day. So I managed to bring my 40K hype growth from minus 2% drawdown to scaling it in 1 day on gold last Friday. Bit of a trading run in many months. So what I did this weekend was started planning, not to give it back. Everyone's been there, right? You have a very good run, then next week or maybe even the next day you give it back. So I spent the whole weekend kind of working on because I find that one thing, if I want to learn something, one thing that I do is I try to learn by teaching. It's a very good method to. So, for example, in these live streams, if I want to learn a new trading strategy, I try to explain the whole process and teach people that process. So now I'm working on an article on how to manage your psychology when trading, and I was so. I want to show you this picture, okay? Because this weekend I was sitting on my, I think it's called porch, and and I have this in front of me. Look at that! Isn't that pretty cool? So I have like the northern lights and like all the stars in the sky, and I'm sitting there and I'm like working on this article, reading, yeah, man, it's pretty cool, man. So that was a wonderful, wonderful
Was that
weekend.
actually a photo you took?
Yeah,
dude, that's insane. That's incredible view.
That's pretty cool, man. Yeah, nice. With that segue from one wonderful view to the next. Look at the green sky.
Yeah, mate,
that's beautiful.
Even the house looks so nice in the background.
Like, you're destroying my segue. Listen. From this green, beautiful view to another green, beautiful view. Welcome, Derry.
Where's the green, beautiful view? I'm just looking at Derry.
I thought you were going to pull up your profit sheet then, your profit and loss.
So did I. But, it was like beautiful green. Let's show everybody.
I'm still waiting for a green beautiful view.
Oh, well, that is, well, the shirt is good though, isn't it? That's beautiful. It's green.
It's a very beautiful jumper. It's just a shame it's on an ugly model.
Nah, man.
Wait, I'll correct you there, Will. A big ugly model.
I'd say big and beautiful. I'd say big and beautiful, man.
Yeah.
If somebody's bigger than me, they're big and beautiful. I will not tell somebody that's bigger than me that they're ugly.
Smart move. Anyway, oh god, on that bombshell, guys, I'm off. Thank you so much, everybody, for tuning in and listening to me and Rich have our mix of degen and value on Conversation Street. So, guys, thank you so much for joining. Like I said, awesome stuff from 80 likes to 118 likes. Guys, we want to keep that momentum up. Absolutely absolutely smash the like button and sub to the channel. Guys, come on, there's 100k for the end of the year. Come on, let's do this. We got this. I believe in it. Guys, if you are new, like I said, your mothers, your brothers, your sisters, your uncles, your next door neighbors, your cat, your dog, your nephew, your goldfish, whoever wants to watch the live streams and participate and take part in the streams, then make sure they subscribe to the channel and smash the thumbs up. And for that, I'm off.
All right, thanks, man.
Nice one. See you later, guys. Take care.
Cheers, Will. I'm also going to take a quick break. I will be back in a few minutes. I'll be with Gary, so we'll be back.
You can also be back in 45 minutes to do the last hour if you want.
Yeah, that's also in a few minutes.
Oh, okay. Yeah, okay.
All right.
All right. Thank you,
mate.
All right.
All right. Cool. I'll see you guys just now.
All right, there. You're looking awfully concentrated.
I am. Yeah, I am.
What are we looking at? What? I mean, we have to talk about gold. I'm looking at potentially going long here on gold. Man, it is freezing in here. My heating has so I have this in the house I have this heating pump, which is it's not like a fan. It's like a pump where I don't know what it's called, but it's like takes the heat from the ground, and that pump has failed, so there's no heating here. So I'm running on like electrical radiators that I've placed a little here and there, and need to pay $15,000 for a new pump.
What?
Yeah,
Whoa.
that sucks. So I applied for a loan at the bank, and they're asking, it's because I have my own company and everything. They're asking for all of these, like they need. So I've been sitting all day, is doing accounting for the company and sending all of that in. Yeah, it's freezing out here. I'm gonna have to have like. Gonna be sitting in a jacket here soon.
What's the temperature outside with you, John?
It's not really that cold. Like today, it's not really that cold. It's like 5.
Still cold.
But I mean, it's not too bad. I mean, usually around. I mean, at nighttime it gets to -5, and when you don't have any heating inside, it is freezing.
Yeah, it's
like,
cold.
yeah, it gets really cold. So that's yeah, that sucks. But it is what it is. Luckily, I made like on the scaling of the account and trading yesterday, I made 5. Actually, across the accounts, I made 7K. So that it's pretty insane. Like I need the money to, you know, to buy a new one, and I make 7K on gold in 1 week. It's like, dude, it's insane. It's like I'm not gonna say it's free money, but it's like I got the payouts, and I'm like, oh man, when things go well, man, I love trading. I love trading when it goes well. It is such an insane feeling to just be able to click a couple of buttons and like you go long on like what's actually this trade here, the 4.65 hour trade that made me everything, because I went a little bit too big on the risk. I actually risked 2% on this account, so I made obviously you do the math because I am terrible at that, 9.2% on this trade alone. Jeez. And that's, you know, that scaled my 4K hypergrowth account, so I'm now at 80K, and then I have other accounts as well, so I made about 2-3K from those accounts as well on one trade on gold, and that's yeah, man, I love it when it's actually working. So what I'm thinking of gold is I'm not so certain that it is the top on gold. I mean, everyone that's been on social media or particularly Twitter must have seen all the posts and engagement farming on why this is the top for gold and it's going to break down. But I mean, there's not really a huge difference between this move and like this move right here. So what I'm looking at here is for gold to continue higher, because if we add the 4-hour moving averages here, we see that gold on this move has almost every time hit that 20 EMA. It hit the 20 EMA here. We're going to get a 4-hour candle close in 41 minutes, and I want to perhaps get in on a, I don't know, it feels like the move is probably already happened, so I might miss that one. I feel like this might actually be that breakout move, but I want to look for a potential retest of this area. Might not happen because gold is very volatile, and once it starts to move, it's probably not going to come down and test that area, so I might be a little bit late on that. And now it really is taking off here.
Yeah, it's flying.
Have you traded gold any?
Have I traded gold?
Yeah.
When I first started, I hate it. Hate gold.
That's a lot of
often, John?
Well, I have traded it during this run because you know it's just such a powerful, strong move to the upside, and I want to get in on the. But within this whole area, I didn't really trade gold much. But I feel like you want to follow momentum. You want to follow that when there's a market, when there's like very strong momentum, you kind of want to get into the market. By the way, guys, we're not used to seeing Derry here on Mondays, right? Not used to seeing Derry on Mondays, but here he is, and he's gonna start streaming here with us more often on every day of the week except Friday, if I'm not mistaken. So it's gonna be really cool to have this this time of the day to pretty much be your session. It's gonna be you as the main guy, and then we're gonna have Victor, we're gonna have Pedro, we're gonna have myself. So I'm really looking forward to that.
That'll be good. It'll be good.
Got a question from Jamie. You mentioned you copy trade from your master account last week. What trade copy do you use? Recommend for master slave account setup. Used STT before, but asking so STT is probably Social Traders Tools. Okay, so I use Traders Connect, and then they stopped offering MetaTrader accounts, so I switched to Social Traders Tools. But now I've seen that Traders Connect have opened up access to MetaTrader 5 again. So I'm going to go back and use Traders Connect. That's also the company that Griff is working for. So Griff, who's online with us here on Tuesdays, he works for Traders Connect. I also want to support his company, which is it's a very good one actually. It's a very good copier. So I'm going to go back with that one. I've just canceled my subscriptions to Social Trader Tools, and we'll switch to Trade Connect. I also use one which is called Forex Solutions. That's also a good one. But I like Traders Connect because they have a nice visual dashboard and everything. It looks good.
John, do you know your journal, your tracking there of your trades? What was that? What company was that? Because that looked like a good one.
That one is Edgewonk. Have you heard about it?
No, I haven't heard of that. I usually use Tradezilla.
Right. So this one is Edgewonk. It's we've got a good relationship with the founder and CEO of the company. He's been on here a couple of times showing the structure. It's a very good one. It's Tradezilla is or Tradezilla. It's a good one. It has a very good way of automatically importing all your trades. With Edgewonk, it also automatically imports from MetaTrader. You have to set it up. It's 5 to 10 minute extra work to do that, but it works. But I like Edgewonk because it has more in-depth charts and all of that.
I'll look at that one.
Definitely recommend checking that one out. So I have looked at the markets over the weekend, and my main idea for today was gold. Okay, and it was basically this structure right here. But now, and I actually thought about entering a trade. Earlier trade, probably should have entered that breakout on the 1 hour, but the problem is I've been so busy today with taking care of the accounting issues that I've had. But I did look at this very good looking ascending triangle on gold, and we can look at the measured move of this one right here. Let's make sure I'm on the log scale. Yeah. This would be the measured move, and the breakout has already happened right here. So I would look at the measured move of that triangle breakout be around this area. This is the trade that I'm looking to take on gold. Now there is a lot of bearish sentiment on gold, so there is the possibility of, if we're gonna get a top, we might see something like this. But I do think we are potentially going up to test this area again. Let me know, guys, in the comment section. Are you looking at looking at gold. Yay Trade says gold to break 5K, but it's average to be around 4,250 to 4,400 are my thoughts. Okay, break 5K. We got 5K being all the way, wow, all the way up here. Okay, so breaking 5K, yes, I think it's very possible in the next, let's say, I guess in the next, I'm just gonna say 6 months, around that. It could be 3 months, could be 9 months, but around 6 months. Yes, I'm thinking 5K long term, maybe even 7K if you look at the recent moves that we've had. And then you're saying 4.250, which is around this current area for. So basically, you're saying going to be ranging around here. I think that is likely, definitely. So if I'm going to take a trade here on gold, I want my entry to be probably down here. Or this one. So the important thing here is to make sure that I have a high enough risk to reward for this trade to actually be a valid idea. I mean, the idea can be valid, but I want to make sure that if I'm going to risk money on this, I want to make sure I'm actually making a decent amount of money. Do you have a specific risk to reward you're looking for when you're trading?
I always look for nothing less than 2, but usually like 3, 4 risk to reward. Like if it's anything less than 2, I won't bother. But always first, I'll look for a minimum of 2, and then I'll partial usually at about 3R. A minimum of 2, partial at 3, and then let the rest run to liquidity points. But 2 is always my minimum.
What about you? I like that. Well, I think for me, I'm not very focused on risk to reward, but I would definitely say that, yeah, 2R or above makes sense. The issue I'm having with something like gold is I'm trying to look at the behavior that we've had previously whenever we hit this area, let's say the 20 or the 50 mil, like basically these dips right here, and I'm trying to figure out what happens when there's a consolidation and a 4-hour breakout. And if you look at each of these dips, you'll see that this 4-hour breakout never got retested. This 4-hour breakout did get retested. This one did not get retested, and that one did get retested. So there is, and this one also got retested. So there's definitely a probability that this level will get tested again. And then if you look at what price did after testing the level, it never really went that far down. So you'd say that whenever price comes down and consolidates on the 20 EMA or on the 50 or below those two, you never come below the EMAs again after a confirmed breakout. So if you look at price action here, that structure looks very similar what we have right now. Now I'm trying to see, I'm trying to find the trade on that pattern repeating itself. All right, so we got a comment here. First, we got thoughts on GBP USD. Are we going to take a look at that one? Marco says any trade should be 99.99% prep and 1% actually making it. So that's going to be, that means
I like that.
that's 100.99%, by the way, but whatever. So proper prep prevents poor performance. Yes, definitely, 100%. It's trading is all about and it's also what you do after the trade. Like you prepare, then you take the trade. But I think one of the most crucial point is also what you do after the trade, because it's all about like you make a plan, you execute on the plan, but then you better stick to the idea. You better follow along with that idea. A lot of times we close the trades too early. Like for example, the trade that I took. Which one is it? This one right here. I mean, the only reason why this one hit TP, and I'm going to say the only reason is because I went to bed like here, somewhere around that area I went to bed. And then I just let the market do whatever, and I woke up with a scale account. If I would be awake here, I would have taken profit. 100%. So it's what you do between entry and exit as well. It's, you know what Trader Dante, Tom Dante says, I'm not going to repeat it because I want to get banned, but trading is all about entering the trade and then making sure that you do not F it up in the meantime.
Pressing the buy and sell, that's the easiest part. That is the easiest part of it.
Exactly.
I'm currently in a Euro USD short.
All right, let's take a look at that one. Let me switch over to your screen so we can look at that one.
Currently in this short is just 1 hour rebalance. I'm waiting just for this low to get around. So there's a 1 hour rebalance back to, for the ICT guys here, a change in state of delivery into that fair value gap. And from a 15-minute perspective, same thing again. You've got the 15-minute fair value gap here, back to that change in the state of delivery, which is reacted from, and then got my entry then on a 1 minute from the change in the state of delivery here. We close below that, back into that fair value gap, and now look to take out that 1 hour low. But we'll see how it goes. Currently running just under 1 hour in profit at the minute.
Nice, I like that. Okay, so EU short. Yeah, let me see if I can.
GU, someone just asked about GU. GU, I'd expect to follow from a 4 hour perspective. It has rebalanced again. So what I'd call a change in state of delivery after we've manipulated a high back into this fair value gap here. We then get change in state of delivery or structure shift back into that. We tested that and now looking for GU to be taking this low out short term. Before then, we obviously rebalance to what I would call equilibrium, so 50% of this price leg here, which would tally up with thereabouts of manipulating that low back into the fair value gap, and then maybe higher prices from there. So I want to see this low get around before I can look for any longs. I can't remember who it was asking about GU there, but that's my thoughts on GU. How do you see with that upcoming news? Yeah, so that's what I'm waiting for. With GU, I just took EU because it obviously aligned with everything I look at. Hour lines up with the 15 minute, the 15 minute lines up with the 1 minute. So all price actions telling me bearish to go and take the low that I want to see get manipulated before looking for higher prices. Gold, you've missed, John. That's going. Did you catch it, John?
No, I'm not in that trade. That I think gold is gone.
Yeah, it's gone, isn't it? This is messing around slightly as well. Let's see what happens with this.
Rasu, I'm currently talking a little bit about talking a little bit about gold with LJ, and LJ is in gold. Apparently, he entered right here, and is looking for a similar take profit as mine. And so I think, yeah. So this is where LJ got in, and I think we are. Yeah, it's too late. I think it's too late.
Yeah, that's flying.
I think yes. I think I might have to let that one go.
What's the news? No. Okay.
Right. So gold. What else do we have that might be of interest today? You see CAD having a nice bounce right here, but I think that is gone as well. So I feel like the momentum, we're getting some nice momentum here. Probably started in the early hours of the London session, and yes, we got Euro AUD. I like it. Has broken the somewhat of a broken trend here, but let's look at the daily. Also, could potentially be at the range highs here, so maybe not great idea. No, I don't like that. Do we have any news today?
I just checked. Nothing at all. No.
My internet is very slow, and I read some reports on some Amazon some Amazon servers have
there was a lot as well. Zoom, Google Meets earlier had the same thing, all at the same time. They were down as well. I don't know if it's related or it was strange.
I think it is. I think it's a big.
Yeah.
They say it's a cyber attack. Not sure.
I couldn't get on Zoom for an hour or so.
I think this is a very good comment as well. I've learned that it pays to sit on our hands until you are certain. Yes, absolutely. And I feel, I'm writing this. I'm working on this article that I will be publishing as a newsletter, and I'll make sure that I'm gonna make it available for you guys in here as well. I mean, it's just a free newsletter where I share all my ideas, but I'm gonna make sure I link it here because I think it's a very good article. I'm also gonna do I'm also gonna start doing live webinars with you guys, probably on Fridays. We're starting this new product here at the 5ers where we're going to do educational webinars. So instead of just doing live trading on Fridays, we're going to be doing webinars, live webinars and pre-recorded webinars, like really dive deep into certain subjects like trading strategies and trading psychology and things like that. And I think one of those presentations I'm going to share my whole my whole routine for it all started with this book, right? The trading in the zones. It all started with that, and from that idea and from the ideas in that book, because that's a very, very good book. It basically talks about trading psychology from a theoretical point of view, but not so much from a practical point of view. So I've started looking at, I mean, the information in that book is golden, but I've started looking at processes that I can use to apply the theories in the book in a more practical way. And there's a few other books that I've read that fits very well with this book, and that is, the first one is Atomic Habits by James Clear, and another one is a book called the practicing Stoic, and then there's a book about NLP, which I can't remember now. My brain is just not working today, apparently. And I think it's the what's the name? It's like the ultimate guide to NLP practice or something like that. So if you take all the practical applications from these three more practical books, and then you apply the thinking framework from Trading in the Zone, you've created a very good framework for you as a trader to set up your routines and your daily habits to more easily tap into that flow state of mind that is very important when you're trading. That's the whole idea and the basis of that article, and I'm going to try to create a webinar from that. I think that's going to be really cool. Really look forward to getting that set up.
It's such a good book for just general life and trading. I love that book. Read it like 3 times. It's so good. And then when you put the things into place as well, like compounding the small wins, what a positive effect it has. But then if you start compounding the small losses as well and the negatives, what effect that has on you as well. It's such an eye-opener, that book. I loved it.
Yeah, it's really good. It's especially and the thing is, it's you read it and it's like, yeah, well, this is obvious, isn't it? Like, how come this is the first time I hear this? And the book, I think a lot of the big ideas and really good ideas, they're simple. They're simple, and when you understand it, it's like, yeah, of course, this is how it's supposed to be, you know. Things like, you know, simple things like the like habit stacking, right?
Yeah.
Where you
take the trash out.
Yeah, exactly. Take the trash out or brush your teeth, whatever. I mean, if you can start with, if you can like anchor your habits, start with something you do every day. So for me, for example, that is every Monday to Friday, I drop my kid off at the bus. So I walk with him to the bus, and that's the start of a long habit stacking routine, right? So I walk to the bus, I drop him off, and I go on my morning walk. Then when I get home, the next habit is to make coffee. After making coffee, I plan my day. And then the next habit is the first list of the planning goes into meditation and mindfulness. And then it goes into market scanning. And then that sets up the whole day for to be in the right type of mindset. And if and all of that just starts with walking to the bus, right? So I don't have to think about all the other things. I just have to think about, if I drop my kid off at the bus, I know that I'm going to follow along with all of these other habits. And that's really cool.
And it's things you don't realize that you do subconsciously that even affects, like you said, it just starts with that walk, and then instantly, subconsciously, everything else falls into place. It's crazy. It's a good
that's really good. Right, so we do have a lot of volatility today, but I can't. All right, so we have something interesting happening on GBP CAD, because we had a massive breakout last week, and as we can see from, yes, this could still be a fake out, but we got like a test of resistance here, higher highs, higher lows, break above, retesting a very interesting area right here. So in 16 minutes, the candle is going to close here. So what I'm watching here, potentially from the perspective of this chart, would be this idea of buying this retest.
That looks nice. I like it.
I'm just thinking if there's any long-term potential in this idea. So we are currently trading right there. So I want to look at what price did over here. The next logical level would be probably here. Maybe up to this level. So if I can have a decent risk to reward up to that level, it might be worth taking a trade here. And I think the risk to reward is actually fantastic here. Because if I'm able to get in somewhere around this area, put my stop somewhere below here, we're looking at a move up here. What would the risk, the fibs be?
Do you use your fibs for targets as well, John?
Yeah, that's what I'm doing now. So I know that there's going to be there's probably going to be I think price is probably hitting the minus 0.382. So if I go into if I have that template here, I don't think I have that one, but if I go into settings and I add the 382, where's that one? Let's add yeah, so you can see that price hit that 0.382 perfectly. And then what I would do is I would target, in this case, I might as well target either the minus 0.236 or the minus 0.382, depending on where the very first where's the very first resistance above price if you go to the left. So we have to go back quite a lot. Okay, so this is the current price, and this is the last time we were trading in here. So we are currently testing this level as resistance. I can put that as 0. What happens if I put that as 0? It's going to go all the way back there. Okay, so that's where price is currently testing, and if we break above this level, we should hit, or I shouldn't say should hit, but there is a possibility of hitting this level. So if I move this one to 0 as well, we should be seeing so we go back to current price and we see the levels right here. That's the resistance we're currently testing, and that's the second one, which is right on the minus 0.236. So that would be that one. And then we look at where, because we're hitting resistance right here, which means we might as well come down. And so we might come down and test this level down here. I want to have my entry down in this region here. That's a very good 3.44 risk to reward. Now, the question is, how much am I going to risk on a trade like this? We're looking for 138 point move. This is where like choosing your take profit and thinking about risk to reward becomes is important, because if you up to this level, that's a 3.44R, and obviously you're looking at that and like, yeah, that's a great risk to reward. But then if you draw the TP down here, I mean, it might be like 30, 40, maybe 50% chance on a large number of trades that this level is going to hit. But if it's a 50% chance that that level is going to hit, there's a much higher chance of that level being hit. So we might say that it's going to be a 75 or 80% chance that that level is going to hit if there's a 50% chance of that level hitting. It obviously that's not how it works exactly, but you could think that price moving a less distance has a higher probability than a bigger distance. So that is then a 1.7 risk reward, which is a low risk reward. But then if the chance of that target hitting is much higher, then your average risk reward or your average profit will be higher. But looking back on the gold example, the one where I scaled the account and I made a lot of money, is this trade right here. I didn't make a lot of money by exiting here. I made a lot of money by putting my TP where there was a high risk but a high reward. So there's a high risk of that level not hitting, but I get a very high reward if it does hit. And I think that potentially would be the better case here. Let's see. What do you guys think in the comments? Is this a trade you would be interested in taking? I'm not even logged into my new accounts. I gotta get all of that set up first. Maybe you could share your screen and walk through some charts if you want, and I can do that in the back end.
Yeah, go for it. I did just see someone ask about EUR USD. Yeah, so
yeah.
Rexel, I'm currently in this short. The only issue is, from what I was looking at, 2 seconds, shorts because higher time frame, or say high time frame for me, the 1 hour and the 4 hour, we are bearish. I want to see this low get ran before I look for anything else. So at least this liquidity point get taken. So then from the 1 hour perspective, we had the market structure shift. We came back into that fair value gap, rebalanced back to that market structure shift, and then pushed to the downside. So from a 1 hour perspective, I'm looking short, which would go in line with taking the 4 hour low out of this liquidity out here. And then 15-minute wise, exactly the same process. We had that market structure shift, back to that market structure shift to fill this fair value gap here. And then we had the reaction from there. You can see the wick, and the reaction we had from there was quite sharp. And then from a 1 minute perspective, it was exactly the same again. I just waited for the shift to the downside, which came here, and then I fill that fair value gap. Really, my stop loss would usually be above this protected high, but because there's no fair value gaps here, I just went a bit tighter just so my risk reward was damaged. And if I went above this high, it's just a personal thing for me. But having said that, from a 5 minute perspective at the minute, it has rejected it, but we had what I would call turtle soup or manipulation. And we had a sweep of the high, a sweep of the low, which could indicate that we want to push higher. So the 5 minutes is the only thing that's throwing me at the minute. But we have come back into that fair value gap, and you can see there, rejected from there. We had this manipulation here, which is a manipulation of that 1 minute high, and then we've pushed to the downside. So hopefully, if we can get a run through this low, I would like to see it go to a minimum of this low here. But at the minute, I'm fighting with what I trade against this 5 minute soup. It's also in a 5 minute buy model, which we've come back. We are testing sort of this area now, which is the inverse. So it's just battling against 1 hour, 15 and 1 short, and then the 5 in between that is put in the buy model. So we'll see what happens. But that's what I'm looking at on EU. What were you looking at, Rexel? Long or short? If you tell me long, I'll switch to long.
I like that. I mean, yeah, it makes sense. I mean, it makes sense. A great risk reward. It's yeah, makes sense definitely.
Yeah, I'm starting to shift now. Hopefully, we can get through that low. And GU should be. Oh, GU's doing the opposite. That's the only other thing as well. The GU's not correlating the best either. I like to use them both. It could just be rebalancing out to push lower. Because again, for GU, for me, I'd like to see this low get around at a minimum. Like I was saying, to rebalance this price leg. We scrap this low, we then put it in the buy model, or what I would call a buy model. Back there's this tiny fair value gap here, which is around 50% of that price range, which I'd call equilibrium. When we sweep that low, we come back at that, and then I'd like to see a push higher. But at the minute, it's struggling. EU is moving slowly. I'd like to see it close below this low. Yeah, close below it. Hopefully we can keep running.
Okay, so I'm going to enter this trade, or at least enter orders for the trade here on GBP CAD.
It's running nicely now. Bringing my stop into above this high to mitigate the risk. 6580. 6580 modified. Other questions left? Fire some questions. I will only take. I'll only make a trade once it has shown a direction. That might only happen in US Open. What is the pair? Short opportunity on GU. I would be very careful of GU. It is rebalancing. Or for me, it's rebalancing at the minute. We could potentially see it short, but the correlation between EU and GU at the minute is a no-go for me for GU. EU's coming back as well. Okay.
Right, so the way I'm trading here, this setup is on my bootcamp account, the evaluation. I'm taking slightly. So the way I trade evaluation is I use a slightly higher risk on the evaluation account, and then I use very low risk once I get funded. Now, it's important to note that if you trade like that, if you go in with high risk on evaluation and you get funded, you're probably going to get risk limit. So hopefully, if you hear this, do not put me on risk limit, but I go in with an absolute max of 2% per trade on my evaluation, and then less than 1% on my funded. The problem with the funded now is like I scaled the account. I got 4K in there to withdraw, so I don't want to trade all that back before I can withdraw more. I withdraw money on Fridays. I need to wait 2 weeks, and I got 4K sitting in there waiting to be withdrawn. Obviously, it would suck if I had a losing streak before making that payout. So I'm going to trade very, very slowly, very lightly on the risk while waiting for that payout.
Most people will continue trading that without doubt and give it back.
Yeah, no. What's up, Richard?
I'm back.
Let's
Had
go.
some lunch.
Nice.
Anything nice, Rich? What do you have? Biltong?
If only, mate. No, it's a bit too. The weather's not that great. Actually, I'm lying. It's always a good weather for biltong. No, I had some eggs and beans and some toast.
Oh, nice. That sounds like an English breakfast or a Welsh breakfast.
Yeah, it's the English in me. So yeah, no, just a very quick lunch, and then good old fashioned water. My bottle of water. Yeah, that's what I had. Have you guys had lunch?
No.
Yeah.
Did,
Chicken.
I was literally about to say, was it chicken?
It was chicken, yeah.
Have you got a chicken farm, have you, John?
No, I just have. I go to the store, get my chicken.
You just like chicken.
I have a store nearby. They sell chicken, you know.
So do you usually go for like a full chicken, like a full carcass, or is it like quarter or fillets?
No, it's fillets.
Ah.
Yeah. And I buy pre-cut. Like I don't have time for that. So to be prepared.
Oh, as in it's cut up already.
Yeah.
Because you don't have time to just take a knife and go tick, 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 and then done.
No, because you have to you don't want the whole chicken. You don't want to hold the fillet. Like you want to cut the pieces that you don't want, and then you got maybe 2 kilos. It takes a while, you know. It's like you do that every day, then you think that.
Yeah.
But then you're thinking why not just buy pre-prepared? You save at least 15 to 20 minutes on that. 15 to 20 minutes every day. Time is money. Time is money.
That is true. Derry, I see you're in a trade, are you?
Yes, mate. I'm short on you.
Short.
Yeah.
What are you aiming for? Because you're aiming for just underneath the liquidity.
Yeah. It lines up with this. This is the 4-hour low, but I'd like to see a minimum take this low. The only issue is, for the minute, is we have had a shift on the 5-minute. We're fighting against it. I'd like to see it run through this, what I'd call fair value gap or imbalance, just to give that order flow shift, but everything else is lying. 1 hour 15. One is all telling me that order flow is shifting to the downside, because I'd like to see this get run, but that 5-minute is holding at the minute. We can see it's rejected from it. I'd like to see it run through this, and then I'll be pretty confident we're going to TP.
Wow, this is crazy. I'm
also in an EU short, by the way.
Oh, nice. There we go. We're going to TP then, Rich.
I don't know. Aiming for just the lows of London.
Yeah, okay.
I haven't marked it up as yet, but I'm gonna mark it up now.
I might have to change career, because I'm looking at GBP CAD and I look at my MetaTrader terminal and it doesn't say GBP CAD. It says GBP AD. I'm very, very, very lucky that the orders didn't fill, because that would have been a terrible trade.
Oh no. I got in on EU at 16,548.
Oh, I got in 5.5. Oof.
Oh wow, so close.
Yeah. Okay. Yeah.
I think isn't this exactly what I said though? I had to wait for 2 weeks to get, because I took a payout on Friday, same day as the scaled account, so now I have to wait 2 weeks. Because I have the money in the account, in the new scaled account, I got the money as credits, and now I have to wait 14 days because the scaled account resets the counter. And the problem that I see a lot of traders do, they scale the account and then the scaling resets the counter. So after scaling the account, you have to wait 2 weeks to withdraw the money. The best thing you can do is just take a break and celebrate the fact that you scale the account. Take a 2-week break, at least from that account. That's the best thing you can do. But I do see most traders, they continue to trade that account, and then they give back a lot of the profits, and then they start panicking that they scale the account, they have a lot of money, and then they start panicking because they're giving back the profit, and then they keep trading while being panicked, and they give everything back, and they blow the account. That's a lot of times you not only give all the profits back, but you actually blow the account as well, that's really, really bad.
Are you in, Johnny? You on that? Wrong.
No, I'm not. I want to see. I want to see a pullback down to this level. I'm hoping that we're gonna get a move like this. So hit this level and then back down here to hit this high. So back down here for breakout. Because now the risk reward is just not really that great. So we'll see.
Derry, when you normally trade, I know that you trade the IC team concepts, but when you trade and you have to draw a stop loss and a take profit, do you tend to have a static one, or is it purely price action? I'm aiming for a low or a high point.
Yeah, always price action, just a low or a high. And what I'll do then is if we get like sort of structure shifts, I'll mitigate my risk. Just because obviously entering on the 1 minute, I'll always mitigate my risk no matter what. I'll move it in so like above or below the next swing high or swing low. I don't trail it, but until I get a break even, I'll bring that in.
Okay, all right.
Yeah, so yeah, for example, like my stop originally should have really been at this high, which I call a protected high. But because there was no inefficiencies up here, I had my stop just at this candle, and now I've pulled it into just above this candle because there's no inefficiencies above that point.
Oh, so you've already moved it now?
Yeah, so I've halved my risk already.
Okay, and then when you initially start your trade, is it a what do you normally risk? Let's say
if I've got an A set, I'm a risk 0.5%. You're on a percentage, yeah?
Yeah.
Yeah, 0.5%. If it's A plus, like this to me, I call an A set because obviously battle against the 5. The structure on the 5 is telling me we want to push higher. We've got the wicks when it comes into, obviously we've had that structure shift and it's coming back into the inefficiencies and rejecting from there. So that to me gives me like an A setup. So yeah.
So you're a little bit more risk then.
Yeah, exactly. So on an A setup, half risk. On A plus, if I've got everything aligning, like all the way from 1 hour 15, 5 and 1 is all aligning, then I'll risk 1%.
All right, cool. That sounds sounds cool.
How much do you risk, Rich? Jesus, that was a tongue tie. Jeez.
How much do you risk, Rich? So normally it depends. So a day like today on EU for me, I'm not the biggest fan of how EU is running at the moment because I generally trade the 5 and the 15. Yeah. So we've had quite a bit of consolidation, and then we've basically come and wicked back into that consolidation point and started moving lower again. This would be 0.25% risk, but I use static take profit and stop loss points.
Okay.
Yeah, so normally it's 6.5 pips.
Yeah, okay.
And 13.5 pip.
GP.
Yeah, take profit. The half on the third is actually 13. I add half a pip just to take up commission. That's it.
Commissions, yeah. Okay.
Yeah. So I get a 1 to 2 RR usually, and I've been doing quite well with this strategy specifically on my personal account. Yeah. I've been averaging over 60% win rate with my 1 to 2, and it's not bad. And I'm averaging about slightly less than 1 trade a day.
Yeah, okay, yeah.
So not
good
bad.
Going, man. Really good.
Yeah, but on my personal one, normally I don't trade more than 1%. The same as I would do with a prop account.
Yeah.
So I trade my prop account exactly the same way I trade my personal account.
Oh, interesting. See, I'm the opposite. I trade complete opposite with them. I risk a lot less, which is a bizarre one, on my personal account than a funded account.
Okay, so your personal account or your funded account would be, I treat it as if it's a personal account. That's what I mean.
Yeah. I get it. Yeah.
Like it's my money, so I'm going to manage it the way that I manage my money.
My money, yeah, 100%.
Even though it's I don't own the account, the prop account. I mean, in that sense.
Yeah. No, I get it. Yeah.
So I had a GU sell here, which I've already removed because it was a loss. Yeah. So this was what I was looking for, and unfortunately, it just didn't continue.
Yeah.
And it just knocked me out. So that's fine. And now I'm in this one right here, hoping to reach this bottom point.
Your entry is almost exactly the same as me.
It's 2 pipettes off.
Yeah, that's crazy.
So the funny thing is I trade drop-based drops and rally-based rallies. So the idea of a drop would be multiple, in this case, bearish candles in a row, followed by a singular bullish candle that does not exceed the size of the bearish candles prior to it. So let's look for another. There isn't any other ones as of yet.
Do you know when you look at a lot of strategies are all the same with different terminology and a different way of looking at it. That's what I find.
Yeah.
Like there's so many like similarities between everyone's strategy, no matter what you trade. It's just a different terminology and a different way of looking at it and different beliefs behind that. It's crazy.
I know Victor. Victor told me that my bases are very similar to his.
They are, yeah.
What did he call them again? Breakers.
Quasimodos.
Breaker blocks.
No.
Breaker blocks, yeah.
Order blocks.
Order blocks. Very similar. What you just marked up there would be what I would call an order block.
Yeah, so I just call them drop-based drop and bases.
Yeah, it's crazy, isn't it? It's crazy. And also, though, as well, you know, there was a student of mine more recently that learnt what I was trading, but went on to another strategy because he couldn't get his head around it. But it was the same concept with a different terminology, exactly the same concept, but someone's like remarketed it essentially. And I said, that's exactly the same. And he's like, it's not. And I broke it down for him, and he was like, it's exactly the same. I said, yeah, it's just different terminology and a different way of teaching it.
Yeah. So the exact same thing I look for, I think Victor is looking for, but he uses much higher time frame versions of it as well, where I just kind of like just stick on the 15 and the 5.
Yeah.
And it's worked for me so far. I mean, obviously you don't have to win every trade, but the ones that I do get, they work quite well. The ones that I lose, I'm fine with it. You know, it's okay.
Yeah.
Like now, I just wanted to show on EU. If I just pull this back, I'll just make that. So there's the drop. This is on the 15. Technically, these two would be a base because the size of these does not exceed the size of the full drop. And then there's the confirmation on this candle. Now, normally these don't run that great. I need a slightly larger stop loss for them. So for argument's sake, it would have to be somewhere over there.
Yeah.
And then it would just be slightly above it. And that's exactly what I was looking for on the 15. But then I would go down to the 5 and I would wait to see, okay, maybe there's a little bit more above it. So you can see on the wick of the 15. So this wick that's here.
Yeah.
Maybe this is large enough to wick me out at this top point. But because I use static take profit and stop losses, I have to be very sure about my entry point. So in this case, I just waited for this on the 5 minute to play out. And then once it started showing me exactly what I wanted to see, I entered. And if I go back to the 15, you can see it's almost in line with where this candle had closed, this 15 minute had closed. But I didn't take it at that specific point, but that's only on the 15 minute. If this was a 5 minute rally-based rally or drop-based drop, I would get in blindly. Like no worries, no concerns whatsoever.
That's crazy.
I know it sounds weird, but like...
But I know what you mean as well, because I will get on a pullback to a fair value gap, I will get in, and a lot of people say it's crazy. I've seen it happen so many times. I just get in. Because do you trade the same as Will, do you, Rich? Or similar?
Yeah, like similar. There's a lot of similarities between our trading style. Where Will is way more breakout, retest, and then... So consolidation, breakout, retest, and continuation. He would generally do a trade on the breakout or a trade on the breakout and a trade on the retest, or he would just do the breakout, as an example.
Yeah, okay.
But he also waits for a little bit of a trending structure to take place first. Like, I mean, on EU, just on the 15 minute, this whole section here, you can basically say is consolidation.
Yeah.
I mean, if you go down to the 5 minute, it makes more sense because you're having equal highs and basically this doesn't really matter. This is just a wick underneath and then it immediately pushes back in. But the moment you have the break here, price then eventually came back to it, wicks into it, and then continue. So this is effectively a break and retest trade that I'm taking currently, but it aligns 100% with the drop-based drop, rally-based rally idea.
Guys, I gotta jump off. Thank you, Richard, for covering me. I'll jump off, and I gotta work on my accounting stuff to applying for this loan to get that heater fixed. I need to get that done today because I'm freezing here.
Are you guys going into your winter now?
Yes, unfortunately, yeah.
Well, no problem. Anytime. Happy to cover for somebody. No problem. Anytime.
Awesome. See you guys tomorrow.
Bye, John. Bye.
Cheers, Jonatan.
Give me 2 secs, Rich. 2 seconds. I'm just going to disable this camera sec.
No problem. I can't pull up everybody's chat things just yet. I don't have access to that, but I will just... oh yeah, there's a good one. I watch every candle close from 1 minute to 4 hour. It is telling you what it intends to do on each close. Now, here's an interesting thing. So you can probably see here at the top of my trend, of the top of my trading view, I do the daily 4 hour, 1 hour, 15.5, and then the 1 minute is here, not because I trade the 1 minute or that I look at the 1 minute. It's because when on Fridays, when Will and I have our trading competitions on our stream, that's usually where we're going to be trading, because you only have the hour to an hour and a half. So then we look at the 1 minute. But generally, I will start the day by having a look at the daily, and I look at the daily once. That's all I do. I just look for it once, and I look for support and resistance areas as an example, just a place where price had reacted from and reacted strongly from it, or let's say the reaction from that area broke a new or created a new high or a new low. And that's all I'm looking for. I just want to have a look and to see whether or not we're trading outside that area or close to that area, just so that I know like what is the potential likely movement should price get to that point again. That's all I use the daily for. The 4 hourly, I look for the same idea as here's a strong candle, but it's followed up by a bearish candle. 3 bull candles, 1 bearish, 3 bull candles. So I know that this bearish candle that's here was a decision point in my opinion. It's a decision point. It's somewhere where the bears attempted across this time frame, across the 4 hours, to try and break this upward movement. So the bears are trying to break the trend, try and force it back lower. Bulls take over. Same thing here. Bears attempt to break the bullish structure, fails, and it pushes higher. So that's all I'm looking for. I'm looking for just areas where potentially there was some interest by the bulls or the bears. And it's very quick. I can look at the chart and I can say, oh, okay, cool. Here's an area. I would not generally mark up the 4 hourly as an example, but I will just take note of it. I will start marking up my chart from the hourly as an example. So the hourly would have rally-based rallies and drop-based drops within it. So here we have a drop that initiated. We had a bullish structure over last week. This was Friday. So the whole of last week was bullish on EU. On Friday, we attempted to make a new high. It failed. This candle on the start of London was supposed to push higher if we were going to continue the bullish structure on EU. But it didn't. It was followed up by a bearish candle, a large one at that. And then the very next opportunity that the bulls had to try and push it higher, they failed yet again. So this area to me is a potential bearish base where if we do reach this point again, price were to, for argument's sake, make its way up back to this point, it could either have the exact same reaction where it just plummets back lower like it did on Friday, or it's going to break through to try and test the higher points of last week Friday as an example. And it just gives me a very quick overview of what I could expect should price come to this point. And then I do that on the hourly and on the 15 minute. And then generally I will take my trades on either the 15 or on the 5. Simple, straightforward. yeah, just simple, just uncomplicated trading, I would say.
TP's
But yeah,
there.
I love the idea of starting at a higher time frame and working your way lower. What are the levels of support and resistance on GU? Very interesting. So on GU, let's focus GU specifically. I only have the one here at the moment, a support level. If I were to drag this all the way back, we will see that price has reacted in this area multiple times. So a support and resistance area to me is an area where there was a reaction from at the specific point. In this case, we had price trailed into this area over here. It had a reaction. It tried to push lower. It failed. It came into it. It consolidated a little bit into it. Then it started pushing back up off of it. It came back down. It just missed it. Started making higher highs, higher lows, higher highs. And then eventually it came back to it, tipped into it, has a reaction off of it. And then now we're back towards it. So a support and a resistance point on GU for me is this specific area where we are now, where I attempted to have my previous trade this morning, which ultimately just wicked into it and it didn't have the depth to push lower. So that is generally how I see the support at this point is just this area right here. That's on the lower end. So, and then on the upper end, we don't really have much above this point. I have to go further back to go and find a real resistance point on the upside. But what I would generally look for is I would try and see, okay, in this case, it seems as though this area over here has had multiple reactions on Tokyo. If I then pull it back and try and see, okay, it doesn't really give me the biggest confidence that this is a very strong resistance point. It is the most near-sighted resistance point. Let's rather say the most recent resistance point. So to me, maybe from here-ish. Yeah, somewhere from here, this would be the resistance point right now. And then you also get lower time frame resistance points as well. I don't know, Derry, if you generally look at support and resistances all that much.
No, I don't. I look at them. I do look at them, but more for liquidity points.
Yes.
Yeah. So yeah, that's what I use them for.
Yeah. So the general idea would be if your resistance point here at the bottom of your trade, the double line that you drew at 16,444 and 16,431.
Yeah.
Technically, that is a support point for you right now.
Yeah.
Because there was a reaction.
Yeah, exactly.
So it's the same idea.
Yeah, and that's exactly what I was saying there. Someone just mentioned there when you're breaking down, is accumulation support? Yeah, of course it can be. It depends on where you look at it.
Yes.
It's exactly the same concept with most of what you're looking at. Is if you've got accumulation, for example, like an accumulation, you've got a support and a resistance in there. So if you look at accumulation like this, you'll have obviously your resistance at this area, your support at this area. So yeah, it's exactly the same concept. No matter what way you word it, essentially it's the same thing. Obviously, I wouldn't trade in accumulation, but some people do trade it. Short from the highs and long from the lows. Gold, please, brother. Gold. I don't trade gold, but we'll have a look. From a daily
gold is one of those things at the moment where I don't normally trade gold, and I wouldn't trade gold right now, at least.
I'd stay away from it completely. We have had a correction, but is it pushing, or is it gonna start selling off? I don't know. I'll be honest, that's the answer for that. I have no idea, Rich.
Go over to the daily time frame. All right, let's just start on the daily time frame on gold. Now, gold over the last month, and I've said this a few times in my streams as well. Gold over the last month has been incredibly bullish. And when it does have, let's say, 3 to 4 days of bullishness, there is usually a very, very small retracement, and it's usually 1 to 2 days. There was a day in earlier in the month where we had multiple days of a little bit of inconsistency. So the 9th, the 10th, the 11th and the 12th of September. So not this month, last month, September, we had a little bit of indecision, but it was just after we had reached a new high. And then from there on, every few days, every 3 to 4 days, we have a retracement day, a whole day where we're completely bearish. Now, we had a bearish day last week, Friday. And today, we're bullish yet again. From where we were to where we are now, it's still bullish. I mean, it hasn't confirmed that it's a bullish day as yet. But the size of that bearish candle, the daily candle, is the largest we've seen.
Yeah.
It's the largest one we've seen in quite a while, since we've gone into this bullish trend, basically, over the last 2 months. So every few days we have a bit of a pullback, we have a bearish day, it's become slightly larger. The last 3 bearish days have become significantly larger. So to me, the pattern is showing that if we're going to start having bearish pullbacks, it's going to be slightly larger. And then if it's slightly larger, there's also the potential for it to be multiple days in a row. So I'm still bullish because structure has not broken, in my opinion, yet.
No.
However, where's the upside? The only thing I can aim for is or last week Friday's high point.
High, yeah.
And we're smack bang in the middle of the candle, and it's just I have zero interest right now to try and catch the high of gold.
No. Suicide if you are.
I mean, let's assume that today ends bullish, but still lower than last week Friday. Then it's not weird, because every time we've had a day like that, the following bullish day did not close above the previous bearish day's high point. So it would not be an anomaly for me. It would be as expected. I'm just careful now because I know with the size of this candle and the more volatility, the more volume, the larger the reaction is going to become. And I don't want to be on the wrong side of that, because if it's going to move strongly. Are we going to lose $100 on the price from 4,300 to 4,200? Is it going to drop even lower to 4,400? From 4,400 down to 4,000 as an example? I don't want to be on the wrong side of that.
You're right as well, though. You know, with every couple of days you get that pullback, then the bullish candle closes below the last bearish candle, but also the pullbacks seem to be getting larger, but so do the expansions.
Exactly. So there's more volume. There's way more momentum. So if it starts moving, it moves volumetrically more. But when it pulls back, it's also volumetrically pulling back more.
Yeah.
In relation, this is all relative. This is all relative to how it's been running recently. That's why I'm saying that whenever we do, like your mouse was just over a section there that looks very similar to where we are now.
Yeah, it's exactly almost identical.
Yes, but this is on the 4-hourly chart.
Yeah.
Yeah. But there we didn't have consecutive 4-hourly bearish candles.
No.
So massive bearish candle, a few bullish candles, another bearish one, a little bit of indecision. First day we've had more than 1, 2, 3. We're on our third.
Yeah.
And then we're starting taking it back. So to me, how volatile it's going to start becoming is the thing that it's going to give me caution. I don't like massively volatile markets. It's one of the reasons why I don't trade Bitcoin as an example, because the movements are just so all over the place. Sorry, my cat is
I can hear it.
very, very vocal. Hey, you want to sit on my lap? Come here. Come. Jump.
Is it a cat or is it a lion out with you?
It is. It's a fat one. She's a big girl. Here we go. She's a big calico kitty cat.
Calico kitty.
Yeah.
Is that a South African breed or is that like a worldwide thing?
I think it's a worldwide thing. She has orange, black, white mixed, so that it's known as the calico colors.
Okay. We'll keep saying gold. Inside bar. Could see breakout again tomorrow. Yeah, I think I'm going to get stopped at break even on this EU trade as well. I'm at break even, so. But.
It's EU pulling back.
Yeah.
I'm still about two pips in profit on it, but yeah, the reaction isn't great. Yeah. Oh, I wanted to ask you, Derry. So you trade pure price action. Do you use any indicators?
Nothing at all.
So no EAs, no nothing like that.
I don't even know how to bring up an indicator. That's how little I use them.
You do know that there's that big thing up there that says indicators.
No, sometimes I'll use market sessions by Lux Algo just to see Asia high, Asia low, London high, London low. Rather than that, no.
Oh, I just use the Lux Algo sessions indicator for the sessions, and then I have an EA and a MACD. That's it. Yeah. That's the indicators that I normally use.
Yeah. Okay. Yeah, I've never really looked into them. Even when I first started trading, I didn't use too many indicators. The only other one I did use at one point was the RSI. And it was when I first started, when I was trading trend lines and things. But even early on, I didn't use indicators. I like a clean chart. I just find I can read things easier.
It's less distractions.
Yeah, 100%.
Yeah, I enjoy a nice clean chart, but my strategy doesn't rely on the indicators specifically.
Yeah.
What I generally use them for is literally that very quick. Okay, this is London. This is Tokyo. Do I want to draw the line for Tokyo? Just like I would quickly then just be like, okay, cool, it's there. There's the line for Tokyo. That's Tokyo bottom. It speeds up the processing. Yeah, the processing part of the analysis.
Yeah.
First of all, and secondly, I know if I can make it as simple as I can by removing as many of the mental processes that I need in order to do my analysis. If I can just dumb that down to the point where it's just have a look. Okay, cool. This is what I'm seeing. Done. Mark. Enter my trade. That kind of like thing.
Yeah, 100%.
Actually, that EU trade does not look bad, mate.
No, it doesn't. It's just had that retrace one, and now it's just manipulated internal as well on 1 minute. So hopefully,
yeah.
5 minute looks nice as well.
Even on the 5 minute, like I have two EMAs here. It's a 20 and a 10 EMA, and it's just very quick for me to see whether or not have we swung over to a now more bullish trend or to now a more bearish trend. Obviously, the price action is going to be king in this case.
Yeah, sure.
So you can obviously still see that we are like potentially something in that regard. But the point just being that nothing has changed, nothing is broken, and I can just visually see, okay, cool, we're still respecting the EMA, so we're potentially still bearish in this case.
Yeah, 100%. I still like it now. We've had that reaction now. I do still like it. And again, like you said, from a 5 minute perspective, it's still bearish.
Yeah. I mean, back to 5 pips. On the 15, it's still bearish.
Yeah. Sure.
I don't expect us to really break through this 116,431 point just yet.
No. I've got I think that one, the 444, I think that's where it's going to draw to first, and then I'll look at it from there.
Mm-hmm.
That's where you've got your TP as well, Rich. Yeah, 444.
Yeah. Mine is my TP is on 16,444.
Yeah, yes. Well, I've got marked at the bottom.
Because my entry. No, hold on a second. That's not where my entry is. Oh, it's locked. My entry was 38.
Okay.
Yeah, 38. So my TP, I was about to say, my TP didn't look like it was at the right spot. Yours is 444, I think.
Yeah, mine is 444, yeah.
Yeah, I think I moved mine when I was trying to explain my entry. Yeah. I think I accidentally moved it. I had a problem with my mouse the whole of last week where it kept double clicking.
Do you know, this mouse I bought, it's like a gaming mouse. I bought it, and the one setting is way too fast, and I turn it down one, and that's way too slow. So I'm like really struggling to get used to it.
So it's the DPI setting here, mine. So this is a Logitech.
Yes, it's similar to what I've got. I've got this one.
Oh, okay, yeah. You've got the Hero.
Yeah.
Yeah, my brother's got that one. So this DPI setting that you have, you have a program that you change the DPI on.
But the one setting is too much, and then you go one down, it's too little.
You've got a slider on the program that you can drag.
On the Logitech app, you mean? On that?
Yeah.
I'll have a look at that.
Just have a look at that, because I used to have the same problem. But anyway, so it was double clicking a lot. So I've been really struggling by doing my drawings and all of that stuff. Like I'll try and drag it, and then as I'm picking it, I'm like doing, okay, no, that's not it. Try again, and then come on. And then sometimes I start dragging, and then it just places itself. It was so annoying. Okay, Kelly, where do you want to be? What are you doing? Idiot cat. Oh man, you're such an idiot. Yeah, Callie. Imaginative name, huh? Calico. And then her name is Callie. Gold is reacting off of a 15-minute bearish base right now. It's still bullish, but it's not particularly strongly bullish. No, that's 5 minutes. 15. Yeah, 15-minute reaction. Potentially a bit of a retracement. So depending on how it reacts, this could be potentially what we can see happening. Or alternatively, we are going to potentially see it pull back a little bit and then start looking to aim for the higher, the previous day highs. But like I said, gold to me right now is just, I'm not too keen on it. You trade fair value gaps as well, correct? In balances.
Yes.
Okay.
Yeah.
So correct me if I'm wrong. Is this technically a fair value gap?
Yes.
Oh, okay. All right.
Yeah, I can see instantly watching from what you've done there. You're on about the base, or what you call the base. I can see as soon as you said it was on my chart. I can see that on gold. Instantly could see it.
Is it?
Yeah. You're on about that candle there, the bullish candle, yeah?
Yeah.
That's the one you're talking about. It's reacting from that area.
Okay. Yeah.
Yeah.
So it's that reaction here.
Yeah. Yeah. It's like an order block, isn't it? Exactly, pretty much exactly the same thing.
Yeah, but like you mentioned, it's like it's you and another person have exactly the same strategy, but like completely different terminology for for what it is that you see. Yeah,
exactly. Yeah.
That's why when I was talking to Victor, and now you've traded with Victor a fair few times. I've only been on stream with Victor, I think, twice, and both times he was like, "Listen," he looked at it and he was like, "This is so similar to what he calls an order block." I was like, "Okay, tell me more." And then, it's funny when you see stuff like that, and then you're like, okay, I get it. Because for me, it's about personifying it. It's just like it's making or taking something and making it your own.
Yours, yeah, 100%.
But at the same time, it's also what you use to make it make sense for yourself.
Yeah.
So
that's the biggest thing, is making it make sense. That's it. It can be literally, you could name it your own terminology just to make it make sense to you.
Exactly. Yeah, exactly. Pooley, good afternoon. Rich and Derry are both keeping well. Pooley, we are always great, mate. Always.
Good, mate, good.
Immortal 000 asked for pound CAD. What do we want to see on pound CAD? Let's start on the daily. Okay, we are doing a little bit of a bullish channel. Okay, so we are bullish. Is this all-time highs? Because I don't trade G. No, it is not. I don't trade GCAD. Okay, so what I can immediately see on the daily is this was a decision point area over here, so I might have to come and have a look in the 4-hourly on it. 4-hourly, it's exactly a base, a double base. Do we have an area of resistance? Right now? Yes, we are at literally in an area of support at the moment. On the hourly, from this area we broke 1, 2, 3, 4. So here is an hourly base, and then this one here is an hourly base as well, which is also a very nice point where we're reacting right now, where we're currently stuck at. Just going to move this out of the way a little bit. Okay, just to clean it up. Then we started pushing higher. We had a attempt to push lower here, which then failed. We'll just take the body alone, just dragging it through to see if there was any reaction from it. Okay, yes, there was a reaction there. Okay. Close that one out, and then made the high and then failed to push up again, the same as over here. So this area here would be, because it's such a small body on the hourly, you may as well just take the full candle on the hourly as a reaction. So price dropped lower. When it had the attempt to push higher, it failed. Started pushing lower yet again. Another attempt to push higher, pushed lower into this base down here where we already had a previous reaction from. It just pushed out of it, came back to this base, attempted yet again to push lower on the bullish base, failed, came back into it, and now having a much stronger reaction off of it, but also a higher point. So what I can see is that on pound CAD, even though we are bullish over the day, we are stuck between these 2 points right now. Bit of indecision from Friday. So what I would like to see is I would want to see price come back to this area over here, take up whatever liquidity is underneath, potentially push lower into this base, and then react off of it, either bullishly or bearishly. It doesn't matter. Because I'm someone, I trade what I see. So I don't care where I assume it's going to go. If it breaks bullish, I will try and get a bullish entry. If it breaks bearish, I will try and get a bearish reaction off of it. What I can see is that the most recent structure is we do have all of this down here that needs to be taken up. Because on the 4-hourly, that was the most recent point where a lot of sellers came into play, really trying to push the price down. So all of this here to me is something that needs to be taken up, needs to be tested. There could be some traders sitting here. I don't know. But they could. So right now I'm looking at the idea of it potentially pushing through the base. That is, why am I using that tool? That's not the tool I'm looking for. Pushing into this base area and then failing to go higher, pushing into the lower base, this one over here, then coming back to test that base and then pushing lower. That's what I would be looking for on GCAD as of right now from what I'm seeing, even though we are bullish on the day. I don't know what you see, Derry.
You know, I think what they were referring to, Rich, didn't want to stop you, was Jonatan was looking at longs.
Is Jonatan looking at long?
he was looking at longs. I can't remember where. So you've just absolutely torn his analysis to pieces because you wanted to come deeper.
I mean, I can see the potential for longs, but like if I just took this as an example, I know it's not perfectly lined up or whatnot. To me, it seems as though there's still quite a bit for it to come and test before it goes long. I don't know if that makes sense. So we are trending upwards on GCAD, but I think that we still have quite a bit of real estate. There's a good word. There's quite a bit of real estate down here that I feel like it needs to come and test before it's going to react and push up. Like if I just go on the idea of us trading in a channel, let's just take the upper ends of the channel as the example, and then we'll mark the lower end. We're currently in this upper portion of the channel, and we have not reacted so strongly when we were in this upper portions of the channel. So potentially we want to come and test either this 75% or the 0% in this case, because the green line and the red line is just 25 and 75%. But there's so much down here that I feel like still needs to be tested before we're going to carry on with longs. So short-term bias, sells. Long-term bias, bullish.
Yeah.
So I agree with his idea, because I mean I trade much shorter time frames than he does.
Yeah.
So,
yeah.
But as of right now, I'm seeing the idea of shorts.
I can't remember what John was actually looking at or where from. I can't remember.
You know what? I think he is probably looking at something like this.
Yeah, I think it was.
To long from.
Yeah, I think it was. And then he got a break above, and then he was looking to long from there. Yeah, on the hour, that's it there.
The only issue that I have with this is you've already... Okay, this is on TradingView, no mind. So take that into consideration with the likelihood of the actual wicks and where they're, playing out. You've had 1, 2, 3 tests where it didn't break lower than the box, and you've already had 2 areas where it's wicked below it, and the reaction was not crazy. It wasn't, like trying to push for new highs. So if it is going to start reacting, I feel like it might need to dip a little bit deeper to potentially get enough buying volume into it, or eat up enough liquidity for it to really push up higher. That's why I'm saying I think more for the ideas of sells. I mean, there's a little area over here. This is on the hourly. What does it look like on the 15? Yeah, there's a little area over here that had a bit of consolidation. So that might be an area where it can test, or potentially over here. But this is actually more bullish than it is consolidative. Especially if you go down to the lower time frame, it will probably look more bullish. So yeah, potentially something like this. Push down into this and then react to go higher, But then again, I'm not a higher time frame trader, so I don't really care if it is going to be bullish or bearish. I'm just going to trade what I see.
Yeah, sure.
Mark Cox is saying 10 years ago, order blocks were not heard of. I think ICT chap started most of this lingo. Potential inverse head and shoulders on the 4 hours DXY. If it breaks and closes above 98676. So DXY. You said 4 hourly, huh? 4 hourly head and shoulders. Yeah. But okay, so we still have this gap over here. I don't know if it is on MetaTrader as well, but we still have that gap. But from there, something, I don't know if that is really a head and shoulders, because it's like a decapitated head. It's like a, I don't know, it's like a French monarch head and shoulders, like a Marie Antoinette of some sort. That's just from there, unless it is something more in this line here. No, but still, I don't really see. But then again, I don't trade that kind of like stuff, so I don't know.
Yeah, it's hard when you don't trade it.
Yeah, maybe you should take this one, Derry, because I don't know. I see a head and shoulders, but to me it looks more like an M.
The only head and shoulders I can see, Rich, is yours in front of me.
That's what I'm saying. Like, to me, it looks more like an M. You know, like a Mario and Wario.
Oh yeah, I'm the same. I don't head and shoulders, and I can't see it there either. That looks like what Vic would call a quasi.
Yeah, where the one shoulder is like up. Yeah. And the head is lower than the shoulder, kind of like thing.
Exactly that.
Yeah, that's why I was like referring it to now as like if this is the shoulder and that is the head, well, where the head was supposed to be, something like this.
Yeah.
If I just moved this out of the way, it does look like this could be a shoulder, and then the decapitated.
Yeah.
You know, imagine if all of this is just, and then the head. No, I don't, unless I'm not seeing it. Inverse head and shoulders. He's saying inverse head and shoulders. 16th of October is the left shoulder head. Okay, so 16th of October is here. So that, and then lower.
Right.
Okay, all right, yeah, so it's here. So is this the head? This portion over here? Right there, yeah, okay. So then the idea is then from here, you would push lower and then start going up. Okay. All right, so you're looking for buys then, I'm assuming, Mark. Because I mean, the idea of a head and shoulder is that the reaction is going to be opposite to the shoulder or opposite to the head, I'm assuming, or is it in line with the head? You look as confused as I am.
I'm not saying anything, because if I say it's supposed to be long and shorts on EU,
shorts on euro dollar. So you're expecting the DXY to go up.
Yeah.
All right. Okay. So then it's in line with it. So you're expecting it to carry on going upward.
Yeah, your trade should be at TP now, no?
I haven't even checked it. No, not yet.
Maybe.
No, not yet. But close, very close.
Yeah.
Because I have the StreamYard, or not StreamYard, EVMAX up over here, and I have to minimize this in order to see my terminal. DXI will rally if it breaks and close above 98676. Okay, fair enough. On a higher convincing move, for example, 4 hourly. Okay, fair. Like, Mark, so normally I don't trade any of those kind of like concepts, and it's not something that I'm very well versed in. Like, for argument's sake, user OzW Yuki Yunogasai is saying, I don't believe in patterns, only volumes I use. I do believe in patterns, but it's more the idea of pattern recognition and history kind of like repeating itself. So the idea of volume, yes, I believe in volume. And I also believe in breaking of patterns, let's rather say. So how's your trade? Your trade is also similar to mine, Derry. So yours is also like, have you moved your stop loss lower?
I just moved it to break even.
All right.
Yeah. It's like 2.6 pips away from TP.
So...
yeah, 2.5 pips away.
So you don't use the swing points as your like stop loss point?
No. Only until I get, like, I'm at break even now. Only until I get a break even. And the reason for it is because if I did that, then it's some manipulation in, especially when trading the 1 minute, which I always trade the 1 minute. Like if I put it at this swing high, for example, this high here, I'd have been stopped. So I don't do it for
that. If you use a slightly higher time frame, like the 5 or the 15, to look for other swing points, as an example?
No.
Okay.
No. Yeah.
So you stick on the 1 minute.
Yeah. Exactly. Yeah.
Is the 1 minute your entry criteria as well?
Yeah. Every trade I place is from the 1 minute. Yeah. Like this is a great example. Like I knew this inefficiency was here, so until we had a manipulation of a high and then continued pushing to the downside, I wasn't comfortable moving my stop to here until we sort of had more structure formed, and then I could have got a break even. Like I went to break even at this point here because I knew then this high had already been manipulated. The next sort of high on the 1 minute is here. So if that got manipulated, I was still clear with this high. And then as soon as I get a break even, I just leave it. Usually if there's structure points in this area, like if we had a structure point here, I would 80% it if it's over 2R, and then I'd leave 20% run then to the actual, what I'd call drawn liquidity. But in this example here, it's just a impulsive move to the upside with no actual structure point. So for me, this is the only place I'd be targeting.
Fair. That makes sense. Mark saying, I believe in having as many strings in my bow as possible. When they all align, it's a go. Yeah, like whatever works for you. Like if it makes sense to you, and if everything aligns, by all means. Like I think the concept of trying to overcomplicate trading, I think, is something that a lot of people fall into, that trap, where you think because trading is overcomplicated that the trade itself must be complicated as well. Where I feel like trading is complicated enough, simplify it as much as you can. So I just focus on what I can simplify. But the more arrows you have to play with, by all means. Like if it works for you, it works for you.
100%. I was hoping we would have got a TP on the live, but it doesn't look like it's going to happen, does it?
It would have been fun, right?
Yeah, it would have.
So I see that we have a double bottom there on the 1 minute, unfortunately. But it's still not reacting the way that I would have wanted. But this is the 1 minute. I don't trade the 1 minute. Like even on the 5 minute, it's looking a little slowed. Yeah. But on the 15, it still looks fine enough. Yeah. We have 1 minute and 30 before the candle closes.
I agree.
It could turn from this point. I mean, have a slight pullback, but I trade set and forget effectively. So
yeah, exactly.
I enter, and if it hits my stop loss, it hits my stop loss.
Exactly the same. And when I'm at break even, I just leave it then. Apart from obviously pulling partials, but I just leave it. It's either stop loss or take profit.
So do you take partials on profits, or do you take partials on a drawdown?
On profits, yeah. Yeah.
Okay. Because I used to try and take partials on profits, and until I watched Sol do one of his seminars where he spoke about taking partials on drawdown, not on profit. So
wow.
Just to give you an example, if he were to be in this trade that we had now, and the trade started going against him, so just above the 16517 line of yours. That little section there where price was just wicking above that. Let's say that he entered at 16517 as an example.
Yeah.
And it started pushing lower. Instead of taking partial profit, it started coming back into his drawdown. He would reduce half of his risk as an example, take it off, and then it will start moving back in his direction. And as it's moving back in his direction, he will re-add that portion that he removed. So he'll still take his full profit, but he would not get a full loss if it were to go in his against them, as an example.
That's
so let's say he just so let's say he decides to take 25% of his trade off while he's in drawdown. Let's say it was one lot and it was 10 pip stop loss, and he took it off at 2.5. So he took $25 in loss right there and then. But then if the next portion of his trade is half a lot. So it's half a lot that he removed on 2.5 pips. So it's $12.50 loss. And then as it's moving into his towards his stop loss, it is the full portion of half a lot.
That's crazy.
Which is then, instead of $100, it's now $50, and the $50 along with the $25 is $75 loss. He took a potential $100 loss and turned it into a $75 loss.
Yeah,
as an example.
Yeah,
that is so good. Like when I watched that live stream of his when he was talking about that, at least that's how I understood it.
Yeah.
He takes full profits and reduces his risk by reducing his lot size if he's in drawdown, as an example. And I was like, I always did the inverse. I would take full losses and I would take partials on
profits.
But he takes partials on his stop losses and full sends his take profit. It's crazy. It is so good.
That is interesting. I'm going to go and have a look at some stats on that.
Yeah, go and have a look at that live stream of his. It was very informative, mate. Very.
That's crazy. It's mind-boggling to get your head around it.
Because he re-enters. He replaces the trade, but just at a better point, as an example, or once he gets the confirmation that it is indeed now going in his direction.
Yeah, that's clever.
Yeah, I like that, because then he effectively takes it and keeps it to he keeps his losses minimal, and his profits maximum.
Yeah, that's crazy.
And I don't know anybody that does that.
No, I don't either. That's the first time I've ever heard of that. Ever.
But I could be talking under correction. That's how I understood it. Unless I grossly misunderstood what he meant with the explanation.
Yeah.
But that's how I saw it, or that's how I understood it. And it just blew my mind.
I'll have to have a look at that live.
That's crazy. It's crazy, mate.
Okay.
Okay, so our trade is pulling back ever so slightly. But it doesn't look bad.
No. I'm holding it till TP or break even.
But yeah. Did you okay? So you trade every single day. Like, do you have a? How can I state this? How do you curb over trading? Do you have a set rule for the amount of trades that you are allowed to take a day, or do you generally just take whatever arrives, and then if it's a loss, it's a loss? So what?
Maximum 2 trades a day. Maximum. If I take a loss in the morning, then I can trade again. If I take a win in the morning, that's it. I'm done. So
2 trades max.
Yeah, max.
So I have a best of 3 strategy. So I'm allowed maximum 3 trades a day. Whichever comes first, 2 wins, 2 losses. Whichever comes first.
Yeah, okay. Interesting. Best of 3. I like that.
Yeah, that was my moniker on the LLTF, was best of 3 is me. because that's how I curbed over trading. Like if I had 2 losses, then I would be like, oh no, I can try and take another trade because I don't want to end the day on a loss. So just said nope. Whichever comes first.
Yeah, 100%. That's good. I like that.
Kavika is saying EUR NZD looks good for a longs look like a good setup. Man, my brain didn't want to.
Euro NZD. Never even looked at that ever.
Yeah, this is also probably going to be my very first time.
So all-time highs, is it? Yeah. Oh no, it's not. What are you actually looking at on Euro NZD longs in regards to, because for me at the minute, if you're probably supplying demand trading you from this area is the only thing I could possibly see, because for me we're expecting bearish order flow even from 4 hour. The only time frame 4 hour as well, bullish until we get a break of this low for me, and then from a 1 hour perspective we are respecting. We had the shift in momentum, the other market structure shift, we came back, and we're just respecting from that area, respecting bearish order flow. So if this area holds, yeah, potentially you could look for long. If you are trading sort of a supply and demand strategy, that's what I can see, or again a support and resistance trade from this area. But I'd be waiting personally just to see if we get a run of this, push deep, and then maybe look long after we swept the liquidity. But this is stacked for me. Yes, it's a support area. Yes, there's an area there, but are we going to want to take this liquidity first and then go? But again, I don't know what strategy you're trading. But for me, yeah, I'd like to see everything I do. I like to see liquidity get taken first, and then I look for reversals from that area. But if that's a strategy, trade it. Stick to your plan.
Yeah, I think that is the best advice that anybody can take from anybody. Is just stick to your plan.
Yeah. Don't listen
That's
to
the
what
thing
anyone
that
else
you
says.
have control over. You have control over sticking to your plan. You don't have any control over what the market's going to do.
No.
So just take control of what it is that you can control.
Yeah, exactly.
You'll like from a mental point of view, let's rather say, it's very freeing knowing that regardless of what I could have done, market was going to do whatever it wanted to do regardless.
Yeah.
So I'm just going to do what I can do, and that is stick to my plan. The result is going to be the result.
Exactly.
Simple.
Right, guys, I am going to shoot this 3:10.
What time does the stream end?
3, I believe.
Oh, are we going over? Oh, mate.
Yeah.
Well, in that case, I think if nobody is coming in to send us off, I guess Derry and I will have to do the send off.
Yeah. The send off is, I will see you tomorrow.
All right, guys, I'll do that. All right, guys, thank you very much for joining us on the late section of the Fiverr stream, guys. Everybody have a lovely day. Hope everybody enjoyed the content. If you can, drop us a like. Come back again tomorrow, same time tomorrow. We're gonna have another lovely stream. Everybody have a great day, and then we'll just send it off to the end.
Catch you tomorrow.
Yeah, we'll see everybody tomorrow. All right, guys.